Sorry, Jeff, you're live. I muted my mic.
All right, no problem. Good morning, everybody. It's good to see you. Sorry we're starting 2 minutes late. You know, it happens. It's good to see you. Thanks for coming for day two. Like I said, my name is Jeff Gibby. I'm going to go ahead and kick us off. I'm going to kick us off, as is tradition here at MetaStock, with a legal disclaimer. So today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. Hope you enjoyed that. As we get started, I want to thank both of our sponsors, Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a great supporter of the MetaStock conferences and the summits that we do. And they're a great magazine too. You can find out more about them at traders.com. In addition to that, I want to invite everybody to join the Traders Forum. It won't cost you anything. You can. We talk about indicators, and we have guests on, and we have a little market chats. It's designed to be a community of traders helping traders. It's a growing community, and we'd like you to join it. So come to the tradersforum.com and do that. We are, of course, MetaStock. We're going to be talking about MetaStock in detail today. Just to kind of give you a little bit of a brief background, MetaStock has been rated the #1 software in its price category for 32 years in a row. It helps you scan the markets, test ideas, forecast trading ideas, all kinds of really good stuff. And we'll be talking more in detail about it. We are going to do an extended trial offer where if you buy a month, we'll give you the second and third month for free. And that brings your cost to try it out to about $25 a month. So we'll talk more about that. What I want to really do right now is actually get to our first speaker. You can see her. Martha Stokes is joining us today. Martha's a big friend of MetaStock. I've been to the TechnoTrader Studios or campus, or I don't know. What do you want to call it, Martha?
It's a campus. It's a study campus. So yeah, it's a campus. Yeah.
Martha is great. She's very thorough. She's very clear when she kind of talks about trading. She's got a lot of insight into dark pools. She's really done a lot of really good design work into kind of designing some of her own custom indicators. She has a company called technotrader.com, which has a sterling reputation. And I will add, because I'm always going to, she makes one of the best salmons I've ever had. So without further ado, Martha, let's go ahead and get you started.
Okay. I want to make sure that I'm sharing the proper screen.
Yeah, I will stay here until we are.
Okay, so this is screen 2. I'm going to share it. Okay, can we see it, everyone?
Perfect. First time.
All righty. Oh, I'm very excited about this. I had some interesting things happen in the last couple of weeks, and I think I can really help a lot of people get a better understanding of where we are and where we're going. We're a financial-based economy, and knowing more about how to trade stocks and everything is an imperative for everyone. Reading the market's footprints, how dark pools and HFTs leave clues on the charts is the theme for today. As always, we're just an educational company. I'm not a financial planner. I'm not a financial advisor. I'm a chartered market technician. These are my credentials, and today we're going to be talking about how to use relational technical analysis. Everything you have learned thus far is useful, but I want to take you to the next level. I want to raise your expectations about what you can make in the market. My students are doing awesome this year. And then I go and I visit some other people, and I'm having groups, and they're telling me they're struggling, and it's going, how can you be struggling? Everything is wonderful. We have a great bonus for the attendees today, so stay with me until I can get through to the end of that. So the skills of trading. We all have tools in everyday life. We have tools in our career. We have tools that we use at home. We have special tools. And the more you know how to use those tools, makes you better if you're really skilled at using your tools. And MetaStock has tons of tools. I mean, they have our tools and lots of other people's tools. But I'm finding out that as I go to reach out to people directly and specifically, that you're not using those tools to the maximum level. There's something called spatial pattern recognition skills to use tools properly. It is something human, and an AI can't do this. Okay, so if you tried AI, most of everyone has, and it's like, okay, that's an AI, that's a new technology that is totally not and I can assure you that the professional sides, the buy-side institutions, the sell-side institutions, professional traders do not use AI at all except for routing and staging. They don't use it to find stocks to trade. So reading a stock chart and understanding who is in control of price is absolutely necessary. It's not Main Street versus Wall Street, guys. Throw that out the window. There are 12 different market participant groups, and at any time, you're either trading with them or you're trading against them. And most of the time, you're trading against the big guns who have all the money. Okay, so today we're really going to look at some charts. It's nothing but charts today. How price will move up or down based on who is in control of price at that moment in time for swing or position trading or any other trading styles that you have. Swing trading, position trading, day trading are styles. They're not strategies. They're styles. You apply strategies to your style. Recognizing support or resistance levels properly. For each of these different styles, the support and resistance is different. Dark pool percentage of shares held by institutions, write it down. You can get it at NASDAQ. Morningstar has it, and some of the other websites have it. So you want to know, are they accumulating or in rotation mode to lower inventory? It's in the charts. You can see it in your MetaStock charts. Run gain point potential. It's like, come on, guys. You see this little sell short signal or this buy entry signal and you get all excited, but you don't calculate how many points you can make between support and resistance and all the other factors. Risk analysis. Risk analysis is based upon support, resistance, and run gain potential. Interpreting leading indicators correctly. There's shift of sentiment, sell side versus buy side, buying or selling. It's all very different. HFT gaps and runs versus smaller funds managers, VWAP orders. Volume weighted at price accelerates the move. So if small funds managers automated, because they just have it automated, oh, the market's going down, okay, switch to VWAP. The more volume, the faster the market runs down. Flash crash, hello. So you want to learn this stuff. So today we're just going to look at charts. So what do you see in this chart? You're over here and you're looking and you say, oh, it's going down. It's got a couple things. Maybe I should get into this. Oh, and we have lots of small funds dumping NVIDIA. So is it going down? Is it a catastrophe? Is AI bubble real? No, it's not. That's just a fantasy that somebody decided to do to make money off of you, and it was sell side. We have a fundamental level here, and NVIDIA has been holding it extremely well. If you learn to outline your fundamental levels, you will know where they are. Speculation caused this to run up. This is a nudge. This is a group that's moving into it and seeing that the nudge occurred. The nudges are always the professionals nudging the price up, and of course it runs up. They're not driving it up. Smaller funds managers are driving up, and then we have this dicey looking thing happening here because profit taking pro traders are going, okay, we're running into some real extreme angles of ascent. This is an extreme angle of ascent, very extreme, and it can't sustain. Okay, you all love football. We all had Super Bowl, right? If at the end of the game, the guy takes his football and he throws it up into the air, it comes down faster, right? Right? But if the quarterback, and I'm not very good at sports, he takes the football and he takes it and he swings it to arc and he puts a little twist on it, it runs in an arc and then falls. So it's slower to coming down. We have some accumulation and some rotation going on in here. And so it's arcing the situation. And so we have that, and you want to study that. So is this a good sell short? Well, you don't have a lot of, you have support right here. You have support right here. And I can guarantee you that the dark pools who are buying and accumulating are going to be getting into the stock, and they have gray bars. Why are they gray? Why aren't they strong green bars? Because there's only a few of them. There's 20, 25 of them. And then there's some large pension funds also. See all this green quiet accumulation? This isn't quiet accumulation. This is smaller funds driving the price up, and they're driving it up because of the pro traders driving it up. This is the April flash crash last year. NVIDIA barely participated. Nobody was really selling it down because it's such a strong contender. And we have this support level here. The dark pools saw that it was slipping down, and boom, they moved in to buy it up. Then more smaller funds were selling. The world's coming to an end because we have these tariffs coming, and the dark pools pushed it back right up into their buy zone. And then pro traders said, okay, let's have fun. Let's let all the other people push and drive it up. Another little consolidation right here. That's dark pools again, moving it up, and then speculation, moving it up. So is this a good time to sell the stock short? They're selling, they're dumping. So who's going to be buying? Buy-side institutions at bargain prices. Now, NVIDIA has 65% of its shares held by institutions. Morningstar, there's other places to look for it, that you need to pay attention to that. That is lower than it's been. So there's been some rotation, and we can see the rotation in these small candles that form in the middle of the chart. We can also see that it's going to tell us how it's done on 225. Now, recently, there's been tons of flash crashes on stocks, and I'll show you some today, because HFT AI is stupid. And it goes to retail news, and it looks around, and it says, oh, here's a piece of bad news. And it automatically, because HFT is all fully automated, it's all programmed, it automatically gaps it down and runs it down when there's nothing wrong with the earnings report. They were strong and good. So this is blasting, and this is smaller funds, and they're in the stock. You need to pay attention to that. We have a nice, steady, slow volume pattern, which is great. Now we look at the next indicator. I love this indicator. It's hitting the bottom of this chart, and it's telling you that the downside is not going to go down anymore. It's going to go sideways or up. If it has a peak, then it's going to go down. Here's a peak on this white candle. It's saying it's time to get out, or get out the next day. It's a leading indicator, and I made this just for MetaStock. Took a lot of months to make this work for me. So, and we also have it here where it's down at the bottom, so we can see that they're going to start supporting it. It's a very reliable indicator to tell you, okay, the pros nudged here, they're writing it up, they're going to sell the next day. You have one day to get out of the stock, rather than going, oh, maybe it'll go up more, oh, maybe it'll go up more, and you lose, and then all of a sudden crash and burn. You know, what happened? Okay, and we can also see that there's a lower high here, and a lower high here, and a lower high here. So there is some rotation going on in anticipation that HFTs are going to gap this baby down for some particular reason. So that is your area of support. That's fundamental support, folks. That is fundamental support. And that's where the buy zone is, and that's where the fundamentals are. So if it gaps down, it is going to run back up into that. So selling short, you have to be very careful with that. If we look at the weekly charts, we can see that that's a pretty solid consolidation. And we can also see that we have another consolidation here and here. This is a flash crash. And we have support right here that comes across. That's going to be very strong support, and it's going to move back up. We can see these huge spikes in smaller funds activity. Gray bars are the pro traders and the dark pools, and sometimes there's a mix of the two that you have in there, but we can see a slightly declining volume pattern on this because everybody's thinking, what is the HFT going to do this time to pour in NVIDIA? Because it's been, but that's your support level. That's your support level, and that is rock solid. So it's going to take a lot to move it down there. Okay, and if it does go below, it's going to gap back up. So here's poor Microsoft. Microsoft had a great earnings report. Fabulous. Yeah, it did. It had this huge gap down, and now it's here. And it's at the neckline of the flash crash. And this is where that major support came in earlier. So we had a gap up from that flash crash, and you could have participated in that. What you have to do is you have to wait. A flash crash, it was coming down a little bit, but it shouldn't have gone down that far. It should have stopped at the neckline, which is right here. And once all of the sellers are out, it's going to go and return, and then they're going to nudge it, and then it's going to gap up by HFT action. This is HFT action gapping up. And then we have this nice straight run up, angle of ascent's a little steep. This is all smaller funds buying, 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 and then they're selling, selling, selling. They're crazy people. This is kind of a V shape because we had some selling here by the smaller funds, because the smaller funds are not in agreement. And so they had this little V shape here, but it came up. And so now we have an M top. We have two tops. So we know that it's going to start heading down and going down. This is your current level of support. And we had a nudge here that moved it right back up into the support, expecting, because the report was supposed to be good, and it was good. But oh no, HFTAI found something nasty. And so Microsoft has this little problem with something, and they're correcting it very quickly, so it's not going to last very long. And they reported to everybody that they have this bug, and they have the hackers that are potentially coming in, but it's not the end of the world. So do you want to sell this this baby short? It's got a double whammy here. Oh yeah, and we have lots of smaller funds dumping. But you really want to get up against the dark pools who are going to come in here and go, wow, bargain price. Yeah, I'm going to buy this stock. Bad idea. So we look at the charts. Again, the indicators that I have are different. They're leading indicators. And we can see that they're shallower strikes to the downside, which would say dark pools are moving in shallower. But what we really have is a sloping pattern that is showing us that this is the fundamental level. But we have a sliding barometer going down here. Boom, 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 boom. Now it's hit that absolute low. That is telling you that it's going to reverse. Yes, there'll be smaller funds still dumping. But the dark pools will be coming in. And so what you want to do is put this on a watch list if you can afford it. It's pretty pricey. I really would like them to split their stock, but they like to be on the top of the charts in the Dow, and in order to be at the top, the premier level, you have to keep the stock price super high because it's a price weighted index. So, but they should split it, and if they split it, then it's going to go back up. It's also going to go back up to its fundamental level, because the fundamental level is not down here, folks. It is up here in this area. So it's a stock to watch. It's not a stock to sell short because it's got nowhere to go but into a buy zone. Okay, and here's the weekly chart. And again, we had blasting activity with the small funds managers, and they just speculated it up. That's just a severe angle of ascent that goes on with that, and that's your support level, and that is strong support. Look, we got support all along here. We've got support here, and you want to sell this short? That's just asking for somebody that's the professional to take professional groups, buy sides, sell sides, they'll just take you out. Yep, they'll buy to cover. You bet, any day of the week. Okay, we have CHTR, and that is Charter Communications. It has a PSHI that's been going up. It's 74%, which is good. But look at this stock. It's been going down and down and down. It's been on bear business cycle. And where did it gap down? Flash crash. This is a flash crash. HFTs are up here. They have the signal. We really don't know where it's going at this point. That suddenly HFTs gap it down, and then smaller funds sell right into a buy zone. Now, your long-term buy-side institutions are long-term investors, and they're not too worried about getting in and having it immediately go up. They know where the fundamental value is, and the fundamental value is right in this level. That's where it was. But no, the smaller funds start selling on the bounce. So you have to understand this coordination. But the dark pools go, okay, well, they're going to let it go lower, but they slow it down. Who builds the bottoms? The buy-side institutions. Who builds the bottoms? Every time, the buy-side institutions. So when you have a bottom formation beginning to develop, and you can see this activity, you do not want to be selling short. And a lot of retail traders do. A lot of hobby traders do. If you're trading as a business or a student of mine, you're not going to do that. You're going to go, oh, this is a buy zone, and I've got to be careful because it can really mess me up, because the dark pools have trillions of dollars to spend anytime they want. And they're always moving things around. They're always circulating. Is there can I rotate out, slow rotation? Distribution really doesn't exist anymore because they don't have a problem. They have the ETFs and things like that they can back it up with. So they don't have mutual fund demands like they used to, because most people are investing in ETFs or they're investing in single stocks. But there's less of that. I want all my money back from mutual fund holders since 2008. So they're looking at this and they're saying, okay, we're going to slow this down because the fundamentals are way up here, and this is a bargain price. So we're going to keep on buying because it's a bargain price. We're just getting it at a better price than what we got it here. But that's where the fundamental level is. So that's going on, and there's some nudges from the pro traders, but still smaller funds are just dumping this stock. It is hitting its final low, and then it gaps up slightly on HFT volume. Any time you see spiking volume, that's an HFT. It's at market open, and they gap. They're the ones that gap. They're the ones that gap. Hedge funds kind of come along for the ride. How does HFTs gap? How do they do that? Well, they trade on the millisecond, and they get to see all the orders from the retail brokers before the market opens, seconds. They're trading on the millisecond. That's 60,000 transactions per second. That's 320,000 transactions per minute, which is what you're on. Sure, your broker seems to just fill your order instantly, but he's not. Everybody can see it. He's seeing what's going on. He's seeing what you're typing in and everything. And so he's setting up, okay, I'm going to send this to the PFOF, payment for order flow market maker, routing to the market maker number 2 or number 10 or whoever they have. They have lots of ways to route. They don't hold on in inventory anymore. They are not filling your orders with inventory. Why? Because you expect to not pay a penny for trading with your broker. So he's got to find a way to make money, right? He's got to find a way to make money. So what does he do? He sells your orders to the payment for order flow market makers, one of them, and he can route it there in a millisecond. Meanwhile, you're just finishing the order, okay? So there's a lot of things going on, and yes, you are paying something. In a penny spread world, you're paying something. And they make a lot of money on it. So we have a situation here where all of a sudden this stock caught my eye because it has a severe angle of ascent after this. This is all small funds managers buying because some retail news told them that Charter was doing something. It reports on 4/24, so it had a good earnings. It could have been an earnings pop and a run right back up. But it is still below its fundamental values. But what are the dark pools doing? They're letting you run it up. They're letting the small funds managers run it up because of retail news. And they know the retail news is going to do this. So we have this resistance level here, and we have the strong level up to here. So this is a swing trade to the upside in the future. All my students are pretty much hugging bottoms and dark pool buy zones because that's where the money is. So you can see that this is a resistance level that it has to gap over or run over. It could gap up on more good news, or it could run up, move sideways for a while, and then start having swing style and position style entry signals. This downside trend ended here. You don't want to be into this because this is a battle against buy side who have trillions of dollars and smaller funds managers who don't have much of anything at all. Anything under $5 billion is a small funds manager, and they don't know what they're doing. They're mostly just salespeople plucked off the street by Edward Jones and other franchises and said, oh, here, sell this mutual fund, sell this ETF, and that's what they do. And some of them are trying to figure it out. So we have the daily, we have the V bottom here, very deep down, and a nice steady upflow as it's moving sideways. They're accumulating, then there's some more downside, then there's another spike down, they're accumulating, and then they let go of it and let it run. Okay, they let go of it and they let someone else drive it up. Pro traders nudge, and then they just ride it up. They're not driving it up, they're riding the wave up. That's what you need to learn to do. So this is the weekly chart. And that's the end of the downtrend, folks. That's the end of the downtrend. Oh, sure, the sell side small funds are selling like crazy, but they don't know what they're doing. Don't pay any attention to them and stay out of their avenue, because they can do quite a bit of damage to your money. PLTR, my students found this stock a long time ago. It was over a year ago, 1 or 2 years ago, and have been trading it. It's been a beautiful stock. Now, rounding top, rounding top, rounding top, rounding top. Dark pools, when they're slowly rotating out to lower inventory, cause the shape of the pattern to round, because they're slowly bending it with their rotation. They're trying not to. They're trying to get out, and they're not trying to get out of the top. They couldn't care less. They just know that they'd like to get out of this. It's only got 52% PSHI. So half of the trading activity is going to be all very emotional small funds and retail traders, because they own 52%. They only own 52. The dark pools only own 52%, and so the 48% is owned by smaller funds managers and retail traders. It reports on 5/4. It's already had its report. It did not have a gap down, but it does have a very defined top where the dark pools have stopped and are rotating and lowering inventory. It's pretty widespread, but this is a tradable stock at 140. It's pretty average on its price range. But you just see all of this selling now because there's some sort of bad news come out and it's going down. So we have this support level that is pretty sturdy, but we can't see entirely. So we will use a weekly chart. Swing traders, you got to use a weekly chart in these market conditions. This is a different financial market than you've ever had before. It's not the 1990s. It definitely is not the 1990s. And so we want to make sure that and that's the super strong support that we're going to look at. So we had rounding. We knew that there was rotation going on, and there was a little bit of accumulation, but there was rotation going on. Always the lowest bars. Why? Because this indicator, the size of the bar is the quantity of individual stocks, individual shares, individual trades. So I should say individual trades. The size of the bars indicates the number of individual trades, not the share lot size of the order. Okay, I'll repeat that. The length of the bars on this particular accumulation, I should call it rotation because it's no longer a distribution. The size of the bars indicates how many transactions are going on at that moment. It's not the lot size that's in there. Okay, so it's unique. And I created that. So we have a little bit of support there. So we have support right now for the PLTR. So how low will it go? Because there isn't that much wrong with the company. There's just a couple little things that it's reinventing. AI is reinventing. NVIDIA is reinventing. Everybody's reinventing. What they're doing is they're building huge, massive infrastructure, because we have phases in a great bull market. And this is the great bull market of your life. So don't miss out on it. I can't believe how many people missed out on the great bull market of from 1987 to 2000. They were just scared until it was almost over. And then they're going, oh, let's buy. Don't do that. So this is a phase. AI phase, and everybody went and started building infrastructure in 24 and 25. So they were spending all this money that they had because the government gave them extra money last year, saying, okay, let's lower corporate taxes. Yay, I say. And they were making money anyway, and they're going, well, let's build infrastructure. Let's get some bonds going out there and get some big infrastructure going. And that infrastructure takes time. It's not like a house where they build it in 3 months. Ticky-tacky house that's going to fall apart in 10 years. But it is a potential for them to build and get ready for the next phase. There's going to be several phases of AI, and there's going to be this huge surge of activity. It doesn't matter what the world is doing. AI is going to move and change the world all by itself. So we have a V bottom here. It says that this run isn't going to continue down. It's over. It's going to start moving up again. We have another one here that shows now we have this slanting down. It's a bending curve. It's heading down, 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 and it could potentially go further. So then we go, okay, let's take a look at the weekly charts, and we can see where we have pretty strong support for this stock. It's not going to go hugely down because there's not a major issue with it. It's just that there's been rotation to lower inventory, which bent the trend line and caused it to move down. So it could go down here, but that would be supported by this support level over here. So you could sell short, but you have to be careful and start watching to see when the smaller funds are dumping, because when the smaller funds are dumping, the dark pools will move in to get a bargain price. Okay, got that? All right. So MU has all these tiny little candles because nobody was paying attention to it. There's some smaller funds blasting here, but there was a lot of activity from accumulation. They have 77%, 0.50, and that's great. And they report on 3/19 out of the earnings season. And so they've been trending up, and then they have this little action here. And we have huge volume and some activity going on. But most of the time, it was ignored because everybody was buying NVIDIA and everybody was buying this stock and that stock and all the big name stocks. But they were ignoring good old ancient MU. It's old. It's a really old stock. It was in the 90s. And so this is the swing trade support right here on the daily charts. This is the last fundamental support that we have for this stock. And that's a problem because fundamentals are below price. And this was a fairly dicey one. It was a less strong. It wasn't as strong. So there was some slow rotation out of it because it really wasn't. It was going above its fundamentals, but it caught back up in here. So there's a lot of analysis that is going on that you need to understand. This is called relational analysis. We're comparing what's going on from buy-side giants, sell-side institutions, smaller funds managers. It did not participate at all in the flash crash. It went down slightly, but it bounced right back up because they were in slow accumulation mode for several months in the stock, and nobody noticed except for the pros. So we have TTVA, and we can see that it drops to the bottom, tells you it's going to keep on moving up. Now we have a peak and a trough. So we have this indicator that's peaked, and it's going down, but price is continuing to move up. That's problematic. That's a negative divergence of the indicators. When you have a negative divergence of an indicator, it means that price is moving up speculatively while the indicator is indicating that there is more distribution going on, more rotation going on in the stock. So that's a major indicator factor that you need to watch. If price is going up and this is going down, that's a problem. Okay, so we had a peak here and a peak here, and the stock is got a problem. So let's look at the weekly chart, and we can see that it's over speculated like big time. Where's your fundamental support level? It's way down here. It's way below. There's not much of a fundamental anywhere here. It's angle of ascent. Like I said, football going straight up in the air, it's going to come straight down, or baseball or basketball or whatever. If you throw it straight into the air, it's going to come back down. And we don't even have an arc anymore because the dark pools have moved on. They've done whatever they want. But we have smaller funds managers buying this stock like it's going to go up forever, and it's over speculated. So what do you do? MU has a ripe opportunity to suddenly have a downtrend, run down, because it's over speculated. There's no fundamentals anywhere near the price it is right now. It's extremely expensive. It's a very high risk stock for moving down. ADI, daily PSHI is 87, and that's high, and it reports on 218. That's this week. So what are we looking at? We have an angle of ascent that's too steep right off the bat. We have a small consolidation here, but it's not really run by the dark pools. This was where they stopped buying, and pro traders took over and pushed the price up. So we have a stock that is moving on speculation, but this is a problem. Buy, sell, buy, sell, buy, sell, buy, sell. You can't make any money on this. You know why? Because there's a division between different different groups as to what it's going to do. And there's some rotation in there as well. So this stock is in trouble. And we see the low here, which says it's going to move up. It moves up speculatively, rounding top, and a lower high on this divergence. It's going up, and this is diverging down. This is that divergence. This stock is in trouble. It's in trouble because there's buyers and sellers going on here. It couldn't swing trade the darn thing to save your soul, and it's problematic. If we look at the weekly chart, we can see that the angles of ascent are too steep. Support levels way down here. And so when it reports, if it has it may go speculative and gap up, but with the way HFT AI has been working all through this earnings season, which is awful, it's probably going to gap down, but there are no guarantees on that. It may have a stellar report, but so far HFT AI has been gapping down all kinds of companies, and that's a problem. So Google is our last chart. PSHI is 56, which is low. It reports on 4/23. It's already reported. It has this odd V shape, which is going to be an M top, and it's got lots of problems. That's a support level. It's not that strong. It could continue to go down. So far, it's been avoiding all things and didn't participate in the flash crash down here, but it has been moving up steadily, and it's been speculated quite a bit periodically. And there is rotation. There's a rotation by the dark pools to lower inventory even further than 56. This company is at risk of more of a downtrend. So that's the area that it was a support level, and it moved up, and it's become very speculative with a gap up HFTs, anything time high bars again, HFTs, small funds chasing. That's what you see, and that's what you want to compare. So when you're looking at this, you're saying, okay, what have we got? We've got some issues here. We have a divergence again. Stocks moving up, negative divergence. That's a problem. Yes, it peaked and it warned you that it was going to go down, but then it starts going back up again. Speculation, speculation, speculation. And I love this indicator because it can tell you that it's going to continue up if it starts to go down, continues to go up on the lows. But when it starts showing negative divergence over a period of time, that's not helpful. That's showing you that it's at risk of going down. So we have an angle of ascent that's too steep. We have massive quantities of small funds buying the stock speculatively. So the risk is that the stock is going to go down, and the closest support is way down here. It is not way up high, high, high. So we have a problem. There's a lot to study with relational analysis. There's a lot to learn with relational analysis. It takes time, but you have to raise your expectations. If you buy a new tool and you have to learn to use it, you're going to have to, it's skill development, and this is skill development, and you have to have it. This is our modern markets, and you've got to learn how to read them and read that stock chart like it's a book. Well, you have to use market condition analysis, which is what market condition are we in, and folks, what market are we in right now? We're in a moderately uptrending market condition, and having indices shift sideways for months is normal, because that allows the fundamentals of the components of the indexes to come up to that new fundamental level by the shifting sideways. And we have stocks in bottoms, we have stocks in tops, we have stocks all over the place. It's a moderately uptrending market condition in a young, great bull market. Great bull markets have only happened 3 times: 20s, the 90s, and now. And they only had 5 or 6 new technologies in the 20s. We only had 6 new technologies in the 90s. We have 20 in this one. It's going to last a while. So we have phases and growth. It's so exciting. Relational technical analysis, raise your understanding, raise your skill levels. You know, if you're an extremely skilled technician or extremely skilled programmer or extremely engineer or whatever, you have learned the skills of that trade. Learn the skills. Trade management planner. Very important. It manages your whole month that you're going to be trading, and you can tell what's going on with your trade management planner. And every one of my new students, they go, Martha, it tells me that I don't have to trade that often to make all the money I want to make this month. And I said, duh, because less is more in the market. If you're trading, you're going to lose money because you're taking weaker picks. When you pick better picks, and have better risk control and more run gain potential, you make more money with less work. And you have to pay yourself. How much are you worth an hour? $40, $50, $100, $200, $1,000 an hour? You know, raise your expectations. What are you worth an hour? You have to pay yourself. Daily trading journal. I share my trading journal that I made long ago, and I write down all the different market condition analysis that I have, because I have these different market conditions that I study every day, and I write about it in the trading journal. You can also, since it's based in an Excel format, because I like that, you can use a little bit of AI to sum it up at the end of the month. That will help you. That's one place you could use AI. MetaStock charting software that includes scans and sorts. Yay for MetaStock. I can't say enough about MetaStock. Totally awesome software. Hybrid leading indicators. I have hybrid leading indicators because the price and time indicators that you have lag. In other words, price has to move before it can indicate. Well, if you're on a penny spread and they're being nudged, you have to use the leading indicators in hybrid leading indicators. In addition to your other indicators, you have to include these so that you can see the spikes and the drops and the anticipation when this thing is going to move up or reverse. Is it going to move down? Is it going to move up the next day? It's absolutely imperative because we're on a penny spread, and that's where you make your profits. Controlled bracketed order types. Howard Johnson, I've told this story many times, talked to a New York Stock Exchange market maker who was so impressed, he asked Howard if he could use it on his trading floor, and today it's still used there. So you get to use and learn a sophisticated, professional controlled bracket order type that protects you from your PFOF market maker who is trying to make money on your orders. Buy entry signals, sell short entry signals. All of you have either read, I know Steve Neeson, I've had lunch with him many times, we've talked about things, and I did introduce to him the reality that his indicators in his book are fantastic. I mean, his buy entry signals and sell entry signals, candlesticks are fantastic, but they don't fit into our modern market structure anymore because of the penny spreads, because all the things that have changed since 2002. We have nudges, we have pole vaults, we have springboards, we have hurdles, we have nesting candles, we have resting day candles, we have all these different candles that don't look like anything if you're just using the candlesticks from Steve's book or from other people who took Steve's book and are training about how to read candlesticks. Yes, there are still dark clouds, and yes, there are still engulfing whites and all these other things, but we need to also know who created that candle to know who's in control of price. So I have these entry signals that are different than what you learn in candlesticks. It's just adding on to your skills, adding on to what you already have. What you have is great. Exit signals for trailing profit stops for taking profits. There are exit signals that are really important, and trailing profit stops to keep it so that you get out at the highest you can, but not the absolute. You don't want to try to get out at the absolute because you cannot. That's where you lose money. Oh, it might go up. It might go up. Oh, it might go up. Hope sinks. It doesn't float. It sinks. So don't hope. Don't wish. Stop that. Stop that. Run gain potential calculation is imperative. It will tell you when to set your stops tighter or when to exit, along with the hybrid leading indicator signals that I've shown you today. Run gain potential takes previous runs. If the runs are getting longer and longer, then you can expand and expect more run gain potential. But if over time the runs are shrinking on your swing trading over time, then you know that it's getting to an exhaustion pattern and it's getting at too steep of an angle of ascent, and it's going to be like a ball thrown in the air. It's going to fall faster down than it goes up. There's a gravity pull in the market. There's physics in the market. If you're a physics fan, great, because you'll understand all this stuff. You have the trade calculator when you become a student for accurate risk analysis, stop loss placement, entry price, share lot size that you should trade, price range that you should trade, risk to profit ratios that you should use, estimated hold time, and exits. It's just fantastic. Howard made it, and it's just a fantastic calculator. It's an Excel sheet and you plug all this stuff in and it tells you what to do. It's awesome. And it just takes all the work out of trading because you want to make trading fun. Bring the fun back. Raise your expectations and bring the fun back in trading. Don't work so hard for so little. Okay. I invite you to learn more at technotrader.com. We have 3 different levels because all of you are different. Some of you are really way up there. You've been trading for 10 to 30 years or more. And you need to start with the relational technical analysis, which will go beyond what I have given you today. It gets into the nitty-gritty details because I had to do a broad scope for this. If you are 2 to 5 years, the professional trading plan is going to go, wow, because Howard presents it. And it's like, wow, this is going to make my life so much easier. I'm not going to have to work so hard. I'm not going to have to work so hard to make even more money. So it's going to wow you. If you're a brand new beginner and you're just starting out, start with the introduction to trading. It's a great way to start and get introduced to the feeling. And I get tons of compliments on these from the people who come and register for these. We're not going to hound you. I am either right for you or I'm not. If you just enjoy being a hobby trader and you don't mind losing money and just making a little bit, and it's just a game for you, it's just kind of another casino, that's fine. But if you appreciate education, if you believe that education and skill and all these things that I've talked about are important to you, and that you feel that this is something that you want to pursue, then register on our site. We're not going to hound you. If you decide it's not for you, just say, unsubscribe, and we will. We have 50 pages of unsolicited remarks that come to students to tell me how well they're doing. And there's nothing, I have a great passion for teaching, and there's nothing more exciting and stimulating for me than to have somebody say, Martha, you have changed my life. I mean, I get goosebumps when I get these letters, and they're long, lengthy letters telling me how much they have learned and how they've changed their family life. And now they have not only for themselves, but for their children and their grandchildren. And they're leaving a legacy behind, which a lot of people really want to do. And the economy is no longer a consumer-based economy. There are more people over the age of 40 than there are under 40. And what this means is we are not a consumer-based economy anymore. We're a financial-based economy. We're the first in the world. And we're trying to get used to this idea because everybody says, oh, well, consumers are this and consumers are that. People over 40 own homes. People over 40 are worried about investing. They're worried about retiring. They're investing in more things. They're changing their whole life. They already own the house. They already own the car. They already own the condo. They already own all their furniture. They're not consumers. And our population is shrinking because we have immigrants going out, 2 million left on voluntarily. Nobody's coming in. Usually immigration are younger people. So it kept our economy more of a consumer base for years. But now it's an aging economy, which is great. But you need to learn to trade as a business. Trading as a business is only taught at TechnoTrader. A lot of people talk about it, but I'm the one that knows how it works because I've been doing it for years. And I put together this fantastic course for my students, and it was awesome. So go and read the comments. I don't ask for these. These come in all on their own. And this is our 24 hours to gain your free gift. It's a 1-hour starter course with 7 days of access. You sign up here. Jeff, please put that in. Or if you have your smartphone, you can just collect the little icon there and get it. It is very important. And these are all the things that are going to be taught in this course and that you can learn. You can take it at your own pace. You have 7 days to do it. It's fast track your trading success. It's a great mini course that I put together. I'm very proud of it. And it's something that will really, really help you and get you going. So this is something that you should consider doing. Again, I'm not right for everybody. I'm a special, very special education. And it's very hard to explain the difference between what we teach at TechnoTrader and what other people teach. But it is different. And if you're ready to really take it to trading as a business, if you want to leave a legacy behind, if you want to really make some big bucks, 6-digit, 7-digit incomes a year, then this is the place that you will be able to take what you have and build it and make it bigger and stronger, because we are a financial based economy now. And and everybody is going to be investing more. They say, oh, all the stock market's going up, the bonds market's going up. Oh, but all the people the middle class is shrinking. It's like they need to get into the financial markets. It's not a consumer-based economy anymore, and it's never going to be ever again. You know, Japan is a good country to study as far as what goes on in a country that has an inverted pyramid, population pyramid, because ours is inverted. And China inverted about 10 years ago. So they have problems because people, the only way that you can make money is investing in the infrastructure or whatever for and making trading as a business. It's a small business, and you will run it as a small business. And a small business has all kinds of perks, and you can write off all kinds of things that as a hobby trader you cannot. And you can get rid of those long Schedule Ds that where you have to itemize every single one of your transactions when you're trading as a business. Is just inventory in, inventory out, net profit. That's all it is. Okay, any questions?
Yeah, we have a couple. Martha, great job too, by the way. I thought you did excellent. Kumar says thank you. Timothy had a question about the chart with the box in the middle, and I'm just going to read it out loud. Question from Martha about the chart she showed, box in the middle of the chart, institutions long term. So what is the reason from them to become resistance later when the stock price comes back to the lower levels if they control the zone? Why is it beneficial? Go ahead.
Go ahead, keep it on.
Why is it beneficial for them to create resistance and sell into the price, attempting to run past them?
Okay, I need to clarify that. Thank you for asking. The dark pools have quantitative analysis, and they are using some AI for the quantitative analysis. They evaluate the company. They go visit the company. They see the CEO, CFO, and all of that. Then they come back, the analyst comes back and they punch in all the numbers. Quantitative analysis, it spits out, it says, okay, this stock currently has a value at this price range, and it's always a price range. So there's a high for the price range and a low for the price range, and it can be wider or very narrow depending on the company and what the company is doing. So each individual company has its own different buy zone. That is called a buy zone. That's my term. You'll hear other people saying it, like some people are talking about trading as a business, but I'm the one that created that. So that's the buy zone. So what their time weighted at price average order, which is automated, so it pings. If price drops below their buy zone, it pings it, and they will push the price back up into that buy zone. If the price goes beyond their buy zone level, then it pings and it stops the TWAP order. So there's a price range where they buy. If it goes below, they'll push the price back up because it's a bargain price. If price goes above that buy zone, then they stop buying, and the price will drop back into that buy zone at some point, because it doesn't have the clout of their millions of orders. Their orders are like 10 million, 20 million. There's a lot of people say, oh, we found the dark pools. No, you just follow the smallest funds managers. A large lot order today is at least 5 million. Professional traders, I know a lot of professional traders that swing 5 million shares. 5 million shares per transaction. So that buy zone is where they set it a pace, and so the TWAP triggers when it goes below and stops triggering when it goes above, and that's what creates that sideways pattern. Thank you for asking.
Good question. Good answer too. You understood the question better than I did. Kumar wants to know how he can get a percentage of shares held by institutions for MetaStock.
I don't know. I know that Morningstar is the primary source of that. NASDAQ has it as well. Those are the two that I know. I don't know if there are any on Yahoo or any of the others. I would have to investigate that further. But I use Morningstar. I go to Morningstar and I get the PSHI from them.
Okay. Kumar says thank you. And he also said, aha, now I understand how the triple weighted average price is used.
Good for you. Good for you. I'm so pleased.
Patricia says that makes sense. Buy zone. Timothy says thank you for reading it, and Martha for the answer. I can't say that I read it well, but you're welcome. All right.
No, it's fine. You did great.
That's the questions. So I've got the. I'm going to put this back in the chat, so it's just on the fresh. I've got the 7-day starter course right here. Let me copy the link. I'm going to place that back in the chat. Martha, as always, thank you for all the work that you've done. Appreciate it.
Yep, I have fun with these. I really do. I really do. Yeah, I was up all night thinking about what I was going to say because it's mostly ad lib. I'm just reading the charts, and it's just a whole lot of fun. And guys, you have a fabulous MetaStock is fantastic. You can't say enough about them. They're just absolutely international. So many people can use their MetaStock because they have so many different things. So take advantage of it and use it. It's a great charting software program. Can't say enough about them. And the people that work there are fantastic. So you have a good team behind you. So thank you for joining me. And I'll catch you later. I always like to end on time. So I'm a little bit early, but that's okay.
No
so
worries.
have a great one. Great. Thanks.
Okay. Thank you.
Bye.
All right. Let's go ahead and do this. Okay. Let's get some things shared here. So don't want you necessarily looking into the abyss. I do want to say thank you as we kind of migrate to our next speaker. I want to say thank you to Stocks and Commodities Magazine. We talked a little bit about it as we kicked off this morning, but Stocks and Commodities Magazine has been a great magazine. They've been publishing, as you can see on the side here, since 1982. They've been on 1.3 million articles. If you subscribe, not only is it fairly inexpensive, I think it's like about $100 a year. You can also get every issue they've ever released, every article. They've got a searchable archive. Fantastic magazine. You're here on day 2 of a session where we're just talking about trading, talking about techniques, learning about things. And I love that. I think it's important for doing continuing education, getting better. And what a good way to get a magazine every month to talk about different technical criteria. So a big thank you to Stocks and Commodities Magazine for sponsoring the events that we do. And I am ready, Greg, if you want to help me, to do a prize.
Abso-freaking-lutely. Let's do it.
All right. So I think it's important, first of all, if you're watching us in GoToWebinar, you're registered because that's how you got your link. If you're watching us on YouTube, hello. You should like and subscribe. It helps a great deal. And Greg, who's below me, probably on the side of me, though, and your viewer, I really appreciate it.
I am below you.
Yeah.
I had to look on my monitor behind me.
I actually just, as you were looking back, I saw yourself pop in. So, if you're watching us on YouTube, there's a pinned comment at the top of the chat that'll allow you to register. If you register, we're giving away. I added it up. Oh, I should have had that ready. Tens of thousands of prizes today, and over the course of the week, of course. So the first one is going to be a book by a good friend of MetaStock, Steve Bigelow. He wrote Candlestick Profits, Eliminating Emotions. We're going to give away a copy of that. Greg, I've got a list of people that have registered for today's event. It's right here. And what I need from you is just a number between 1 and 5991.
Okay. And according to Google Random Number Generator, that is 2099. 2099.
And that is Vicky K.
Congratulations, Vicky.
Vicky, I'm going to send you an email here in just a second. I don't like to save them till the end because it takes too long. I'm going to send you an email in a second to make sure I have a good address from you and a good phone number. As long as you respond to that message, I will send you a book next week. All right. Thank you very much, Greg. Appreciate it.
You're welcome.
We are, of course, MetaStock. We're going to be talking about MetaStock all day long. I'm going to show some hidden strategies in there that I really, really like. So I'm going to do that in just a little bit. MetaStock has been rated #1 in its price category for 32 years in a row. The pricing right here, you can see it just starts at $75 a month, which is cheap. That's for an intraday updating quote. You can scan, you can test everything you want to do during the day. It's just a 15-minute delay. We also do have full real-time options that start at about $210 per month. The offer that we're going to do for our award-winning MetaStock software package is if you buy a month, we'll give you the second and third month for free. So I'd encourage you to try it out. A lot of our customers have been with us for decades. If you try it today, you'll be running until May 17th. So you can do that if you go to metastock.com/conf promo. You go to metastock.com/sales chat, or you can give us a call at 800-882-3040. So our next presenter today is Serge Berger. Serge is a really good friend of MetaStock. I love the methodology that he's about to kind of go over and talk to us about. We've had him on many, many times. And it looks like you're right now in Europe, Serge.
Hey, Jeff.
Hey.
Hey, how are you?
Good, good. How are you doing?
I'm pretty good. Just got back from a week of snowboarding, and it's snowing like crazy here, so I'm ready to talk stocks again. Markets are, I think it's gonna get more interesting now. I know it's been a bit boring for some people who just follow a certain handful of stocks, but I think things are definitely picking up, or they will at least.
I'm interested to see what you have to say.
We'll see. Just quickly, heads up. I for some reason having some issues. That's my fault on logging into MetaStock this morning, so I'm gonna have to use a backup, just so you know. But I'm gonna be sharing all the information through the lens of MetaStock as well. Okay. It's more of a login issue on my end.
Okay.
Am I ready to share the screen, or what's?
Yeah, you should just be able to hit the red or the share button at the bottom.
Sure. Gotcha. Perfect. Let's go there. Got a lot of screens to choose from here. Let's see. How about this one here? That look okay to you, Jeff?
I can see it. Yeah, it's coming through.
Perfect. Thank you. Cool. All right. Well, listen, thanks everybody for being here. It's mid-February, and we've been talking to our clients largely for the first few weeks of this year about sort of how boring January might be. That has held true, and quite frankly, that's not actually unusual. You can have pretty volatile Januaries, but January and into about mid-February, which is roughly where we're at right now, tends to be sort of mean reverting. Things start to get outside of mean reversion, and we're talking about S&P centric sort of analysis here, but you can extend this beyond into other markets as well. But we're roughly at that point where with the probabilities of having moves directionally in a broader sense are we're in that window now. So actually, I can turn this little light on here. There you go. So let's talk about this. So I'm just going to quickly walk through sort of where I come from, so you have a little bit of perspective of what we're doing. But for me, it's largely looking at the market through the lens of a lot of history. I've done this now for 26 years, I think it's been, both on the institutional side at JP Morgan and hedge funds, and now also at our investment advisory firm, and of course through the lens of education here at thesteadytrader.com. And when I look at markets, I think it's important to keep in mind that there's one strategy that people that are more trading oriented, and I sense people here are a bit more trading oriented, that'll always work in any environment, and that is it's called momentum. Because there's always momentum somewhere, and especially here now in this day and age of algorithms, which are really ruling the markets, almost any markets, that at least the ones that are somewhat liquid. We have to understand that momentum is technically the number one strategy being used by all these algorithms. Just quickly from a risk disclaimer perspective, I think it's important just to go through this. First, we want to. Two, we have to. And that is that trading and investing carries a lot of risk. So I think it's important that everyone takes this very serious. This is not meant to be, sort of an entertainment. So I would encourage you to take it very serious, get educated, which of course is what this MetaStock event is all about. Also, anything I'm going to talk about here is purely educational. It's not investment advice in any shape or form. So please keep that in mind as well. So as I said before, and this is not meant to be sort of an end of the world call, because those are outlier calls. You know, you might notice that you might turn on TV or get a funny newsletter from someone, and they're always talking about doom and gloom or amazing, amazing beyond amazing. What I'm talking about here is more mean reversion. We've had an equity market, the U.S. equity market, that's largely been dormant at an index level. And that's largely because of the compilation of the composition, I don't know what the word that was, of the indices, where technology is such a major overweight that it becomes mathematically impossible for the indices to lift unless technology leads. I know that's not something that a lot of people have noticed yet, but they will, because the things that are performing well this year, energy up 20+%, no one owns. Yet the stuff that everyone owns, 5 times over, tech, has not done anything, so the indices are flat, right? So that's the issue you have. And I think momentum, however, is always somewhere. Like right now, we have a lot of momentum in energy stocks and all sorts of things on the upside, material stocks. On the downside, we have a lot of momentum as well in technology. So there's always momentum somewhere, and that's what we're going to talk about here today. So I think we're going to start to see a bit more volatility. Again, this is not an end of the world kind of call, but just more volatility than we've had for the past number of weeks, which is not that much to ask for, quite frankly, on an index level. So what I'm going to show you guys today is something that we use confidently to navigate markets, whether they're turbulent or not. And hopefully you'll find this helpful as well for your money and positioning yourself hopefully profitably in the months ahead. Now, I'm looking at the calendar. Obviously, the Fed is always important. We've got NVIDIA earnings next week. So there's plenty of data here that could lead to some sort of movement in markets that is less snoozy than we've had for the past number of weeks. And typically, most retail investors don't wake up to these things until after the fact. So I just thought I would kind of put this on your radar. But it's really not just necessarily about volatility. It's generally understanding what markets do almost all the time, at least some of the markets, and that is momentum, right? So the volatility in markets is essentially based on momentum, and momentum is a phenomenon that's become an increasingly bigger thing for investors, because machines accentuate essentially momentum, and so people tend to look at that as volatility, but momentum can be very profitable if we can catch it early enough. So momentum is driven by computer algorithms, and if we know at least some of the inputs of these computer algorithms, we have a really high chance of being able to get into those momentum moves early. So if you think about, that's why I come back to what I said before, where markets are largely momentum driven right now, algorithmically, again, computer machines are trading these markets all day long. There's probably a lot of common threads that these algorithms have. I know one of them, a couple of them actually, that they definitely have. Not every single one of them, that would be preposterous to say, but many of them, many of the big ones, they have several specific inputs that we track. And if we know what triggers those algorithms to do something, we have a really high probability chance, in our view, in our experience, to be able to get those momentum moves early. What I do want to quickly talk about is if you're a trader, how many people in here consider themselves to be a trader? Type in me or yes or something if you consider yourself to be a trader. Let me see where the chat message is, or is it the questions box as well? Yeah, how many? Type in ME if you think you are, if you consider yourself to be a trader. So if that's the case, what you're actually looking for the most part is you're looking for momentum, right? So there's a big misconception of people thinking that they need to figure trends. If you are a trader, and the time frame here might be multiple days, it might be intraday. What you're actually looking for is momentum, right? Does that make sense, everybody? Give me a quick yes if that makes sense. You're not really looking for trend, because definitionally trends last much longer than a few days or a few weeks. They last quarters and years. By definition, what you are looking for is momentum, and I'm going to define what that means for you. And I don't just think that once people understand that there's a difference between trends and momentum, it really opens up their understanding of the time frames that they want to be with. So let's get into this. I'm just going to skip a couple of slides. I want to make sure we stay on target. So essentially, we can look at momentum as through the lens of an equation, right? So some of you that are mathematically oriented, maybe you have some sort of a math or engineering background, you know this better than I do, that this formula, which is essentially momentum, is essentially a product of an object's mass times its velocity. And so when you look at it that way, you kind of put into perspective what this following slide is all about. So when you look at it, let's take a stock. We can relate this to a commodity. We could relate this to a currency, a cryptocurrency. It doesn't matter what the asset necessarily is. What's important is to understand what is momentum. And so momentum, when we look at it here through the lens of this car, I always try to explain to people, imagine this car was driving along the road at, let's say, 45 miles an hour, right? You're just going along, and then you're pulling onto the highway. And now you have to speed up from 45 miles an hour up to, let's say, 75 miles an hour. It's that delta, that change in speed, the acceleration, right? That is what we define as momentum in the markets. There are certain groups and market participants that have a different definition of that, but that is the definition that lots of the algorithms have as well. It's essentially the rate of change is essentially what we're looking at. And so this gets us to a very important point about all this, and that is that following slide, momentum, and I would encourage everyone, if you have a phone or something nearby, take a picture of this. I think it's really important. Momentum is temporary. Really write this down. This is critically important. As a trader, you are looking for momentum. You're not looking for trends. Trends are much longer term, right? They're multi-quarter, multi-year. So if you want to just make a lot of money in a stock, let's say that goes higher for a long time, like Nvidia or Palantir or whatever, right? Like that's a trend following exercise. That is not a trading exercise. A trading exercise is momentum driven. In fact, I can show you guys some momentum moves here that are happening as we speak. In fact, here in just a few moments as well. But it's important to understand the time frame. There's a huge difference between a trend and momentum. And so momentum doesn't last forever. It typically is intraday. If it's an intraday trade, some of you guys might be day traders. It's typically something that lasts from a few minutes to maybe a couple of hours. If we're talking about it on the daily charts, it's something that can last between a few days to usually a few weeks. In rare situations, it can last a couple of months, but that's about it. Because beyond that, it becomes a trend, right? And as a trader, if you're a day trader, it doesn't apply, but even if you're a swing trader, the time frame between your time frame does not actually take into account trends. It takes into account momentum. And so once people internalize that and realize that, it makes a really big difference in terms of them being able to understand that it's time to get out of a trade. Momentum doesn't last forever, and that's a good thing as a trader, because that's large. So the best way to show this to you in just one chart is essentially this. So let's take this chart. Doesn't matter what this is. This could be a stock. It doesn't matter what it is. Just a chart. If you look at the long green arrow there, that is essentially what we consider a trend. Those are multi-quarter, multi-year duration, right? They're major trends, lower left to upper right. What you can have along a trend is what we call momentum bursts. Now, momentum in this case can be both to the downside or to the upside, and I'll show you guys that here shortly. But as a trader, we're not really trying to capture the entire move. That's an investment time horizon. That's a trend following exercise, and that's where people get into trouble. What you're really looking for, if you're a trader, you're really looking for these momentum bursts, right? Because not only is that where the reward to risk is best, but it's also where the time frame, the duration of the trade fits your time frame. And it's basically where the explosiveness of potential profits is best. Does that make sense, everybody? So I think that's, again, it's really important to keep these time frames different. So the sort of issue, if you will, with traditional ways of retail investors or traders that focus on momentum is essentially based on a lot of indicators and tools that are basically using lagging signals, and that can lead to frustration and losses that are unnecessary, and just typically a lack of being able to adapt to market conditions that change. I think what we found out pretty early on, and this is now probably 16, 17 years or something like that when we figured this out. This was a side project when I was still a trader at an investment banker at JP Morgan. And as a sort of side project outside of work, we were looking at what defines momentum. And we found out pretty quickly that momentum, again, can be detected if we know what some of the major algorithms out there are actually doing. So we're going to go through some charts here together, because I think it's important that if you're looking for momentum, and by definition, if you're a trader, you're looking for momentum, otherwise you're an investor. For the most part, we need to have something that takes data into account more real time, right? So that gives us timelier signals, and it reduces the false positives. So basically, it gives us a lot of adaptability. We'll look at this on charts here in a minute, but one of the things I'd like to say just before we get started on this is, I don't know how many people in here are trading at home. Type in home if you're trading at home, HOME, or maybe type in prop, PROP, if you're like trading a prop account, maybe at a firm or somewhere else. In either of those situations, it is quite likely that you don't actually have a physical risk manager looking over your shoulders, right? You might have some risk management if you're at a prop firm, but there's not someone actually physically looking over your shoulders. The reason why it's so important to have risk management built into a trading tool is because when you trade momentum can change quickly, right? That's the whole point of why I'm going to show you what I'm going to show you right now. So we've got some people trading at home, some people trading props. So it looks like a bit of everything. That's actually perfect. Okay, so let's just go into this, and I'll show you a little bit what this looks at. And again, I have to apologize before. I couldn't open up MetaStock. My fault, not MetaStock's problem. I'm showing you just on an alternate chart, but just know all this works on MetaStock amazingly well. So just to give you a bit of an idea. So basically, when we get a signal, a momentum signal, it's critically important that we have something called what's called a free profit target, especially if you're trading at home alone or if you are at a prop firm. Because the goal of a trade, and I'm talking about a trade, is to get to a point where I can no longer lose money as quickly as possible, or at least get to a point where it's very difficult for me to lose money very quickly, right? That's the goal of a trader. We want to make sure that we call it a free trade, right? Or a free profit target, more specifically. So let me just show you guys a little bit what this looks like. So let's say, for example, let's look at Cameco here. So what you can see here, we have a buy signal, and when we get a buy signal, it's basically a trigger of a new momentum trigger. So when we get a buy signal on the chart on MetaStock, let's say, we get a green up arrow. At the same time, we get what's called a free profit target. And I'll show you guys this with real-time charts in just a few minutes. I just want to show you the concept first. And so once that happens, we know where we're going to take half the trade off. And the critical thing here is half the trade, right? So 50% of the trade. That's not an arbitrary number. There's a very specific reason why we take half the trade off. So first of all, when we get into a trade, most people, whether they're trading at home or prop or both, most people don't actually have a predetermined profit target. Certainly not a final profit target most of the time, and even more certainly not like a free profit target. What we want to do is we want to get to a free profit target as quickly as possible and take half the trade off. Mathematically, that's important because once I reach the free profit target, it becomes very difficult for me to lose money if that trade then goes lower, right? So let's say I get to this buy signal here, and you can ignore this range breakout stuff. That's actually not at all relevant to this. It's just momentum. So let's say I get a buy signal, I get a free profit target, and I take half the trade off. So very clearly, 50% that, if I bought 2 options contracts, 200 shares of stocks, whatever, 2 futures contracts, I will take half the trade off, half, right? Let me reiterate again, it's important because once I take half the trade off, I then have the other trade on that I can keep for what's called a runner, right? So in this case, you can see the stock ended up rallying 80%. But I'm also at a point where it becomes very difficult, if not impossible, to lose money because the trailing stop that we also have automatically once the trade starts is already in place. So by the time you reach the free profit target, you can see the trailing stop, which is the purple line, has essentially already moved to the point of entry. So it becomes, again, I say nearly impossible to stay compliant. Okay. So let's just move on. And before we go into this a bit more, I want to just quickly show you some examples here so everyone can understand. So, and I can show you tons of examples. I'll show you some live stuff afterwards. Like, the critical thing about momentum is to pick it early. And the only way we can pick it early is because we know some of the major inputs that some of the major, probably a lot of the major algorithms actually use. And so if you see algorithms kind of topple each other, when they see that big surges of volume or something that's largely algorithmically driven, they know something triggered, and they will search the market to see what happened to make that algorithm trigger. And so that's why they're losing a lot of the same signals, you see. So when you get a momentum move, it's like it can be very explosive. Like in this case, this stock ended up rallying 222%. I think it ended up rallying like 1,000 something. It was crazy. So that's what we're addressing here. Now, when we are using momentum, and specifically our trender momentum indicator, we're essentially addressing 2 things that most people are not doing. One of them is that most people just don't have a repeatable strategy they can trust. So they're doing a lot of random stuff, and that's not to be nasty to people. It's just what happens. It's normal, right? And then a lot of people certainly don't have a risk management process. So what we're doing with our trend momentum indicator in the process, we're essentially getting rid of that hope and guess or spray and pay approach. And I think if you're honest with yourself, and I think trading and investing is important that we are honest with ourselves because it's about money at work here. We are doing a lot of spraying and praying. A lot of people do that. So the less of that we do, and the more we have a repeatable process we can trust, entry point, free profit target, final profit target, and trailing stop in place, the more it becomes a system. And some of you may have heard of this before, right? Systematic or repeatable approach. I actually don't like the word systematic because it sounds a bit too electronic. It's about the repeatability. Which is maybe a bit more of a human way of saying. So not having a process leads to a lot of random emotional decision making, and it basically leads us to chase at the highs and sell at the lows, right? And that constant feeling of insecurity is an issue, and it causes a lot of people to dramatically underperform, given their abilities to do a whole lot better. So that's really the issue here, and we're going to show you right now how we cure this. So when we have our trender momentum indicator, we're not just looking at buy or sell signals. We're also, as soon as we get a buy signal, we get a free profit target and a trailing stop, and same thing when we get a sell signal. So the way it looks like in the charts is exactly like this, just to kind of show you this a little bit in sequence before we go into some live charts as well. So this all happens in real time, right? So there's no, these are not like, multiple week old signals. So in this case, you can see a sequence in this particular stock that I'm going to go walk you through for a minute, where we had a sell signal that was then automatically also came with a free profit target, and then that trailing stop along the way, which in this case is the purple line. And then you can see it followed by a buy signal, which then gave us a free profit target, again, where we take 50% of the trade off, so half the trade, followed by a trailing stop, and so on and so forth. So if I just kind of walk you guys through, let's say, the first couple of this sequence of trades, then I think you'll see quite quickly how this works. When most people, when they enter a trade, they just don't know where to get out, right? And again, particularly as someone who's trading at home, and certainly if you're a prop trader, you need to have that risk manager look over your shoulder. It's one of the things you learn, trading at a bank like JP Morgan, where that's part of the process. In fact, it's a core part of the process. Yes, yet most people at home do not have that. So let's just look at this. So you can see the buy signal, the free profit target. So let's say I bought a bunch of stock here. I would close half of it here, or a bunch of futures or options here. I would close half of it here and let the rest go on for a runner until it reaches the trailing stop, which is the purple line. Same thing on the downside. Sell signal, I would buy some puts or short the market if I want to. And then you've got a free profit target and a trailing stop. And over time, I'll quickly just walk you through this. You can see what happens. So this is really important to see. Again, it's the rigidity or the repeatability of the process that just helps us to not be emotional about it and just follow a process. And it's an extremely liberating exercise to follow a process. So on trade number 1, this was a short signal. You can see what happened is that after the trade reached the free profit target, we had locked in a gain of 5%. The system did. Ultimately, the rest of the position went on for another gain of 15.5%. That's just the stock. Options, you can basically times 3 or times 4 this, right? So a 5% gain is a 20% gain with options in this particular instance, or a 15% gain is a 45-60% sort of gain with options. Most important is notice what happens. The maximum potential loss after the free profit target has been reached then becomes very low. So once I've reached and locked in that free profit target, the potential loss, the maximum potential loss, is in most cases like this almost zero. In fact, sometimes it's positive, right? So in fact, sometimes it's very positive. Depending on how quickly the stock moves. So this is a very liberating feeling once people understand how this works. I'll give you just one more example before we go into the charts a bit more live. Here's just a sequence of trades that fired off on shares of Citigroup, for example. And again, you can see the buy signals, the free profit targets, the trailing stops, and so on and so forth. So let's just go through this sequence here so you can see how it worked. I'm just going to track the first 2 trades to be a bit quicker. But again, you can see the first trade in this case was a short. I don't have to take shorts if I don't want to, but I'm just showing you here that was the sequence. The free profit target was 75, and then we locked in about a 5.7% gain once the free profit target was reached, meaning that's where I closed half the position. The trade ultimately made about 7.3%, which again with options would have been, let's say, 21, 30%, something like that. But again, most importantly, once the free profit target was reached, the maximum potential loss with a very high degree of confidence was 0. And let me just quickly get a little bit of participation here. How many people have ever had a situation where you had a trade and it turned into a loser? Type in me if you ever had that happen. I certainly have. It still happens, right? It's frustrating. Type in me if that's happened to you before. And so by having a free profit target, we I don't want to say eliminate entirely because that would be non-compliant, but we almost entirely eliminate that situation, right? Because we get to a point where we eliminate half the trade. And again, particularly if you're trading at home or you're a prop trader, the name of the game is to have the losses as small as possible and then let the winners run. And the only way we can do that mathematically that we found out over many years is by doing this exact process. Does that make sense so far? Okay, so let's go through a few examples, and I don't know how many people in here are day traders and how many people are swing traders, but I'm happy to take you through examples in either direction, right? So again, I reiterate that unfortunately my fault. My MetaStock didn't open this morning. That's my fault. That's not a technological issue. But so I'm just going to show you this on an alternative thing, but it looks exactly the same on all the platforms. So just to quickly show you, like for example, this here right now is Oracle. Okay, so this is a 5-minute intraday chart, and you can see we received a sell. This is today right now. We received a sell signal, and you can see how it reached the profit target right there. You can see it literally clicked it right there. And then we have a trailing stop right there. So let's say I would have bought 2 put options, I would have reached the free profit target, and notice that the trailing stop, which is the purple line, at the time we reached the profit target was already below the point of entry, right? So there's no way I was going to lose money in this trade. Make sense? So the initial stop loss trails, right? So it's mathematically built in whether we're day trading or swing trading. If I don't know if that's specifically the question you're asking. So I'm going to minimize this a little bit, and I'm going to go over and show you what this looks like from sort of a swing trading perspective. And then I'm happy to go back more into some day trades. Again, I don't know how many of you look at this through an intraday basis and how many people look at it here on a like a daily chart. So let's go through a popular stock that I'm pretty sure most people have heard of, and that is Tesla. I'm going to walk you guys through the signals. So we'll take this step by step. Again, this is all about MetaStock here today, so I want to make sure everyone knows we can all obviously use a MetaStock extremely well. In fact, the team MetaStock were instrumental in helping me develop this. I'm just having to show you this on an alternate platform here, just because on my error I couldn't open the MetaStock platform this morning. Anyway, so here is, let's just take the sequence of trades on Tesla. So this is shares of Tesla, which again I think most of you heard before, and we received a buy signal on the 8th of August, and then we received a sell signal on the 12th of November. Now, we have a trailing stop here. It's the purple line. I would like all of you to ignore that purple line for right now, because the easiest way to use this process is to literally go from signal to signal. So for the first few months of using this, just go from signal to signal, take the free profit target, and move on. Okay? It's the easiest way. The reason we have a trailing stop is for once you've used it for a while, you can optimize this a bit more if you want to. You don't even have to. The easiest way to use it is just go from signal to signal. So let's just assume I took the buy signal on the 8th of August last year. I reached the free profit target. You guys can all see the free profit target right there. It's a little green dot. I know it's a bit small, but I hope you guys can see it at the bottom left. So within like literally the next day, that free profit target was reached. So that's where I close half the trade. Then I keep the rest of the position on until I get a sell signal. So if I did that, this trade would have ultimately made about 30%. So that's 30% on that first trade. You guys all see that? The next signal was a sell signal. Again, the free profit target gets reached very quickly. And ultimately, we had about a 5% gain on the free profit target, and then got stopped out about 5%. So let's call that a scratch trade. So between the sell signal and the buy signal, that's a 0%, so no return. Then we had a buy signal, reached just the free profit target, and ultimately gets a stop loss at about 0.5%. So that's probably made about 3% that trade. Okay, and again with options, you can multiply this by 3 or 4. To get the returns. So 3%. Oh, let me just quickly write this down. So 3% here. All right. And then the next signal, the last signal, the most recent one was a short signal. The free profit target gets reached. We close half the trade. And so far, this trade is making about, let's call it 10%. Okay. So that's the sequence in trades. So if all I did is trade Tesla using our momentum approach since what did we say? What was that? Like August last year, I would have made 30% plus 0 plus 3, 33 plus 10. That is a 43% return. Again, with options, that's 3x that, so 120, 160% return. Make sense to everybody? Okay. So what I just said, that's a good question. What I just said is very important. Let's ignore the trailing stop. That's what I'm saying. Let's just go from signal to signal. Once you've used it for a few months, you can use the trailing stop if you want to. You don't even have to use the trailing stop. The easiest way to use it, and a lot of times how I use it, is just going from signal to signal. The most important thing, Sam, is to use the free profit target. So let's say I buy 2 shares of stock or 2 options or again, multiples of 2, right? I want to make sure I close half the trade at the free profit target. Does that make sense? It's really important you understand that, because that is the embedded risk management process. that is so important. Okay, so let's look at something like Chevron. I can show you here the same way. So this is Chevron. Again, we're looking at a daily chart. We can look at this from an intraday perspective as well, if you guys have more intraday questions as well. Okay, so if we took, for the latest signal in Chevron came on the what was that? The whatever day that was, right there. Okay, so like some point late December 30th or something like that. So since then, again, you can see the free profit target gets reached, right? So immediately you made 5%. So now I close half the position. Now I can keep the rest on either until I get a sell signal, or if you want to, like Sam is saying, I can use the trailing stop. I suggest just going from signal to signal. And I think MetaStock and Jeffrey would probably agree that's a great way to get started using this. You don't have to make it complicated. You really don't, right? So that's the way it works. And again, very importantly, when the buy signal prints or the sell signal, we automatically get a free profit target based on the time frame we're using. So if I'm using it for a day trading time frame, it adopts the stop loss and the trailing stop to a day trading time frame. And for a swing trading time frame, it gives us a swing trading time frame. Steve is asking, can you explain the 3x using options? What I'm saying is if you're using options, and it's typically front month options, something within 30 days to expiry, typically, this is not a guarantee, obviously, I hope you guys know that, but typically the math I like to use is instead of making, let's say, 5% in that first leg on the stock, with options, it would have been, say, a 15 or 20% return. Does that make sense? Because options are leverage. Right? So for example, if I took this Chevron trade and I'm still in it with half the position, that other half of the position would now be up not 18, let's call it 20%, just to round it up, not 20% with the stock, but 60 or 80% with options. Does that make sense, Steve? It's a great question. And we get that question a lot, by the way. It's just, I'm trying to use a rule of thumb because it really depends on what options you use, obviously, but we're going by just the basic sort of, standard sort of 30-day option in this case for a swing trade, which is typically kind of what happens. Again, it's not a guarantee, but I'm trying to give you sort of a rough idea. Does that make sense, Steve? So let's look at, for example, Robinhood, right? A lot of people own Robinhood, love it because they use the app. The reality is we received a sell signal on Robinhood on whatever day that was there. That's like mid-December of last year. And so I get a sell signal. Maybe I'll buy some puts, 2 puts, 4 puts, short the stock, whatever, right? Something bearish. If you want to do that, if you don't trade bearish, then don't do it. But the free profit target was reached, right? So you can see the free profit target gets reached right there. So now I take half the trade off. So now I can keep the rest on until I get a buy signal. So in this case, if I took this trade, the other half of the position is now up 35% on the stock, right? Because the stock is down 35. So I'm now making 35% if I would have shorted the stock. If I would have used options, 35 times 3, you're looking at north of 100% of return just being long some put options on a Robinhood. That makes sense to everybody? It's not complicated, right? Or even something like Palantir. I can show you that. I know it's a popular stock. I know a lot of people are long the stock, 10 times over, but here is the reality, right? So let's say we took this trade. So our indicator gave us a sell signal on Palantir on that day right there, which is the early January, or was it late December? One of the last few days of December. And you can see it gave us the free profit target. So if I would have bought 2 put options or shorted 2 shares of stock, whatever, it would have ultimately resulted in a gain of about 8% on that first leg. And now, since that sell signal, the stock is down. It's actually, this is where it became valid. The stock is now down about 24%, or let's call it 25 to make it a simple number. If I would have bought a couple of put options, that second leg of the trade would now be up not 25%, but somewhere between 75 and 100% of gains, right? Again, I'm not trying to give you guarantees. I'm just trying to show you how the math works. But the most important thing, and I'd love to just get a little bit of engagement here. Does it make sense to everybody how important that free profit target is? So when we get a sell signal, we automatically also get that free profit target, right? It's incredibly important. That is what makes this work. I mean, obviously, the input of the signal is important, so because we know what some of the major algorithms use to ultimately lead to momentum moves, but the risk management process here is incredibly important. And I can tell you that having traded all the hedge fund desks and all that stuff, and now at that investment advisory firm as well, I can tell you the difference between a professional trader and a retail trader or a prop trader that's retail is risk management. There's no doubt, 100%. From a pure trading perspective, there's information, lack of information that retail folks have as well. But from an execution perspective, it's risk management, risk management, risk management, risk management. Okay, the free trade, yeah, like Patricia's saying, the free trade or the free profits target is as we define it, it's critically important. I mean, it's difficult to overstate that. Let's see here. I'm just trying to go through some stocks that I think everyone's kind of following and everyone knows. So let's take, for example, CrowdStrike. All right, so let's take CrowdStrike, which is a stock that everyone. So you can see the sequence of the trades. So let's say we're looking at CrowdStrike, which most people are long 10 times over through indices and all sorts of stuff, and they're not even aware of it. Reality is that since we got a sell signal, the stock is now down about 18%, right? So let's just follow the sequence of the trades. So we received a buy signal in whatever that was, like mid-September of last year, and a free profit target. Like what Patricia's saying, right? The free profit target, very important. Then you can see once I take that half trade off, I'm now basically in a free position. And if I would have taken that signal, right, that signal ultimately resulted in a gain of the rest of the position of about 13, 14%. Again, with options that say, whatever, 45, 60% gain, right? And so then we had a short signal. So this was the buy signal here, there, right? The free profit target. I close half the position and I let it go until I get the sell signal. For the first few months, just do that. Afterwards, if you want to get fancy and use the trailing stop, by all means do it. You don't have to. So then we get a sell signal right there, right? Took a little while to work, but ultimately it reached the free profit target. And then since that signal, the stock is down about 18%. Let me see what other stocks are. And if you guys have other names you want to look at them, I'm happy to take a look at it. Right? All you do to get started, just go from signal to signal. That's all you have to do. Signal to signal, but use the free profit target to get out. That's the number one thing I can tell you to get out of half the position. So let's look at maybe trying to see like CMG, I think is the name everyone knows, the Chipotle Mexican Grill. Just see if we have any correlate. Let me see here, popular stocks. Chipotle Mexican Grill. All right, here. Okay, so this now is Chipotle Mexican Grill. This is, again, I'm showing you the sequence of how it works. So here we have a sell signal that took place on in September of last year. Free profit target gets reached, and if all I did is hold that second half of the trade until the buy signal, that was a 20% gain. So again, 20%, right, with the stock, right, on the downside. If I shorted the stock with options, a put option would have made 60, 80%. And we get a buy signal that didn't work, not at all, right? So that trade lost 5%. So this is minus 5%. Oh my God, Serge, this doesn't work at all. You lost money in one trade, right? So we lost 5. So now we're up 15. And this is with the stock, right? This is not with options. With options, you do 3 to 4x that. So then we get a sell signal. That one came very late. So let's say we took it after the gap down, which I wouldn't do, but let's say I did. Then here too, I would have lost about 5%. So that's again a 5% loss. Oh my God, 2 losers in a row. Then we get a buy signal that made about 10%. Okay. And now we have a new sell signal. So if all I did, and this is the difference between retail traders and professionals. If all I did is take these 4 trades, and now the 5th one, which is still working, I would have made 20% in this stock. I would have made 60 or 80% with options on one ticker in 4 trades. And this is typically, again, where most retail investors strike out. They see something that doesn't make money on every single trade, but because they don't have a process. Type in the word process if you can understand the reason why we have a process. I will guarantee you, every institutional investor will see this as a normal sequence of trades. What retail traders expect is nothing but profits. And they do something, they get a couple wrong trades in a row, and they give up. And they go to the next shiny objects, which is why they don't succeed. Right? But if you're a professional investor, a professional trader, you're realizing that process is the only way to ultimately to ultimately make this work. So let me just go through just a couple more examples, and then if you guys want to, I promised MetaStock and the team that we will give everyone access to this tool for everyone that wants. Let's look at Airbnb. I think it's another stock that everyone knows. Okay, so let's say all I did since the past couple of months or so is take signals on Airbnb. There were 2 signals. One of them came in early December. That one again quickly reached the free profit target, and then we had a trailing stop, right? Or excuse me, and then we had a sell signal. So ultimately, this trade made about, I don't know, 7, let's call it 7%. That's the stock, right? Again, options would have made 21, 28%. And then we had a sell signal, which reached the free profit target, and now we're still, the trade is still open. So far, it's up about 6% as well. Let's call that 6%. That's 6%. That's 2 trades in the same stock since whatever was that, December. Again, that's a total of 13, let's say times 3. You know, you're looking at 39, 50, 60%, whatever ish of gains with options. That kind of math. Does that make sense, everybody? Right. And it's the same thing intraday, right? There's really no difference whether we're using this intraday or on the daily charts. It just doesn't matter. The process is exactly the same, whether we use intraday or daily charts. Okay. Let me just quickly see. I want to make sure I have this all written out for you guys. So let's take, like, for example, one stock that I was watching this morning that gave me a signal right away was Intuit. Just to give you guys an idea of what this looks like intraday. So this is Intuit. The ticker symbol is INTU. This is a 5-minute chart, and you can see we got a sell signal right out of the gate, right? This stock moved very quickly, so it reached the free profit target like the next bar, but the trade is still on. We don't have a buy signal yet, right? So if I took this trade and I bought a couple of put options, the stock is now down 3% from this intraday, right? So an intraday option would have made a lot of money on something like this, okay? So let me just, if there's more tickers, I'm happy to go through it with you guys, but I want to just quickly show you how you can get access to this, because that's always an important question that people start to ask. So it's called the TST Trend or Momentum Indicator, and as I said before, you can use this on MetaStock. And again, Jeffrey and the team have been very instrumental in helping me work on this tool. So I want to give MetaStock all the props here. As an FYI, because I saw some people asking already, you can use this on other platforms as well. So if you're using TradingView or Ninja or Thinkorswim, you can use it there as well. But obviously, MetaStock being the sponsor here, you want to make sure you know that you can use it there as well. So what we typically do is we give people access to this tool for a full year. It's with MetaStock, we said, listen, let's just knock off 80% just to make sure that everyone gets a chance and really has I cannot say no, because I think it's important that people understand we have a momentum market right now. So if you feel like this is an approach and something that you can use in your trading, which we certainly suggest that you do use, it's only $397, and we even send out our favorite trade alert of the day every week of the week. You get also full 12 months access to our member sessions. We do their live trading sessions once a month. So it's a full package for just $397. If you want to take advantage of this, it's available here right now through the webinar. After that shuts down at this price, you can go to metastock.com/trender is where you can go take advantage of this. Yeah, Greg is asking about the chop. So we have the next member session. Let me just I'll get to that question, Greg. So the answer is yes, but I'll get to that in a minute. So for $397, you get full 12 months access to this indicator. Again, it works on MetaStock, TradingView, Thinkorswim, and Ninja Trader as well. And you get access to our trade of the week and our trading sessions once a month. You can even use PayPal and, of course, credit cards for that as well. If you have any questions, there's a phone number here, and I think this is the right phone number. I'm sure it's the right phone number. I'll quickly leave it up here. If you have any questions, you can.
It is.
Yep, perfect. Thank you. 800-882-3040. You get a hold of the MetaStock team, the good folks over there. A couple of bonuses. So we're actually throwing in our 3x triple strategy as well. So essentially, these are 3 additional strategies. One of them is a day trading strategy. The other one is a swing trading strategy, and the third one is a long-term trading investment strategy. So if you want to learn a couple more strategies, we're throwing those in as well. Those are yours to keep; they're never taken away, so you'll have access to those once you log in to the website. But the indicator is up. It's basically 307 for 12 months. We do our live training / trading session, which is actually Greg's question about CHOP, right? So this is important. So once you're joining us today, you're going to be invited to the February 24th member session. That's just coming up just around the corner. And in that session, not only do we, of course, teach you exactly how to use the tool, we're also going to show you how to avoid the choppy times in the market, right? When there's really not much to do. So the answer, Greg, absolutely is yes. That is a very much part of the process. Because again, what you want to do is you want to be involved in the markets when there is momentum taking place. And momentum happens both to the upside and to the downside, right? It's like with Intuit this morning, it's to the downside, or here on this chart here, which is live. So yes, that's an important part, and it's actually critical for everyone to understand how that works. I want to pass it to you, Jeffrey, if that's okay. I don't know if you have anything to add. Usually, I know you want to go through a few things, so I want to just make sure we're stay on time here for you. Jeffrey, you're still there?
Yeah, I just can't find my microphone.
I've been there. I've done sessions where I spoke to myself for the first 10 minutes. No one heard it. Jeffrey, anyway, I just wanted to see if you had if there's questions or anything you wanted to add here as well.
Can you hear me now?
I can hear you now. Yep.
All right. I couldn't find my microphone, and then I unplugged it by moving it a little closer.
Oh, nice.
I'd like to show kind of the scanning and kind of the expert advisor, some of the things that make the MetaStock version special. So I'm prepared to do that, and I appreciate all the questions. Do want to let you know, if you go to metastock.com/trender, not only can you get it for any platform, we'll also give you a free trial to MetaStock as part of that purchase. So then you can also play with like the scanning, that kind of stuff. So Serge, I'm going to go ahead and, if you don't mind, I'm going to take over a little bit. Ooh, we're going to let the camera center on me. It takes a second or two. And then I'm just going to kind of show how easy it is to kind of get this set up and scanned. So Serge, thank you very much.
I appreciate it, guys. Thanks so much. We'll see you guys on the inside.
All right, cool. I'm going to share my screen. We're going to do this. You should see a box of the TST Trender. All right. One of the things that we've been saying over and over and over again is I just love how easy it is to actually run an exploration, find the opportunities. And this is something that's unique to the MetaStock application in terms of the way that the scanning works and kind of the markets you can scan, and being able to, again, find the opportunities that exist in the market. So I've got a box right here, but I actually also have MetaStock running. I did have, oh, it's over here. I did run a little bit of a scan already against the S&P 500, and we came up with some stocks that are here. So Warner Brother was one of them. I'll show you how to run the scan in just a second. But here we can see that we did have a cross between the last bar and today. Right now we have an opportunity where Trender is giving us a buy signal on Warner Brothers. This is one of the results that came up today, and I'll show you the whole list of results. We can kind of go through and we can play with them. Wanted to also point out here we had a little bit of a short opportunity, and it kind of came in and fed into that. Okay, when this shows up on a chart, what's going to happen is you're going to have your stop loss levels. They're going to automatically plot, as well as your profit targets. Here we did close below our profit target. It got a nice little exit on this trade. Okay, now we're setting up for a new one. As soon as that trade sets up, it's going to go ahead and give us a buy signal. As soon as that starts to happen, you'll get your stop loss and your profit target, and those will be drawn automatically. Pretty cool. So from a perspective of commentary, I've talked about commentary and kind of how it can help you understand the signal. And let me go ahead and kind of just show it to you real quick here. We do have an active buy setup. If I click on View Expert Commentary, it's going to open up this commentary window. You'll notice there's a little bit of an arrow right above this bar. That basically just means that this commentary that we're looking at right here is talking about, well, I point on my screen, this bar right here. Okay, so that triangle, I can move that around if I wanted to see what it said, like when the short signal was actually generated, we could see that here. And with this one, it's fairly straightforward. It basically just says, hey, this is what the TST indicator is designed to do. We're currently short because we are looking now at this bar, right? We're currently short with our profit target at 27.01 and our trailing stop loss at 28.53. I'm going to go ahead and move that commentary back right here. Now it's going to be in the long position. We can go and check it any time we want to. Again, it's going to give us that profit target and that trailing stop. I'm going to move up and over here so I can see any questions as they come in. Okay. There are two settings. Michael has a good question. Patricia, you've always so interactive. I love all the comments. Patricia says, thank you, Serge. She also says this looks so easy. So, and it is. It's very, very straightforward. In terms of the lengths of the moving averages, to talk to your question a little bit, Michael, there's basically the two built-in studies. So there's one that's for swing trading, and there's one for day trading, and there's also one that you can completely customize. So we won't really get into the customizable one, but you can actually go in if you want to play with other moving averages and change the moving average settings. And in the training, I talk a little bit about how to test. I created a special system test just for this that allows you to go in and test the optimized variables to find out which ones work best in case you want to go in and try the settings in the pre-built settings. So for the lengths of the moving averages that Serge is using, he has a swing one. It's designed if you want to for use on a daily chart. He's also got a intraday one. If you're using intraday and you want to intraday trade a chart, he has other moving average settings that are set up. So let's go ahead and I want to show you how that scan works. Again, I think scanning is one of the coolest things MetaStock does. The implementation of the way that the scans work are truly, truly cool. So I'm going to come over here to the scanner. We're going to play with this a little bit more as we get into my demo, which is next, which is why I'm not worried about time. But if I come in here, I've just actually in the search box here, you can see it. I've typed in TST. We've got a custom. So if I've gone in and kind of created my own moving average lengths, I can use the custom one. You've got that day trader mode, and then you've got the swing mode. And you can see this little R, that means I've run the swing mode. I have a report ready. We're going to look at it. But when I ran the TST swing mode, I ran it against the whole S&P 500. You can see that selected right here. It took a few minutes to run. It doesn't really take a lot of time. And it came back with any stock that would have a buy signal or a sell signal right now, which is why we have Warner Brothers. Okay. So how easy is that? Let me go ahead and go down to the report. If I'm looking for buy and sell signals today, I can go into the report. I've already run it, so I don't have to run it for you. But right here, when I look at the report, we did about 503 stocks. There, we rejected for the S&P 500, and out of those, we rejected 490. So again, I love the ability to focus here. You can't do this in a lot of other platforms where you can kind of just say, show me the stocks with an opportunity, and let's take a look at those. So right here, out of the 13 that I'm looking at, you'll see there's a column that says long right here, a column that says short here, then you have close and volume and the symbol. Okay, I'm going to go ahead and sort this on long. You'll notice we have American Waterworks, Dollar Tree, Warner Brothers. All three of those are issuing the long, and then we've got the shorts that are down here. So if I'm looking for long positions today, and I will give you a little bit of a disclaimer, we're not through the trading day yet. And if we're doing a daily chart, we probably want to wait and make sure that we have a buy signal at the end of the day. But if I'm looking for trading signals today, instead of looking at all 500 stocks here, I can look at Warner Brothers, which we just did. I could look at Dollar Tree, which is right here, and I can look at American Waterworks. So let's go ahead. I'm actually just going to type in, because I've got this chart exactly the way I want it. So I'm going to go ahead and type in DLTR. I'll just change the symbol to this chart. We'll jump over to it instead of opening up a new chart. Here, this is definitely one that we want to wait until the end of the day, because you notice that when we ran the scan, there was a crossover, but it looks like we don't have that crossover right now. Okay, price has obviously been selling off. We've got a big red candle here, and when I ran it just about maybe 30-40 minutes ago after Serge started, we had a cross. Right now the price has come down enough that we don't have a cross. loss. So again, we want to look at and wait until the end of the bar. I'll point out right here, we did have a sell on Dollar Tree right here. As soon as that sell came in, we would have started to get that stop loss and the target. We did hit our target and close out. So let's look at Waterworks, AWK, and that'll kind of sum them all up. AWK, here we come. Again, here we have the crossover. We've got our buy signal. Immediately, we've got that stop loss. Here we've got the target. And, you know, I want to point out right here, we had a sell signal. We hit our target, which gave us an exit. So there you go. Actually, 3 examples of some shorts that we recently had. They all hit the targets that they were looking at, which is actually pretty cool and not planned. So there you go. Very, very easy to put together, very easy to run the explorations. With MetaStock, you can scan for these signals. It's very, it's something that you can do. You can also scan on just about any market on Earth. So we, because we get our data from LSEG, the London Stock Exchange Group, they cover about 400, well, 200 to 300 global exchanges. I thought I'd kind of lower that down a little bit. If you're in, we do have a lot of customers in India. There've been a lot of people asking about India. You could use this there, London, Australia, Singapore, Hong Kong, and of course the US. So that's a little bit of, and of course I ran the S&P 500 just to make it easy. But if I wanted to run it against all of the optionable stocks, I could. If I wanted to do it against all of the ETFs, I could. There's really, really good list management that exists in there. So let me just kind of go back in here. We can kind of sum this up, kind of give the offer out. We do offer this with a money back guarantee. We do include all the indicators, the scans. You do have the ability to test it. You can test the day trading mode, the swing trading mode, and the optimize. You can actually optimize the different variables. I cover how to do that in the training that's included. I just love this. It's very straightforward, super easy to use, super straightforward when you're looking at the chart, exactly what you're going to be looking to do with it. And of course, you get the commentary that gives you the stop losses, the entry signals, all that kind of stuff. So Serge did talk about all the stuff that's included. He's got all of this stuff that's actually part of the package. And we did sit down after this was released and we recorded a training video. Serge discussed the setups and how to use them. I walk through kind of tips and tricks on how to use them with MetaStock, like how to set up your scans, make sure everything is cool and that you understand how to use it. I even go in on TST Trender and show you how to kind of use that optimized system test, adjust the variables so that you can just be using exactly what you want to do. So, all right, cool. Okay, again, $397, 30-day money back guarantee. It works with the platform Serge said it worked with, which does include TradingView. We did have a question about that, a couple of other ones, and of course MetaStock. When you do this purchase, you will get access to the MetaStock version as well as the other versions. I would encourage you, even if you've been using TradingView for a while, there is a reason MetaStock's been rated #1 for 32 years in a row. And I'd encourage you to do the free trial because you can just cancel it. You'll get a free trial as part of your purchase. You'll get a money back guarantee. It's an 80% discount, $397. So metastock.com/trender, 800-882-3040, or metastock.com/sales chat if you have any other questions or want to ask us a question. So there we go. All right, that's a pretty good start on that one. I do want to say, as we migrate to our next speaker, if you haven't yet joined our community, we've got a lot of new members from the conference. I'd like to welcome you there. There is, our community is actually, I really like it. There's a bunch of traders there that talk about the markets all the time. I get some really good ideas about the markets and things that are happening in the markets. You can chat with other traders. We do lessons on all kinds of stuff. We just did an options course where we kind of went through a whole bunch of different option strategies and that kind of stuff. We talked about Black-Scholes model. We've done the whole moving average, all kinds of things set up there. We usually try and do a new lesson a couple times a month. And we also bring in guests. We do a kind of a podcast format where it's called Ticker Talk. All that stuff I'm talking about is actually free if you go to thetradersforum.com. So, all right, very cool. Greg Lewis, are you ready to help me out?
You bet. What can I do?
All right.
Oh,
We're gonna do
that's
prizes.
weird. Let's see
Wow,
where my
are you in the
camera's,
dark?
dark. No, there we go.
Oh my goodness, there you are. Good. We're gonna do a prize. I just had to
All right.
get my spreadsheet ready. Okay. I just got a note from Dan that says he's got a webinar he's doing right now, but he'll join us 2 minutes early. So don't get too nervous about that. All right, the book that we're going to be doing is this book this time, High Profit Candlestick Patterns by Steve Bigelow.
Yes.
Steve's was a great friend of MetaStock. This is a great book. We're going to send it to you if Greg loves you enough to pick your number.
I love everyone.
All right, Greg, the number I need is anywhere between 1 and 59.91. Actually, it should be 2. There's anywhere between 2 and 59.91 because there is a header row on my spreadsheet.
Okay, I'll just rerun that. Whoever that other number is just lost out because that number would be, which is much more leaning towards people who've only just registered, is 5,559.
Wow, that is that's Joseph B.
And that is according to Google Random Number Generator.
All right. If you are Joseph B. with an iCloud address in the USA, you just won that book, and you will get it as long as you respond to my email, making sure that I'm asking for an answer. So, if you don't, if you get an email from me that says, "Hey, you won a prize," it's legit. I promise. All right. Very good.
Hey, Jeff, am I wrong, or are you up next? You're up next.
I am up next. Yeah.
Well, let's just take a real quick second to introduce you. People probably already know who you are. Anybody that's been on any of our webinars or any of our past events has to understand that Jeff Gibby is the foremost front man for MetaStock. He's the guy. He runs all of our events. He's the director of sales and business development, and he's been with the company for umpteen million years, pushing 30 years right now. Yeah.
Yeah. No? Next year will be 30. It's 29 right now.
You don't seem old enough to have been with the company for 30 years. Yeah.
I might have believed you a few years ago, but I turned silver fox.
Yeah. He's also he's obviously very, very. I would put up Jeff Gibby against anybody, maybe with one exception, for product knowledge as far as MetaStock is concerned. And he's also a very avid trader. And even though you can't take his trading advice, I ask Jeff for trading tips all the time. He's pretty smart about that. So, Jeff, have I missed anything important?
Yeah. I'll be like, hey, I sold that. And you're like, why am I still holding it?
Oh, yeah. Yeah, he's great on getting in. He doesn't tell you when to get out. That's the no. All right, Jeff, break a leg. I'll get out of your way.
All right. Thank you. Okay. All right. If you do have questions as we go, I'm just kind of getting this situated in a way that I can see the YouTube questions as well as any questions you might have. So I'm going to scroll everything down. Christine, I'm sorry you didn't win this time, but I have a good feeling you'll win next time. So, all right. Greg, thank you for the introduction. My name is Jeff Gibby. You might be familiar with me from reading the legal introduction earlier. This time, I'm going to read it again, but I'm going to actually recite it from memory. I actually don't have it right here. So let me go back in here. Let me go back here. And we'll keep the lawyers happy. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software or any information provided in connection with the company. MetaStock and its employees do not endorse a purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. Okay. I did that as fast as I could that time. Today, what I want to talk a little bit about, okay, so let's come back into here. And there's a number of different classes that we talk about. And yesterday, if you tuned into Scott Brown's presentation, he talked a lot about system testing and kind of the ability to go in and find what trading ideas really work in a market. Tomorrow he's going to come back and talk about our system test. Our forecaster, which is patented, uses a lot of statistics to help you predict price probabilities. Today, what I want to do is MetaStock is one of those tools. Like you can see it on the screen. It's been rated for 32 years in a row as the best software in its price category. That's a contest that's run by Stocks and Commodities magazine. And one of the things over the years, over the 30 years here that I've been here almost, that I find is it's a program that is something that you're not going to grow out of. It's not a program that they started a couple years ago that has just a couple indicators in it that are real memey right now. It's something that really has a lot of work into it in terms of systems and methodologies and a lot of depth. And it's a very inexpensive program. It's been rated it's $75 per month, but it can help you identify a lot of different things. And as a program that's been so established for such a long time, there's a lot of things that kind of can be missed as things get on. And I have a whole series of these particular videos where we talk about here's a hidden gem of MetaStock. Today, I'm going to just talk about some things you can use in MetaStock right out of the box that are going to be helpful for the trading that you're doing. Okay. And like I said, there's a whole series of this. When you talked about MetaStock, it really does have a lot of depth. It isn't just one guru's indicators and that kind of stuff. There's about 300 different methodologies, everything from MACD to candlesticks to stochastics. I've randomly picked, I wouldn't say randomly, I've picked my 3 of my favorite tools in MetaStock to kind of highlight for you today to kind of show you. And I do want to reiterate, we could do this all week, actually. So in any case, let's go ahead and get started. What I would like from you is a symbol. Give me a symbol or two that we can look at, type in symbols. It was really easy to kind of go in and kind of pick out some signals that look really good on the chart. But what I want from you is some signals that you want to look at in terms of what you want to look at. We'll come back to this slide in a second. The first thing, though, I want to do is kind of play with our dynamic trading tools that are built into MetaStock. So looking for some symbols. If you have some symbols, put them in the chat. And one of the symbols that we've been getting a lot of requests for today is NVIDIA. So the first thing I want to show you in terms of something that you can use right out of the box is called our dynamic trading tools. Okay. And if you ever want to apply this template to a chart, this is a template that's in MetaStock. You can just open the chart and you'll open it with the dynamic trading tools template. If you've already got a chart open, you can right click, you can go to apply template, and you can go to dynamic trading tools. There's a template in here. I actually put it together. It's called dynamic trading tools. You apply that to your chart and it'll give you the same kind of stuff that we're looking at. Okay. MES, you bet. Yeah, we'll look at that. Give me more symbols because we're going to actually do this. Then we're going to kind of switch into the very first system I ever traded money with. And then, so we need a few symbols from you. So type them in. Okay. Once you apply this template, what this is designed to do is it's designed to kind of look for a number of things in the chart. And it's really seeing a number of things. It's going to look for longer term trend lines and automatically draw them on the chart. You can see it's kind of found this longer term trend line that was kind of violated right here when the stock went sideways. Very good trend line up until where it was violated, which is usually how it works. If it has longer term or shorter term trend lines that are down, you'll see a down one here. This has actually kind of been holding the thing. So you've got a trend line that is here. And it's also going to identify support and resistance, right? Right here, you've got a short-term support. It moved it up just a little bit based on its algorithm that's built in here. You've got also resistance. You can see where we kind of came and broke through this shorter-term resistance here. We had a longer-term resistance. That's why this line is a little bit fatter. I'm going to just zoom out so you can kind of see where more of the lines are. Had this longer-term resistance that kind of formed here. We broke out on our way up. Okay. You also have shorter-term support and shorter-term resistance. These lines are all automatic. So once they start to form on a chart, you can see with NVIDIA, we've got support right here. I actually left it a little bit further out. You've got support that's forming right here. You've got resistance that's kind of a resistance trend line that's forming down here. Okay. So these are automatic, which means they're objective. They're based on the algorithm. You can go in and adjust them. You can modify them. You can change the percentage change that it's looking for. But a lot of times, we talked a little bit about scanning. Well, a little bit. I've been talking about the benefits of finding the right opportunities all the time. But a lot of times, what we want to find is we want to find when NVIDIA is actually breaking up above this channel, right? Once it starts to kind of break up above that channel, that's in theory where we should start to see some explosive moves. And the same thing goes with support and resistance as well. Like back here, when we had this break above this longer term resistance area, we had a pretty explosive move into this trend line here. Okay. So what I want to be able to do is I want to be able to find stocks when they're breaking out or when they've broke out. Okay. Either that could be up above resistance. It could be up above a trend line. It could be down below support and down below a trend line. What I want to be able to do is objectively find these, and they're hard to find because you have to come in here, you can draw them, but because these are actually kind of automatically, algorithmically, that's a big word, because they're automatically drawn in an objective fashion, I can actually use our scanning engine to find them. So we're going to play with that. Okay. All right. MES or ES. We've got some symbols. Thank you, Rob, Christina, Iqbal. I hope I said that right, Iqbal, or at least close. Richard, APP. Yeah, thank you. Okay, let me show you how. I actually ran this scan already. I'm going to open up the Explorer right here. The Explorer is what we call it's our scanner. We call it the Explorer. I don't know why they named it the Explorer, but I have a feeling that the person that named it really liked Indiana Jones. I don't know. I'm not sure. I had that question before though. Okay. I'm going to go ahead and turn off this TST. We're going to look for, I'll start with DT, and I'll just talk about the scans that are included in here. And again, one of the things I love about MetaStock is just the depths of tools. If you come down here, you can scan for just about anything. You can create your own scans. It's actually not hard to do. You don't have to be a programmer, but we'll play with mostly the built-in scans right now. If I go for DT, that stands for dynamic trend lines. I can go in and I can run a scan for breaks through longer term support or resistance by running this scan. I can look for breaks of shorter term resistance and support by running this scan. Longer term trend line breakouts, longer term shorter term trend line breakouts, and that would be either up or down. Okay. You can see that I've already ran I don't like to make you guys wait while I run a scan. It doesn't take very long, but I just like to show them to you instead. I ran this support and resistance earlier, again, against the S&P 500. There's a report that I can just show you. So I'm just going to show you the report. If I wanted to run it, what I would do is I'd say, okay, show me all the support and resistance breaks. And here you see the S&P 500 is selected. Now, they do have tons of different stuff you can run against. I want to spend a minute on that. So if I'm here in North America, last time I checked, I am. Salt Lake City is very much in North America. If I wanted to run something against North America, if I wanted to find these, I could run it against an exchange. We've got the NASDAQ here, the New York Stock Exchange. I could run it against all the exchange-traded funds right here. I could do all of the offshore stocks, etc. Right? There's literally, you can run it against anything you want. And unlike a lot of scanning solutions that are kind of out there that say, hey, we offer scanning, you're running a scan right now. So you can run a scan right before the close and see what's coming up, see if you have any signals you want to execute. And it's not going to be yesterday's data when they ran it on some server somewhere. Okay. I'm going to go ahead and open up the report. I'll right click on it. I'll go to report. And I'll just kind of explain what we're looking at here. So this was the longer term support and resistance. So if I open up any charts from the longer term support and resistance, they're going to be breaking through support and resistance on a longer term basis, or the big vertical lines, basically, right? Down here, we've got a break up, we've got a break down, and then when it broke up, how much volume it broke up with, okay, in a percentage basis, okay? So right here, if I look at DJ Horton, it broke 817 daily bars ago. That's going to be like 3 years ago. That's not something that's kind of going to be recent enough. What I want to go down and I probably want to find stuff that's broken through within the last few days, okay? When I'm looking for stocks that have broken out through a support and resistance area, I want to make sure that it stayed above that support or resistance area for a few bars. And so I'd probably be looking at 2 or 3 days here. So if we kind of wanted to kind of look at Kroger would have broken up through that bigger, longer term resistance area about 3 bars ago on 16% less than average volume. That's what that number means here, okay? Below that we have, I'm not sure what that is, SW, we'll call it. It broke 3 bars ago on 256% of the normal volume. Amcor had 3%, 3 bars ago, 97%. So if I kind of, let's just look at SW. This should have a recent breakout. I'm just going to change the chart right here, and we'll look at SW. Again, what I want to be able to do though, and you can see it right here. 3 bars ago, it was trading down below resistance. Now it's trading up above resistance. If this was a stock I wanted to buy, I always feel when I'm kind of coming into a stock that's breaking out of resistance, if I'm trading this as a resistance level, one of the core parts of technical analysis is now that I'm up above it, I'll treat it as a support level. So if this ever fails in the future, I can use it as a stop loss. Okay, so if I look kind of like the way this chart is looking, we've got, just to look at kind of some of the mechanics, we've got this shorter term trend line that's forming right here. We've got now what was resistance that we've broke down above, and now support that's forming right here. Not a bad stock. It looks like we're in an upward trend and we just broke through that longer term resistance. Am I going to recommend that you buy it? No, refer to the legal disclaimer that I read a few minutes ago. But that's how you can find stocks that are kind of breaking out. I'd say this is a really good example. You can see that the volume did indeed spike 250% or whatever the number was when we broke through it. So very, very popular mechanic is, can we find stocks that are breaking through support resistance at trend lines? This places them on the chart objectively for you. It also helps you find them. One of my favorite tools in MetaStock. So Maverick, thanks for PH. We'll take a look at that one too. Let's see, DLX. Okay. We have a lot of symbols. So, all right. Let me kind of lay some groundwork, and thank you for all the symbols. I'll do my best to kind of cover some of them. The next system I want to talk about, or the next methodology that I want to talk about, is actually a methodology that we've included in MetaStock since version like 10 or 11. It's exclusive to MetaStock. You can only find it in MetaStock. And there is a little bit of an origin story here in terms of where it came from that I like to tell. This is a trend following system. So like the trend is your friend until the bend at the end. A rising tide lifts all boats. It's a system that's designed to help you identify the trend. And it measures that trend in 3 different ways and gives you buy and sell signals based on 3 different ways. I think I have to, it's called the Armo, the Rahul Mohinder oscillator method. There's some reasons I like to show this to you, especially like if you're new to MetaStock. It's easy, it's objective, it employs solid money management, which I think is where a lot of traders actually fail. It works on a lot of time frames, and I can show it on just about it. I do what I do today. Give me some symbols that you want to look at. Let's take a look at your symbols and see how they perform on your symbols. And most of the time it works. It doesn't work on everything, but it works on a great deal of instruments. Okay. Generally, it works on the trendier of instruments, the stocks that are going up and down, because it is trend following, and it is a simple 3-step process. So if I do a pretty good job today of going through it, 10:30 or noon 30, depending on where you're at. If I do a pretty good job of showing you how to do it, you should be able to replicate it. And it is one of those things that's just included with MetaStock. So RMO stands for the Rahul Mohinder oscillator. I didn't have this on a slide, but I think it's important to give him credit. Rahul is actually a dealer of MetaStock. He runs a company called Viratech. Viratech has several offices in India, and he's one of our most longest running dealers. I think he started a year before I started. So he's been a partner of MetaStock and a valued partner for 30 years. He's going to come in and talk at either tomorrow morning or Thursday morning. We're definitely going to have him in here. His core business is he teaches people how to trade in India. He teaches them, he'll bring people in and he'll teach them how to trade the markets, that kind of stuff. And he does a really, really good job. The reason we included this with MetaStock, he was in our office a few years ago. It's been decades at this point. We were over at the Gateway office, which doesn't mean anything to you, but it does help me remember that it was at least 20, 25 years ago. And he's such a prolific dealer that we asked him to show us what he's doing. And the method that he showed us is the same method I'm going to show you right now, but it was called the Armo method. So it's a trend following method, and it's objective. So what we want to be able to do is we want to be able to identify trend and trade in the direction of trend. When I start to talk a little bit about trend, I'm going to call the primary trend the long-term trend, okay, or the major trend or whatever. So right now, what we want to be able to do if we're going to trade along with the trend is we want to be able to identify it, okay? And this is where we're going to get into the charts. So let me go back into MetaStock, and what I'm going to do is going to open up a chart, okay? And we're going to open up some of the charts. Silver is one we'll look at. Tesla, even though I hate Elon. Okay, let's just throw in a few of these. Again, I don't think I will have time. I also don't like to go over. So we'll look at SLV, MSFT.O. Thank you, Christina, for that one. APP, and I did promise MES. So, and then let's see, Maverick had PH out of this one. Okay. Now what I'm going to do is I'm going to apply the template, which is going to apply all the studies. When we redid the charting engine, we added some better looking templates that I'm going to use. So let's go down here to Armo. And I prefer the trade model shaded. So I'm going to go ahead and do this. There are quite a few different ones that you can use. It just kind of plays a little bit with kind of the display of the indicators. I'm going to go ahead and open up all of these charts. Hopefully I've got most of the symbols right. And we'll just kind of take a look at them real quick. Okay. Okay. And then we'll load data. Okay. All right. See, doesn't that look pretty? Don't these charts look pretty? We'll start with PH because it was Mavericks. And it was the last one I put into the chart. We do have the other symbols here. And I didn't get, I think you wanted MES, which I think we could do that. I think that's, I'm not sure exactly what that is. I think that might be the March S&P contract. We'll go ahead and do just the SPY because I think that'll work as well for you. We've got app, which is app.o. Just pick some of my symbols real quick as we go through here. MSFTO is correct. SLV is correct. Nice little signal on SLV here. Okay, and we've got Tesla. Okay, let me go ahead and we'll start with PH. PH is just where we're going to start. And I'm going to start, there's 3 steps here. Okay, 1, we're going to identify the primary, the prevailing trend, or the major trend, whatever you want to call it. Okay, and to do that, we're going to use Rahul's indicator that he conveniently named the Rahul Mohinder oscillator. This is designed to look at the long-term trend. Okay, when you're looking at it, it's very, very easy to read. Okay, if you're up above 0 as you are right here, you're going to be long-term bullish. Okay, if you're down below 0, which you were down here, you're long-term bearish. Okay, and the rule is very simple. We want to trade with the trend. So if we're up above 0, if our RMO is reading bullish, you can also see that it has a ribbon down here that says RMO bullish. If our RMO is reading bullish, we're allowed to go long. We're not allowed to go short. Okay. If we're bearish, as we were just for a little bit right here, we're allowed to go short, but we're not allowed to go long. Okay. That's the very first rule, the primary rule. And when we're looking at a chart of PH, I'm going to say that it's been bullish since about April of last year long term. 4/29/2025 approximately is where it went from bearish to bullish. And during that time, it started at 6. It's gone up about 40%. But during this whole time that we're looking at, we were not allowed to take short positions, but we're only allowed to take long positions. I'd say already, by trading in the direction of the trade and only taking long positions while it goes up 40% is going to help us put the odds in our favor. It's an argument we could argue, but I think that's going to be helpful for us. So step one, if we're in a bullish term, long term, we are not going to take short positions, okay? And right now, ever since about April, we're only looking long. Okay. That's step number one. Step number two, obviously, is we're going to look and identify, okay, just to reiterate what I just said, we identify the primary trend. If it's in a bullish zone, you're allowed to buy. If it's not a signal, you don't buy just because it goes from bullish to bearish, and you're not allowed to short. You don't trade against the trend. Okay. Step two is what we want to be able to do is identify the short-term trend. Okay. And to do that, I'm going to come back into my chart. We're going to talk a little bit about this. Right here, you see a couple of lines. You see a pink line and a blue line. I'm going to get rid of these because I won't be talking about those very much. They are important for stop placement, but I just, in the interest of time, we're not going to be talking about it. Underneath the blue line here, you're going to see a pink line. Okay. And you'll notice that when I compare the long-term trend to the pink line, the pink line is a lot more erratic. It's a lot more responsive to price. And the reason it's a lot more erratic is because we're not looking at the long-term trend anymore. What we've done is we're now looking at the short-term trend. Okay. So right here is our short-term trend. The pink line, ignore the blue line for now. When we read it the same way, for simplicity, Rahul has us read it the same way. If you're up above zero, then short term you're bullish and you're allowed to go long as long as it matches the overall primary trend. Okay, so right here we are allowed to go long. That right here you would not be allowed to go long because even though you're long term bullish, short term you're bearish. Okay, and that's easy to read. Like, okay, as long as we're up above step one, if we're bullish here, we're allowed to go long. If we're bullish short term, we're allowed to go short. Okay. We're just looking at the traffic lights now. Is the trend in our favor? Okay. The third thing that we want to look at is the signals. Okay. And before I do that, we're going to just go through this. This is so I can be thorough. Identify the primary trend on PH as bullish. We identify the short-term trend on PH as still bullish. That means that we're allowed to go long. Okay, we're still allowed to buy, we're still not allowed to short, and it's not a trigger. In the areas where your long-term does not match your short-term, okay, you can wait. You're allowed to wait. You can use the scanner to find opportunities. You might already be in a trade, which we'll kind of cover in a second, but we want to make sure that long-term we're bullish, short-term we're bullish, and that we have the momentum in our favor. Okay, and I'm going to talk about that next because we're going to talk about rule number 3. Okay, and that's to identify the trigger. Okay, I'm going to go back to our chart of PH right here, and you might have guessed already. If you did, congratulations. Long-term trend, short-term trend, medium-term trend. The blue line is the medium-term trend. Okay. With this one, it can be above zero, it can be below zero. What we're not really focused too much on that. For signal generation, what we're looking for is the momentum of the stock. Okay, and you'll notice when the short-term trend kind of pivots up and goes up above the medium-term. Well, when the short-term trend comes up above the medium-term trend, I'm going to show this where this happens on the chart right here. When that cross happens, it generates a buy signal. So if we're looking at PH just a couple of days ago, we have an active buy signal, right? Because you're long-term, you're bullish, short-term, you're bullish, and you have that change of momentum or that change of force. You have enough momentum that it brings your short-term trend back up above your medium-term trend, and that's why you get a buy signal on the chart. When you have a shift of momentum down, like right here, you get a sell signal, but we wouldn't take that sell signal because long-term we're bullish, and even short-term we're bullish. So until we get bearish, we're not going to be looking to take that signal. So in this one, you can ignore it. Okay. There's a lot of trade management rules that kind of come into play right here. So I'm going to kind of go back in time and I'll talk about kind of how to kind of move your stops and how Rahul recommends that you trade your stops. But these are the core things that you want to pay attention to. One, are you bullish long-term? Are you bullish short-term? And do you have a recent buy signal like we had right here? Okay. Let's go ahead and go back here, though. I'm going to start right here where we went from bullish to bearish. And I'm going to kind of just drill into this chart. I'm going to scroll into it. Not quite that far. Got a little out of hand here. But let's just kind of come in here where we can kind of focus on the chart. I'm going to kind of move these indicators, make them a little bit smaller just so we can focus on the price activity. Okay. Let's start right here just because this is where the shift of momentum happened. Okay. We could have been structured into a trade or even maybe taken a short trade here. I'm going to start here though, just because we can kind of go in and talk about how we can kind of look at a trade. If we're right here on, this is April 22nd of last year, and we're looking at this chart, we're bearish long-term, we're bearish short-term. So if we're not in a position here, we are going to totally ignore this trade until we get bullish short-term and bullish long-term. Like I was saying before, we don't want to trade against a trend. So we might be keeping an eye on PH, and it might get a little bit stronger over the course of the next couple of days. Our short-term trend, you'll notice, kind of comes up above zero. This is coincidentally why the candles or the bars start to paint blue as opposed to painting them red. Okay, it's telling you the short-term straight. Okay, so if I'm looking at it here, we had that change of momentum a couple days ago, and we're bullish short-term, right? But we're still bearish long-term, so we're still going to hold. Okay, what we're allowed to do is wait, and it takes several days. I'm going to call it right here, where we have that inflection where we finally go bullish on PH. Okay, and it's not until all of those actually line up that we look to place a trade. Okay, so if I'm looking at it here right now, this is 8 days later. We've had our shift of momentum, our shift of force. We've had a nice little move up. We've gotten bullish long-term and we've got bullish short-term, and now we can structure a trade. Okay. Now I want to make an important, what I feel like is an important point. Okay. This is a trend following system. We're never going to buy at the bottom and sell at the exact top. Okay. What we're looking to is identify the trend and take good chunks and good pieces out of that trend. Okay. There's a couple thoughts that I have when I start to talk about kind of not getting in the very bottom and not getting in at the very top. One of them is Robert Dill, a good friend of ours. He passed a few years ago, but we'd always do traveling with him, and he'd always say, bulls will make money, bears will make money, pigs will get slaughtered. Okay. What we're looking for is to identify where that trend happens. And when that trend starts to kick in, we hope that trend lasts a long time so that we can take good chunks of it. There's another saying that came to mind. It was Bill O'Neill. And I'm going to try and remember the quote as best as I can. But he said something to the effect that some people like to buy low and sell high. I want to buy high and sell higher. He'd be looking at stuff that was really kind of moving because they'd kind of get into an area that lacked support and resistance. So right now I'm going to structure a trade, okay? Because everything lines up on this day, okay? When I structure a trade, I'm going to kind of be very specific about the rules that Rahul teaches, okay? Exactly this line is where we're going to be looking at the trade. What Rahul says to do is look at the line, look at the highs. You can look at the high of the day and the high of the day before. This is the higher value, and I'll buy it as long as it penetrates that high, okay? You could go a little bit more higher than that because like we did have this wick up here where it turned around. You could kind of go a little higher than that if you wanted to. For me, I'm going to look at kind of the last two bars. This is where I'm going to kind of put in my entry level. Okay. If we cross this level is 609.43, I can go long. Okay. The other thing that Rahul was really specific about is a stop loss. Okay. And so what he'll generally say to do is he'll say, take a look at the lows. Again, this is the bar we're looking at. You look at the low of this bar and the bar before, and you could put a stop loss right below that value. He also says you could look for a recent support area, okay, which is kind of what I do. What I typically look for to do is I look to find what's called a pivot low. And if you don't know what a pivot low is simply a low that's surrounded by two higher lows. So if you look at the low of this bar here, okay, this low is higher, this low is higher, this is a pivot low, okay? So in my case, if we're looking at a low right here, I would actually look back to this most recent pivot low, and I'd put my stop right below this, okay? We don't know we're going to cross up and form a buy signal yet, okay? If we do cross up and we get a buy signal, it's because we're going to be entering at about 609 and whatever change that was, 609, okay? And I'll put XX for change because I don't, actually it was 609 if you're 43, okay? If I go long, I know that I'm going to put a stop loss at 574. Okay, I'll put a number here too. Okay, 574 dot 23, I think it was, but XX is fine. Okay. So now I know where I'm going to get in. Before I enter that trade, I know where I'm going to get out. And I know, stocks gap. There is gap risk every time you hold a stock overnight or for any period of time. We might gap down and end up getting out of a position. It happens to me all the time where I was like, oh, that gap was hard. But no, in a normal kind of scenario, if my entry is at 609, my stop loss is at 574. I know where that risk is. I know exactly kind of where my risk is. And I think it's important to know this before you go in terms of where you're going to get out, because I have an idea of where my risk is, but I'm also not making a decision while I'm in the trade. I know where this is. I treat it as a business. I get out. I also like the fact that we're looking at where support kind of formed on this chart and putting it down below that, because I don't think this market cares how much you can afford to lose. What we want to do is kind of put ourselves in a position where we can win. Now, if I said, okay, well, I'm risking about 35 points on a $600 stock, that might be too much. I was going to try and do the math, but somebody do the math for me in the chat. If that's too much for you, you can always step out of that trade and take a different trade. But we do know what that risk is, and we have made it in advance, so we're not making decisions based on emotions. Okay. All right, so we do end up going up into this trade. We probably get in at the open price, which is 614.43, and the stock again starts to go up. Okay, so let's kind of fast forward a little bit. We'll talk about the important parts of this. We have a nice little run up. I love it when stocks go up when I'm in the trade, right? It comes down here, you have that shift of momentum because things start to get sideways. The market doesn't necessarily always go up straight. It could take a couple steps back, forward and maybe a step back. A couple steps forward, a couple steps back. That's natural. That's how the market kind of operates, right? When that step back happens, though, you're going to have a shift of momentum, which is going to give you that shift of force. Here you get a sell signal. Okay. Now, if I'm looking at this, we hypothetically bought this just a couple of days ago at 609XX. I'm still bullish long term. I'm still bullish short term. And as long as that kind of stays in the normal fray of things, I'm going to kind of keep an eye on this because we had that shift of momentum and I don't want it to kind of fall apart on me. But as long as we're bullish long term and bullish short term, we're going to go ahead and stay in this trade. Okay. This turns to be a little bit of a sideways. We have a little bit of our shift of momentum, our shift of force right here. And here we get an opportunity to do one of a couple of things. There's two things that Rahul says. When we are in a long trade and we get another shift of momentum to the upside, there's two things Rahul says you can do. There's one he says you should do, and there's one he says you can do. Okay. The should is the not optional part of that. Okay. The should, what you should do is you should go in. You've had a nice move up. The market has given you a couple steps, let's call it. We should lock in some of that profit. Okay. And so what you should do, is you should lock in a new stop loss. Okay. And if I kind of grab my vertical tool here, we could look at the last support or the last pivot low, which is the most recent pivot low would be right here. Okay. Or we could even say, well, I want to be a little bit more, I want to lock in that profit, but we stopped here earlier So I'm going to set that as my floor. Either way, you want to set in a floor. Okay. And either way, we probably wouldn't have stopped out right here because we never closed below this level. Okay. We came down, we certainly tested it, and then, but we didn't get out of it yet. If we did get out of it, we could always buy back in. Wise man once told me, his name was Steve Bigelow, you can always buy back in if you're wrong. Okay. All right. So here we have that shift of momentum to the downside. Let's start right here. We put our stop up. We moved our stop loss up. Here we had a sell signal come back in because we had that shift of momentum. We got a little bit of weakness, but we held our long-term bullish trend. Okay. So we could go ahead and hold on. Okay. If we did end up stopping here, we could buy here because you have a buy signal with bullish and bullish. Okay. Here you'd move your stop, but I think the level where we stopped at before is exactly where we drew it before. So I'd probably put my stop level at exactly the same point. We have a nice little move up. Here we have that shift of momentum. It doesn't pull back very much. Here we have another buy signal, and we just rinse and repeat. We move up our stop. We have a sell signal. We have a buy signal. We move up our stop. Okay. We have a sell signal. We have a buy signal. We move up our stop. And here we would have definitely stopped out. Okay. Here we could have structured another trade. We might have gotten in for a small loss. But again, even if we got out for a small loss, we're still going to be restructuring a trade here and just moving it all up. It's not very hard. It's not very complicated. It's also not very sexy. The thing I love about this is, we are taking nice chunks of this trend. We're not afraid to get out of the stock because we can always buy back in if we're right. And what we're looking for is we're looking to trade in the direction of the trend. Okay. So if we bought in at 609XX, let's say that we stopped out right here at 741. That's a fairly good long win, right? We stopped out here, but then we bought back in here and we've rode it up again. That's as simple as it works. It's very, very straightforward. I'm glancing at the time because I know I'm running out now. So from a perspective of that, though, that's very, very straightforward. If we wanted to look at the silver chart, okay, silver's had a massive run up. We've been bullish on silver long term since all the way back here. And I scrolled down a little bit more than I meant to. Okay, since all the way back here, price has actually skyrocketed. We're still bullish long term. We're still bullish short term. I do feel like we're going to kind of flatten out a little bit on silver. We don't take a 30% fall, and there has to be a little bit of restructuring around things. So from that perspective, though, from silver, we would have done just fine following silver with this methodology. A couple of things that kind of come into play if you use this methodology. I'd go and find one of the tutorials that we have on our YouTube channel, which Rahul does, because what he'll also use, if you start to get in these escalating moves right here where we move parabolic, he'll use this exit swing signal as an exit. So if we come down below the red line and kind of come back over it, he'll move his stop. So you would have moved your stop right here, probably about right here, and stopped out this day instead of way down here. So I don't cover that rule any much, but it is important to understand it. So I don't think this will work that well on Tesla. Let's take a look. Tesla's just been a little bit sideways. We were bullish here to about here. And when Tesla has a really, really good run, like we had a really good run before the election, you can kind of see that it was bullish most of the run up here, and bearish most of the run down. I don't think Tesla is the best one to trade this with, but there you go. It doesn't work on every stock. Okay. Microsoft, you can kind of see where you're bullish. Nice big run up. If we're just taking long trades on this run up that we had with Microsoft from here to here, that'd be helpful. It's been bearish. Okay, so if it's been bearish from about, I'm gonna call it 498 to about 396 for the last 100 points that it's trailed down. And again, if we're trading in the direction of our trend, we're putting the odds in our favor. Okay, we're not going to win every trade, but what we want to do is have a solid money management game plan. So All right. Let's see. Cool. I don't see any new questions. I do want to say thank you to Greg for all of the help these days. Okay. We didn't talk about Haguro, and we don't have time to. Haguro is really cool, though. Maybe we'll do it a little bit later if we have an opportunity. It is something that I put together based on the work of Siki Shimzu and Gary Burton, a good friend of mine in Australia. I met him down in Australia when I was there at a trade show. We won't talk about this. It is cool, though. In fact, I love it. One of the things I really just want to stress here, we talked a little bit about breakouts. So that was a great way to find breakouts with the trades. We talked a little bit about the Armo system. It's been probably one of the most famous trend following systems in MetaStock. But I want to say, again, it's one of about 300 different methodologies. You can go in there and you can test them. You can see how well they work. You can identify something that works well for you. And that's one of the things I love most about MetaStock. It's such a well-established platform. It just has hundreds and hundreds of different methodologies. If you start using MetaStock and learn how to use it, you're never going to outgrow it. Not only can you kind of go in and use different methodologies, you can put together your own, you can test your own, do your own explorations. There's really a reason that it's been rated #1 in its price category for like 32 years in a row. Okay, I've highlighted a few of the things that I really like in MetaStock here as bonus offers. I want to be clear though that these actually ship as part of the program, and I could go on for days with this. I could talk about things that add value to the MetaStock program, but here are some of my favorites. There's a methodology in MetaStock called the Ichimoku Master Methodology. If you're familiar with the Ichimoku Kinko Hui indicator, this will help you scan for the primary and secondary buy signals. If you're not familiar with it, it'll explain it to you. It'll say, hey, here's what the cloud is, here's what it's doing, here's how you get the buy signals, here's how you identify support and resistance both now and into the future, here's how you identify trend. It's something that's included with MetaStock, and it's like one of those things that you can just use. Another one that we have is a gap identification system. Gaps are a big insight into the changes that are made in investor sentiment. If you have a big gap in a stock, somebody's expecting that stock to change in price. Something is driving that sentiment. And it's a lot of people stay away from gaps, but that's a big clue that the sentiment has shifted. If you have a big, huge gap on a chart, this will help you identify those stocks that are kind of moving. It'll help you understand where they're moving. It'll volume verify them. Is it a gap that happened on volume? And very, very simple to identify. You can scan for gaps. There's a system in here that's called the Michael Murmer ETS. It's very popular. I would recommend you play with it. We have the Jake Bernstein indicators, the expansion contraction. It's included. I mean, or we could go on and on and on and on like this. I've been working at MetaStock for 30 years next year. I'm not going anywhere. So it's definitely going to be 30 years. It's just not quite yet. I have customers that have been using MetaStock since I sold them decades ago. We have customers that have, and a lot of our customers, like our employees, have been with us for decades. And I think the reason that they've been with us for decades is like the reason they keep paying for the MetaStock service is it's not a lot of money, but it helps them identify trades. It helps them trade more profitably, helps them do the things that they want to do. And as somebody that's been using MetaStock for decades myself, I'll tell you the biggest thing that I use it for every day is scanning. Okay, but it doesn't matter where you're at on that process. If you're kind of brand new to trading, you can test ideas. The commentary will explain why those methodologies are giving you a buy and sell signal. You can test them in the tester and see if they work. And it's a great tool for you to understand why and what you should be focused on. If I'm a new trader and I don't know what I'm trading, there's hundreds of indicators in MetaStock. How do I focus on the ones that work best? Well, test them and find out what works best. So as part of your purchase of MetaStock or your subscription to MetaStock, not only are we going to give you 2 free months, we're going to give you what we call a white glove installation service. During that 2-hour appointment block, one of our support reps will sit down with you. They'll show you around the software. They'll answer any questions you have. If your main interest is scanning, they'll help you put a scan together. They'll show you how that works. They will go through and guide you. The other thing I love about MetaStock, and I say this a lot, is the people. We actually keep more people in our support team than we keep in our sales and marketing team. If you put them together, there's still more support reps. If you ever have a question, you can call us, you can chat with us. And I just had a message from somebody today. No, actually, it was yesterday. That was talking about the support service that they'd receive and how much they love our team over there. I love them too. It's not uncommon for the support team to get 100% in the rankings. And I don't know when the last time I called a support company for a software, but I don't know that I was necessarily too happy either. So if you have any questions ever, you can give them a call, you can chat with them, you can phone them, you can email them. They'll answer your questions. You have unlimited access to that support. We have two versions of MetaStock. We have the real-time version, and we have the delayed charts version. The real-time version is full real-time. It starts at about $210 a month, and it also includes, in addition to MetaStock, everything we've been showing you throughout the week, it does include a institutional quality newsfeed that's powered by Reuters. When they developed the newsfeed, just to kind of give you some numbers, they spent $1 billion on it. It's the same type of news, the same type of news service that you would subscribe if you're literally a hedge fund or literally an institution. The software and the data that you get in MetaStock is some of the best around. And that'll start at about $210. We do also have a DC version, which doesn't include the news, but it's a fully updating, delayed daily chart. You can also do weekly, monthly, quarterly, yearly. You can test. You can run the scans on it. Hey, Dan, I see you.
Hey, what's up, my friend?
Not much. I'll be right with you.
Okay, I'll turn my video off.
All right. So for the DC version, it's $75 a month. Again, if you pay for a month, we'll give you the second and third month for free. I'm not super good at math, but I'm going to say that's about $25 per month. If at the end of that 3 months, if you've sat with our support team, it doesn't help you identify better trades, it doesn't add something, doesn't pay for itself with $75 a month at better, you can just cancel it. There's no requirement that you keep using it. But we're going to invest in you in that time. We're going to sit down with you. We're going to answer any questions you have. We're going to give you access to the training. We're going to give you access to that support desk. $25 a month. You'll be running until May 17th if you sign that up today for $75. And then if it's something that's helpful for you, the risk reward is amazing. So you can sign up for that. You can give us a call, 800-882-3040. You can go to metastock.com/conf-promo. You can sign up that way. And you can go to metastock.com/sales-chat if you've got to get more information. You know, I know we're going to be talking about MetaStock for about a week, but we're going to focus on MetaStock maybe 3 hours this week. Like, we could talk about it all week. Like, there is so much in here that you can do. What I hope to be able to do is give you some things you can use right out of the box that instantly help you with your trading. And so that was the goal of today's class. So give it a go. Metastock.com/conf-promo, metastock.com/sales-chat, 800-882-3040. Whew, okay. As we're kind of moving on, Greg, I'm going to call on you to help me. Oh, okay. I had to find my laptop real quick because I have my list on my laptop. Okay. Normally, I'm a little bit more structured to do this, but bear with me. It's worth it. We're going to give away a prize.
Okay.
It might take me a second to find it.
Okay. That's okay. While you're looking for that, I would like to tell you that was a fantastic presentation. And also mention to people, if you want to be registered to win these hourly prizes that we're giving away, if you're in GoToWebinar, you probably don't need to do that because you've already registered, and that's why you're in GoToWebinar. If you're in YouTube and you haven't registered, go to metastock.com and click on the banner at top, and then just go there and register. We just need your name, address, and name, address, and phone.
That's going to come
anyway. Very simple, and you're good to go. You only need to do it once. Doing it more than once will not help your chances of winning. And Jeff, have you figured out what you're doing?
Yeah, we are going to give away John Seville's Acorn Smart Search System. This has lifetime access to his indicator. It works on a number of different platforms. I just need to use the right mouse, actually, because now I have two computers. So lifetime access. It has a quick start course. It's a value of about $997.
Wow.
And we're going to give away one of them. I tell you, I said earlier that we were giving away more than $25,000 worth of prizes this week.
I think you meant more than 25 million.
No, well, these are just the prizes that have been donated by our partners, and the value of them are 25 grand, 25,705.
You can say that, but I say priceless.
Okay.
Can you really put a value on learning and financial gain? Yes, you can't put a price on financial gain, specifically the amount that you gained. Okay, moving on.
All right. 1 in 59.91. Make sure you register. If you're watching us on YouTube, register. That way you can be part of the prizes.
Okay, that number is 3,452. 3452.
That sounds like a number you made up. This Edward S. in Malaysia won that one.
Do you want me to turn the camera on and show you where Google random generator?
No, I don't think that's necessary. We'll take your word on it. So,
all right.
Congratulations. As soon as I take a deep breath and get a water, I will send that winning information over to Acorn. And if you're Edward S. in Malaysia and you're watching, well, you should probably go to sleep and watch the recordings. But congratulations. Let us know in the chat.
Before you get a breath, you need to introduce Dan Passarelli, our next.
I think that's a good idea. Before we do that, I would like to encourage everybody to join the Traders Forum. You can do it at thetradersforum.com. There's a great community of traders. A lot of you can make friends with a lot of people. I certainly have. Thetradersforum.com. We meet a couple of times a week. Sometimes we'll do lessons on indicators. We're always chatting about the markets when they're open. And we do podcasts. We bring in guest experts. And all of that stuff is free. There's also tons of learning materials that are up there for free. And you can also join for free. Thetradersforum.com. So our next guest is Dan Passarelli. Dan's a good friend of mine. I call him the mad scientist of options trading. He's going to talk about what I have actually coined for him. And you can use this if you want, Dan. I've coined it the momentum resumption system. Ooh. I renamed it because the momentum resumption method, MRM.
Ooh, I like it.
It's free to use if you want it.
All right.
All right. So, Dan, we can see it. Actually, all you have to do is hit the share button. I don't have to even give you control anymore. You can just take it.
Well, I'm a trader. I don't like to share.
I disagree. You share with us all of your good ideas. All right. I can see you. I can hear you. I'm going to get out of the way. Your turn. Go.
All right, friends. How are you feeling today? So I am Dan Passarelli, and I'm really glad to be with you right here, right now in this class. And I'm actually really honored to have this opportunity to share some of this stuff with you. This is the easiest and most straightforward system that we have ever created for you here at Market Taker Mentoring. And man, I am super excited to share it with you. I actually do like to share. Before we get started, I need to point out options are not for everyone. Please read characteristics and risks of standardized options before trading. Get a copy of that by emailing investorservices@theocc.com. Don't trade with money you're not prepared to lose. And everything we're doing here is providing generalized information, not specific to your situation. All right, here's my promise to you. I'm going to share with you how to easily spot high profit momentum trades opportunities using stocks, ETFs, options, futures, or even Forex, so that your trading is completely simplified using this tested trading system that we've created for our traders that hundreds of our students have used to go from that demoralized feeling we've all felt to that feeling of satisfaction and self-assurance that we all know is possible. At the end of this session, I will share how you can take the next step so that you can get started getting immediate results. Is that a fair deal? Hit that questions box for me. Is that a pretty fair deal? That sounds pretty good. You're liking what you're hearing? Hit that questions box for me and give me a big old yes, please. I would appreciate that. And don't be afraid to participate here. Patricia, good to see you here today. What else? All right. Yeah, fair deal, fair deal. Good, 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 good. I like it. I like what I'm hearing here. Okay, now in order for you to get the most out of this, I ask that throughout this training and afterwards, make this about you, right? Like shut the door to the room you're in, zone into this. This is very, very important stuff. And I'm going to hold all questions until the end, just so that we don't get off track. So if you have a question, write it down, save it for later. I will get to it. All right, well, let's keep it positive. Let's have some fun, and let's talk momentum resumption. This gives you an idea of who I am, what I do, and some of the organizations that I've worked with. I wrote 2 of the most popular books on option trading, worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world too. And I get to be on TV a lot, which is kind of fun. I got my start trading down on the floor of the Chicago Board Options Exchange. I traded for years. These pictures, they literally scan 30 years of me being involved with the trading floor. Do you believe that? Isn't that weird? I traded some huge stocks like the Ford Motor Company options, AT&T options, Carnival Cruise Line options, and traded some of the little ones that you've never heard of. And here's the big secret. The little stocks no one ever heard of is where you can make the best money, when you know about opportunities that no one else does. Now I want to jump into a discovery I made. Does anyone know what this formula is? No? Good, because we're not going to talk about it ever again for the rest of our lives. We don't need to, and here's why. I have an extensive background in trading. I've been doing it for 30 years or something. But the fact is, I am no mathematical genius. Would it be okay if I share a story with you about when I was in high school, which is what this picture is from? Oh my goodness. No wonder I couldn't get a girlfriend in high school. Oh my goodness. Would it be okay if I share a personal story with you? Hit that questions box. Give me a yes or a no. Okay. Then, when I was a kid, I was a bit of a troublemaker sometimes. I was. I got good grades. I didn't really have to study, usually. But this is a story about a time that I should have studied. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few of the other kids, we would play poker. That's all we did that class, all hour long. And you know what? I made a lot of money in that class. But the problem is, with math lessons, it builds. If you miss something this week, well, you're lost next week. And you're hopeless the week after that. So needless to say, I did not learn a lot of advanced algebra concepts that year. I crammed, I passed, but I didn't learn much. Now fast forward to freshman year of college. I had to take an algebra refresher. Oh, embarrassing. I always prided myself in being, smart. And algebra is not that tough, but I had to take a refresher. Oh. Now, one thing you may not know about me is I was the first Passarelli to graduate college. And I almost wasn't. Here's where the story gets interesting. Now, I'm a competitive kind of guy, mind you. So my sophomore year of college, my cousin, Michael Passarelli, who was 1 year younger than me, was in my calculus class. Calculus, oh my gosh. I was very intimidated by calculus. I was afraid that I would struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin would be a credit ahead of me, and he probably didn't have to take that extra algebra class, maybe 2 credits ahead of me, and just maybe he would end up graduating before me. Let me tell you something. There was absolutely no chance that I was going to let that happen. So I put on my A game. I was ready to work as hard as I could to win, which I guess there are probably some of you here who can relate to that, right? But there was one other factor that came into play that was a saving grace. I had a really great teacher, one that I could relate to. He made it easy for me to learn, and I did. I actually ended up acing calculus and had the honor of being the first in my extended family to graduate college. Thank you very much. Now, like I said, I'm no mathematical genius by nature or anything, but I've spent a lot of time in options, again, about 33 years, and I do whatever it takes also to create great trading systems for myself and for you. So I studied the math of things like the relative strength index to see how they tick, and I realized there are some hidden keys within these equations that can kind of predict when momentum is most likely to continue. So now I'm going to share that hack with you. The concept of RSI, the relative strength index, is its up strength versus down strength. And there's a few different ways you can use it. Too much up strength can lead to overbought, which can lead to a reversal. So there's a hack. There's certain patterns that can prevent momentum from burning out and can lead to a continuation. The red knockout is a momentum trading strategy that can lead to outsized profits. It is a simple 4-part chart pattern, very easy to identify, and the profit targets are very easily set up too. They're baked right into the system. We can use the red knockout with options, stocks, ETFs, indexes, futures, even Forex. Let me start out by listing the steps in the red knockout system, and then we'll zoom in and go through some examples. Now, this is important. Write this down. Step 1 is the setup candles. That's 3 or more green candles that make up what I call the green run. Then comes the red knockout, or the RKO candle. That is a red candle with a smaller body than each of the 3 preceding green candles. Then comes the trigger candle. That would be a green candle that takes out the high of the red candle, ideally on higher volume too. And then finally is the confirmation candle. That is a candle that opens above the high of the RKO candle, and that one signals trade entry. If you get each of these 4 components on the chart in consecutive order, you have identified a red knockout. So let's break the strategy down step by step and go through how it works. This is the setup candles right here. So we have 3 green candles in a row. Each one is a higher closing price than the previous one. 3 up-day green candles. Now wait a minute. Aren't they green if they close higher than yesterday's close? I mean, they're up on the day, doesn't that, or they're up from yesterday's close, doesn't that mean green? No, they're 2 different things. Green candle means it's up from today's open. You can have a green candle that's a losing day. Trying to see if there's one even on here. Yeah, like here's one, right? It closed at this price the previous day, and it closed lower the next day. So it actually was down from yesterday's close, but it was up from the open. So here we have 3 green up day candles. Okay, do we see a red knockout? Yeah, right there. It's a red candle, so that means it's down from today's open. And it can be an up day or a down day. It doesn't matter. But it's down from today's open, which gives it a little bit of a breather. And it's got a smaller body than each of the 3 preceding green candles. Okay, that's what this looks like on the chart. If the pattern continues, we get the trigger candle, which is this, and the trigger candle, what? It takes out the high of the red candle. What does that even mean? Well, that just means that at some point during the day, it trades higher than the high of the wick of the red candle, which did. And then if the pattern continues playing out and completes itself, then we get this, which is the confirmation candle. As long as that opens anywhere above the high of the red candle, it is go time. Yep. I just saw that, Patricia. Yes, it is definitely about pattern recognition, for sure. All right. Patricia, you're a card counter? Holy cow. Okay, so this is American Express Company, AXP. If we have a red knockout setup anywhere, and this is from a while ago, this is not like a trade idea or anything. I just want you to see what this looks like. If we have a red knockout setup, what's the first step that we look for? Huh? What is the first step that we look for? Do you see it? It's the green run. We need 3 or more green setup candles, and we can see them, right? Here's the first one. Here's the second one. Okay, does the pattern continue? Because it might not. Well, yes, it does, because there is the red knockout candle. Okay, how do we know it's a red knockout candle? It's got a smaller body than each of the 3 preceding green candles, right? Very easy to identify. You just eyeball it, boom, there it is. This is one that happens to be down from yesterday's close, could be up or could be down, doesn't matter, but it's red because it's down from today's open. Step 3 is the trigger candle. And that is shown by this yellow arrow right here. And yes, we got that. We call this the trigger candle because it's sort of like when a marksman is all set to fire upon a target, like you see in the movies, John Wick or whatever. You start out when they're lining it up, they got their finger straight. Watch this in the movies, you'll see this. And then when they're ready to get on the target, they put their finger on the trigger. Now they're ready. Now they're ready, about to take the shot. But we don't take the shot until we get the confirmation candle, unless and until we get the confirmation candle. And in this case, we did get it. This opened above the high of the red candle. So we get a green arrow. Green means go, so fire away. Now, let's slow it down a little bit. Let's go over the roles of each of the 4 components of this setup. First, there are the setup candles that make up the green run. Now, why does that matter? Why does that matter? Because we're building momentum, okay? We're building momentum. Now, 3 green update candles in a row is not like the most amazing thing you've ever seen in your life, but it's the start. It's got to start that way. We've got to start out with, okay, we've got some up strength going. But what's one thing we know? Well, the one thing we know is that if the up strength just keeps continuing relentlessly and unchecked, it will eventually burn itself out and the market will retrace. So we need to see the red knockout candle. This one does what? This one basically says, okay, we're getting a little bit of a breather, little break on the up strength so it doesn't burn itself out. But you know what? It also gives people who didn't get in early, didn't get in on the move that's already established in the green run, it gives them a chance to get in. And if they do, enough people do the next day, that's going to continue driving the stock higher and we're going to get the trigger candle. And then if the momentum's really continuing, we'll get a confirmation candle and then it's 1, 2, 3, go. Go time. Now let's run through just several, these are historical examples again, just because I want you to be able to see this on a chart immediately and understand how it might play out in real life so that when you see some of these, you're able to trade them. I want to make this so easy for you. This is Erie Indemnity. Now, is there an RKO set up here on this chart anywhere? Do you see one? How about right there's the first green candle and there's the 1, 2, 3, 4, 5 green candle up day. There's a 5 candle green run. Now, next, if the pattern continues, we get a red knockout candle. So that one, this is actually an up day from yesterday's close, but it's down from the open. I love the little doji ones. Dojis mean uncertainty, or dojis mean that the buyers and the sellers were really battling each other. And if the sellers can't push it down, but the buyers haven't pushed it up, and especially if it's on high volume, then if that gives people a chance to say, hey, I'm jumping back in on this move. And that's where the momentum can start continuing. That's the trigger. We're about ready to roll. And then it's the confirmation trade entry. And if we follow our profit target rules, which I want to go over in just a second, we take it off there where that green bar is. Okay, another historical example. I bet you can spot this puppy on this one. You see the green run anywhere? How about there's the first candle, there's a second candle, boom, boom, boom. This one has a 3 setup candles for the green run. Again, we can have 3 or more, but we start the green run here and we end the green run here. Next comes our red knockout candle. Now, maybe there's not a red knockout candle. Maybe it doesn't transpire, and that's okay. Then we just don't trade this. Why did I name this the red knockout? Well, because that candle, I mean, it's the most important one in a lot of ways, but it doesn't matter in a lot of ways too. The only reason why it matters is because it helps slow the momentum so that the trade doesn't burn itself out. It takes a little teeny weeny tiny breather. So that candle basically just gets knocked out of the pattern, right? Then after that mini pullback and the red candle gets knocked out, this is what we get, the trigger candle. So now it's like, okay, game on. It's like when you're playing street hockey and you know, you're playing, you're getting good momentum, then crap, there's a car. Okay, wait, time out. You got to move the goals, and then the car goes by, and now it's okay, baby, game back on. Yeah, let's do this thing. And then, of course, we get the trade entry candle, or it's called the confirmation candle. And what is it? 1, 2, 3, go, right? But how do we know where to set the profit target? Oh, I'm glad you asked. It's right there. I'm going to explain to you how to do it in just a second. Okay. So another example. If we look here and here, those arrows just popped up. We have a 3 setup candle green run that is followed by an RKO candle, a classic one. Why is it classic? It's got a smaller range than each of the 3 green candles. It's just a little mini pullback. It is engulfed by the previous green candle, which is kind of nice too. There are a few things that kind of help to make this pattern work a little better, and that's one of them. If we have time, I'll share some of the other little tidbits, or at least where you can learn about some of the little tidbits. So, okay, then we get the trigger candle, game back on, and then we get the trade entry. What I like about this example is that it's only an $11 stock, because I know that some of you don't trade options, but it's an $11 stock. You don't need options on this. You know, if this was a $500 stock, it might be easier to leverage it by buying calls, easier to afford it by buying calls. But it's an $11 stock. You don't need options. You can just go in and buy the share. Okay, the RKO indicator works in all time frames. It's very versatile for day traders, swing traders, short-term traders, even long-term investors. When I worked on improving what criteria to use for the setup candles, the red knockout candles, trigger candles, and confirmation candles, I spent a lot of time on it. It was a really great and humbling experience. And it reminded me of my old boss, Steve Fawcett. You see 2 people here, right? The one, of course, is who? Who's the one on the left? Anybody know who the one on the left is? Huh? Sir Richard Branson. Yeah, Sir Richard Branson. And the other one is Steve Fawcett. Now, for those of you who don't know Steve Fawcett, the late Steve Fawcett, he was not only a famous trader, but also a famous adventurer. He held many records. He attempted to set one flying around the world in a hot air balloon with Sir Richard Branson. Now, I remember one day, Steve took all of his traders out to dinner. And there were about 45 of us, as I recall. And after dinner, you know, he's the host. He made a toast, host with the most. And he asked us a question. He said, "Why do you trade?" And it was intended to get us to think a little bit. Because the answer really is never, oh, it's about money. What's the real reason? I mean, what is money? Money's pieces of paper or electrons. That's all they are. What do you do with that money? Why do you trade? Because as floor traders, standing all day, my back hurt, my feet hurt, and people yelling in your ear all day, they get their spit on you when they yell. Why do you trade? What is your real reason? Is it to have more freedom to take time off and play golf? Or is it to secure your retirement? Put your kids through college, your grandkids through college? And that stuck with me. So I ask you, do me a favor. I'm taking a poll here. Hit that questions box. What is your reason for trading? Hit that. Hit it. Hit that questions box. What is your reason for trading? Freedom. Choices of your own direction. I like it. I like it, Patricia. I like it. I like it. You're thinking. Because you know what? He didn't ask us that because he was just didn't have anything else to say. Self-actualization and mastery. Maureen, that's awesome. That is so awesome. Ro says financial independence. Wow, you guys have great answers. Direction and cheap, no man in front of me, like the construction business. I like it. I like it. I like it. I like it. I love it. Yeah, because when you can visualize what you can do, what trading gets you, psychologically, I think it can make you trade better. So anyway, Steve was a great mentor. Without having him in my life coaching me, I could not have become the trader that I am today. But there is one thing Steve was known for saying. He said, I am still learning. When I met Steve, he was a gazillionaire, a super successful trader, but he was always tweaking his process, always learning, always moving forward, making his trading better for himself and his traders. And I'm thankful for that because I was one of his traders. He kept improving. So I also started the process of improving the exit point. And here's how it works. Setting the price targets for exits is really easy. Here's how we do it. We're looking for a repeat of the green run. Like, think of the red knockout candle as like the fulcrum of a teeter-totter. We get this side, and it went up by this much. And then after the red knockout, we're looking for it to go up by that much again. So we take the low of the first green setup candle and subtract that from the high of the last green setup candle. And we take that range and we multiply it by what's called a haircut. Now, we don't like being a piggy, do we? Of course we do. We're traders. No, just kidding. There's the bulls make money, bears make money, pigs get slaughtered, right? So instead of waiting for that full range to repeat itself, we're going to multiply that times a percentage. Maybe it's 80%, maybe it's 90%. It's completely customizable for you based on your own risk tolerance. So we're going to make that range a little smaller, and then we're going to add that range to the high of the RKO candle. Now we've got something. So it's all baked into the system. So it's very simple risk management. Immediately after buying the stock, I look and I see where the profit taking level is, and I put in a profit taking order, good till canceled, GTC. If I'm buying calls to trade this, which is what I usually do, not always, but usually do, or buying the shares, I'm going to set it a stop loss, GTC, that's good till canceled. And I will do those OCO. One cancels the other. So if I get filled in my profit taking order, I'm out. It's going to cancel the stop loss. If I get filled in my stop loss, I'm out of the trade. That's going to cancel my profit taking order. Work the system works. And by the way, if you're not familiar with some of these terms or exactly how to do some of these things, later I'll share how you can learn how to easily do all this and make your exits super simple. I want you to leave here today with all the tools you need to be massively successful with this. And I bet you do too, right? Would you like me to share with you some of the tips of what we discovered makes RKO trades even better? Get that questions box. Give me a yes if you do. If you want, I can do that. Let's see what people say here. Should we spend our time giving you extra tips that are not in this? Keep deleting the questions that answered, but they keep popping up. Okay, good. Well, so Patricia, yes. Okay, so look, One is if the doji is engulfed, the red knockout doji is engulfed by the previous candle. Yeah, that's one thing. But another really strong test, we did some back tests. Another really strong thing is if, in addition to seeing the red knockout pattern playing out, also that same pattern is going through one of the three main moving averages. Now, what are the three main moving averages? Either the 200 period, the 50 period, or the 21 period. If it's also going through one of those major moving averages, it makes it even stronger. So, in summary, there are a few important takeaways. Momentum trades can yield outsized profits. And this is a time-tested system. So we have the setup candles, red knockout candle, trigger candle, confirmation candle, and the profit target. I think you could probably spot these on your own, right? If you saw this on a chart, do you think that you could spot it? What do you think? What do you think? Yes? Yes? Okay. Yes? 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 Okay, good. So that's great. I think you can spot it. But there is a problem. There are 6,366 stocks that you could trade. If you could spot an RKO setup on a chart, and it took you, say, 45 seconds to spot it, well, it would take you about 80 hours a day to go through all the opportunities out there on that 6,366 stocks. And that's only looking at one time frame. How many of you have much more than 80 hours a day to do this? You don't like missing opportunities, do you? There's got to be a better way. And I bet you know that. You wouldn't be here right now if there wasn't. So the RKO system is here. Now, over the past 6 years, we've created both a scanner that would easily identify RKO trades, as well as an indicator that displays the pattern right on the charts along with the price target. I wanted to make it so simple, it is impossible to mess up. You now have a new opportunity to easily scan for top momentum trades that you would not be able to find without the scanner. With 6,366 stocks out there, it is literally almost impossible to just happen to come across one of these great setups. But with this easy to use 3-step scanner, it makes it possible, because I've made the investment for you. Because you know what? I know what it's like to struggle as a trader in the market. I've had the pleasure of training thousands of traders, and I wanted to develop a scanner that made it very easy to find profitable trades with great potential. And even for myself, before creating the RKO system, I would come across one of these setups maybe once every 6 months. They were out there. I just didn't have enough hours in the day to find them all. I would miss so many opportunities. But finally, I've invested both time and money to develop this simple, easy-to-use scanner so that you can harness it in just 3 easy steps. Imagine what your trading account would look like if you could sit in front of your charting software and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on trades that have been identified for you. Gosh, what would that mean to your trading business? Well, that's exactly what the RKO scanner does for you. start getting the results that you deserve. This is Nick. Now, our head coach, John, who's a brilliant guy, ex-Goldman guy, John and I shared with Nick what we were thinking. Nick was the first human to see the RKO, and in fact, was extremely instrumental in helping us. Nick said, using scanners, particularly the RKO daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner and do the checks and decide to take the trade or move on. It only takes a few minutes and helps me find the best trades consistently. I want to invite you to join us and start using the RKO system right away. So first, you're going to get the red knockout scanner. So every day, you'll be able to have a list of all the RKO trades in the market. This simple scanner searches the universe of over 6,000 stocks for the setup and makes it possible to find the trades that you would never have access to. You never find them without this. For you to profit with the RKO system, I need you to know how it works. So I created a video training course that shows you step by step exactly how to install this on your platform, how and why the RKO system works, how to set up the trades, the filters and cross scans to optimize the strategy, and of course, targets and trade management. So what that means is first you're going to get the red knockout system, and then you're going to get up and running really quick with it. You're going to have it down pat after just watching our accelerator video course, a few simple, quick, and easy videos. Now I can put the tools in your hand, and I can tell you how to use them. But I know for me, I learn faster when someone shows me exactly how to do it. So the best thing I can do for you is to give you hands-on training. Every Friday for the next year, for one full year, you're going to attend our online live group coaching class and watch John Kamisik set up RKO and other trades right there while you watch. John is formerly with Goldman Sachs, with First Options of Chicago, with Lind Waldock. He traded for a hedge fund, and he is the expert on the red knockout. In fact, he helped me develop it. He's just the kind of person you want to listen to. But I wanted to make sure that you hit the ground running and get hands-on training so that you can start getting immediate results. How would it feel to have top picks selected by John every day, an ex-Goldman guy? Well, this is what Dennis Meixel said about that class. Thanks, great class. Exactly what I was looking for. The class gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward. So what that means is first you're going to get the red knockout system. You're just going to easily be able to scan for it. It's super easy. You're going to get up and running fast with the accelerator videos, and you're going to literally get hands-on training once a week. Yeah, every Friday, the group coaching. That's a total value of $5,247. Now, do you mind if I over-deliver? Because what I really want is for you to make as much money as possible trading the RKO, and I imagine you do too. So every day we're going to rank the day's RKO trades and list them out and give you our top RKO picks so that you can see what we think are the best of the best. This is the RKO watch list, and it's a $1,297 value. Plus, John will add a bonus trade every day from his daily group coaching class. So you can diversify your trading and get all the top trades of the day by simply clicking one link to access your curated watch list. So what that means is you're going to get the red knockout system scanner so that you can just push a button and see all the red knockout trades of the day. You're going to get up and running fast with the accelerator videos. You're going to get hands-on training with the daily group coaching class. And you're going to get the RKO watch list so that you can see what we think are the strongest trades of the day. And finally, This completes everything that you need to make the RKO simple to trade. With the RKO indicator, we put the arrows right there on your MetaStock chart to show you the trigger candle, confirmation candle, and even the exit price is populated onto your screen too. All the information is laid out for you. This could not be easier. So you're going to get the red knockout system scanner, push one button, there's all your trades. The RKO Accelerator video course, the weekly group coaching, you're going to get the watch list so you see which ones are the best of the best. And they're just all going to be right there on your screen. Plus, you are going to get updates every time we optimize the strategy to make it better for 1 full year. So this is a $7,541 value. The RKO system works on the following platforms: MetaStock, Thinkorswim, NinjaTrader, TradeStation, and even TradingView. Now you may have noticed, and somebody brought this up earlier, you may have noticed the red knockout trades are all for when the stock is rising. And for that reason, they tend to work better in bull markets. But the market doesn't always go up. Not all stocks always go up. In fact, some can have some pretty big bearish moves. And so I've created the green knockout to double your chances of success. So today, you'll get both the red knockout and the green knockout. So you'll have all the tools you need to trade any market up or down. So what that means is you're going to get the red knockout system. You're going to get that scanner, push a button, there's your trades. You're going to get the RKO Accelerator video course, the weekly hands-on group coaching every Friday, the RKO watch list, the RKO indicator right there on your charts, and you're going to get all this for green knockouts for bearish moves too that you can trade with puts or shorting stock. Buy now. You can see why the RKO trading system, I think it's a steal even at $10,041. I mean, if all this did for you, was give you the hands-on training to be able to use this, wouldn't it be a steal just for that? Yeah, but you're not going to pay $10,041 today. Because you've made the investment of being here on this training and for being one of my action takers, you are the elite. You're better than millions of other traders out there, and I want you to have the results that you deserve. Get started today for a one-time small, easy investment of only $997 by going to metastock.com/RKO123 go right now. But to get all these bonuses, including the green knockout to maximize your chance of success in any market condition, you have to be one of the first 25 new members today. And you have to take massive action by going right now to metastock.com/RKO123 go. Just to recap one more time, when you open your browser and go to metastock.com/RKO and sign up today, you're going to get access to the red knockout scanner that's going to identify trades with the entry and exit points. On top of that, when you're one of the first 25, you're going to get all the things in green here. You're going to get access to the RKO Accelerator video course, get you up and running right away. You're going to get access to the weekly group coaching where we go live into the market together and you can see exactly how me and my team use the scanner to generate profits in the market. You'll also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. Further, when you open up your browser and type in metastock.com/RGKO, and lock in your RKO traders package, you will also get access to the RKO indicator itself. This way, while we're coaching you live in the market each week, giving you access to my top watch list, you will also have access to this powerful indicator 24/7 across multiple markets to take full advantage of this great and easy to use indicator. Also, as we run more tests and do more tweaks, as the RKO continues to evolve and we get it performing even better, you will get automatic updates for a full year to the scanner and the RKO indicator. Now, lastly, when you join us right now, you get the green knockout also. You'll have the confidence of knowing you can trade in any market, up or down, but you have to take action today and be one of the first 25 members right now. Now, I'm talking for about 50 minutes, so I'm going to give you the opportunity to go in and ask some questions. Go in and ask some questions, and then I'm going to welcome the new people who just joined. Actually, we've had Ellen join. Welcome and congratulations, Ellen. Michael, welcome and congratulations, Ellen. Just good job signing up today. Welcome and congratulations to Eric. Nice work. Welcome and congratulations for signing up to Simon. Good work. Good work, everyone. Now go ahead and put your questions in the box. I see a couple in there right now. I'm going to answer those in just a second. In the meantime, these are some frequently asked questions I get. What if I can't install it properly? We send you step-by-step instructions on how to do it. We send you a video. Do this, do that. Easy. Is it time consuming? No, that is the whole point. I know you're busy. A lot of traders have a busy schedule. I've designed RKO so you can literally trade this system in about 60 seconds per trade, and you're only looking at the trades that pop up on the scanner. What if I can't figure it out? You've got video tutorials, plus hands-on training live every Friday morning. What time is that weekly group coaching, that hands-on training? It's live every Friday from 9 to 10 Central, which is 10 to 11 Eastern. And if those times aren't convenient, that's okay too. The class is recorded in case it's not convenient, or if you just want to review. Now here's another question I get. Sometimes people say, Dan, this is great. I've actually got a small account and I want to grow it, and this is exactly what is going to help me. But I have a hard time coming up with the $997. Is there a way to finance it? That answer is yes. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit. So you can lock in the red knockout today when you check out using PayPal and just choose PayPal credit. How do you do it? Just go to metastock.com/RGKO, click the PayPal button, and get started right now. So once again, you're going to get the red knockout scanner, which makes it so easy. You just push a button and boom, there are all the trades. You're going to get the RKO Accelerator video course. You're going to get the weekly, and video course gets you up and running in minutes. The weekly group coaching to give you that hands-on training so you can see it live in the market. You're going to get the RKO watch list so you can see which trades we think are the best of the best. And you're going to get the RKO indicator right there on your charts. Plus, you're going to get all this for the green knockout too. So go to metastock.com/RGKO. You can call 800-882-3040. That's 800-882-3040. And you can talk to one of the good people at MetaStock. Again, 800-882-3040. They trade this themselves, some of them. I mean, you can ask them about it. how it works. Ask them anything you want. They'll explain it all to you and get you signed up. And if you're not a person who likes chatting on the phone, then you can just go to metastock.com/sales chat, and you can chat with somebody, ask them questions about this, and get help getting signed up that way as well. Probably have time for maybe 2 questions, I think. What is the haircut factor used to calculate on the profit target? So here's what we do. The green run, you have the green run, right? Well, we've seen this where the green run repeats itself, that range, you know, like if the green run starts at 120 and ends at 140, that $20 range should repeat itself again. So like $40, right? I'm just making up numbers here. After the red knockout. But, you know, if I take my profits a little earlier, it can be a little more conservative. And I'm all about that. I'd rather have more winners, right? So that's what the haircut is. We're just taking that green run range. You know, if it's $20, maybe we'll use a 75% haircut. So we'll take our profits after $15 above the red knockout high. Very good question. That is, wait a second. So actually that means every ticker has its own nature. Yeah, I mean, kind of. With regards to options, will this strategy, if modified, work for puts? Yes, and that is the green knockout. So man, you've got lots and lots and lots of opportunities here. You know, Ronald, if you do also use another trading platform and, you know, you want to use it on, you know, some other platform, all that stuff is available also. You'll get the code to be able to use it for MetaStock and all those other ones that I answered. So, you know, it's all these, and I think there's even a couple more. So Ron, just go ahead and sign up for it, and you'll be able to use all of these. There's instructions to show you how to do it. Just do that. All right. Well, that, friends, is everything that I have to share today. And now I'm going to hand it back over to my friend Jeff.
Thank you so much, Dan. Appreciate it. Right on time, too, my dad.
Thank you.
All right. Let me go ahead and do this. I'm just going to go ahead and dismiss you real quick. Ooh, that was a very... Okay. Thanks a lot, Dan.
See ya.
All right, cool. Let me go ahead and share my screen real quick. All right, cool. Also, as part of the MetaStock version, you are going to get the commentary, and I kind of wanted to show that off a little bit in this screenshot. Kind of explains everything to you, tells you what kind of puts you could be looking at, what deltas you could be looking at, all that kind of stuff. I love the commentaries in MetaStock. I love the full screening that's available as well. So as Dan had kind of mentioned, the webinar price here, the conference special, it's going to be $797. And he's throwing in all those bonuses, the ability to use it with any of the platforms that are supported, the video course, the monthly coaching, we'll give you a free trial of MetaStock. So even if you use another platform, you can find out why MetaStock's been rated the best software in its price category for 32 years in a row. So give us a call if you have questions, 800-882-3040, metastock.com/RGKO. And also you can chat online at metastock.com/sales chat. So as we move on to the next one, I want to remind you, if you haven't yet, you should go join the community, MetaStock or thetradersforum.com. And I'm going to have Greg come in, and we're going to do a little bit of a prize. Greg, are you ready?
Yeah, I think so. Sorry, I was cutting and pasting.
All right, no problem. I was wondering if I was going to do it by myself, I would have had to, find a random number.
Never, Jeff. Never do you need to do this by yourself, unless, of course, I'm on vacation or on a cruise.
All right, let's talk about Serge, we're going to give away a prize. Serge, it's only going to get better from here, guys. We're what, 20 hours into this conference, and we got several to go. So anyway, we're going to give away Serge Berger's big 3 stock report. It's a weekly trend brief. The value on it is $3.97. It's a fresh look at their 3 core stocks every Monday. Kind of goes through kind of his top picks for the week, how they use them. They send out annotated charts out. Very, very cool. We're going to give away one of those. Now, Greg, before we give away the prize, I think it's important for us to make sure everybody knows how or if they qualify to win a prize.
You absolutely qualify to win a prize as long as we know, have you on our list somewhere. And the way you do that is go to metastock.com and click on the banner at the top and go to the registration page. It's very simple. It just takes a second, and you only have to do it once. If you're on GoToWebinar, you don't likely have to do that because you've probably already done that. If you're on YouTube, or if you're watching this on YouTube, I should say, yeah, you might want to go ahead and do that.
Okay. Let us pick a winner. Are you ready?
Yes, I have already. Oh, go ahead.
Okay. Give me your number.
Well, unless the number's changed since the last time you spoke with me.
It has not. I need to pull a new list. So it would be a good idea to go register right away for when I pull the new list.
Well, currently, from the Google random number generator, the number we came up with is 5,392. 5392.
That is Eric H. Eric, if you're in the USA and have an AOL address, you might have won. And if you're watching, you should say, hey, I think I won, and I will let you know if you did. So Eric, I'm going to go ahead and send that information over to Serge's team right now. I'm going to ask him to kind of get in touch with you and help you with the prize. So there you go. Thank you very much, Greg.
You're welcome.
As a reminder, all of the specials we're talking about today, the MetaStock, the TST Trender, all of the products that we're mentioning, you can get at metastock.com/conf promo. If you have any questions, you can call us 800-882-3040. We do have that special promotion where if you buy MetaStock for a month, we'll give you the 2nd and 3rd month for free. That brings your per month cost down to about $25 for a fully delayed update and quote. Again, it's been rated #1 32 years in a row. If you haven't tried it, you don't know what you're missing out on. So this would be a good way to try it. 800-882-3040. metastock.com/conf promo or metastock.com/sales chat. Very good. All right, our next presenter is another great friend of MetaStock, Rahul. Rahul's been working with MetaStock as part of tradingwins.com for a number of years. If we're lucky, we're going to see a picture of us at a ball game of some sort. A long time ago, Rahul's got a background as a CPA. And I think he brings that to kind of the analysis that he does and kind of the low risk analysis that he really does. Rahul, you're looking great. I never know if you're going to show up in a suit or a hoodie or a Better Call Saul shirt. I never know.
Jeff, first of all, that picture is going to show up again. And that's the highlight of my MetaStock presentation, is to show that picture of us at Wrigley Field.
Secondly, that's a gym going suit.
It's a gym going. It's got the hoodie. And next time, I'm a little under the weather today, Jeff, so I'm going to do my best. I didn't want to cancel because I love you, so I wanted to get this done. And next time I'm going to wear this with the suit on top, so we'll have hoodie, suit, everything.
Ooh, all of them. Ooh.
Yeah.
I have a special request.
What is it?
Uh-oh. Cancel. If I may, next time I want all 80s attire.
I can do that. You know how popular that stuff is with my children? And my daughter will actually get upset. Why didn't you save more stuff? And I was like, you got to ask Grandpa, because Grandpa was clearing that stuff out as soon as I left.
There you go. All right, let's go ahead and get started.
Thank you. So let me know when you can see my screen. You should see the
I see it.
You should see the Velocity Adobe Acrobat presentation. Yes?
I can see it, and I just realized I've been saying it wrong this whole time.
No, you've been saying it right. I'm just having fun with the group.
All right, cool.
It's a pleasure to be here. Yeah, Jeff, thank you. Greg, I really appreciate both of you. Thank you for having me on. In another hour, in about 2 hours, you're going to have another treat where Vince Vora, my business partner, will be on as well, and he's going to talk to you about a system that he has. But today I want to talk a little bit about Velocity. This is a system that Jeff and his team programmed for us in April of 2025. And since then, now keep this in mind, we've had a very, very bullish market since Liberation Day, just after April 2nd, I think it was, and from April 8th, that was the bottom of that particular series, and we've had a nice little bull market since then. So the system has performed extremely well. To give you an idea of exactly how well it's performed, this is the log sheet that we share with all of our members. So whenever I post a trade, and these are all based on Velocity entries, as well as additional entries that we see that are based on the Velocity system. So you can see we started this a little earlier. April 9th was kind of that first day we started buying the Mag 7. The Mag 7 is a really interesting beast. It is a 5x leveraged product that tracks the Mag 7 names. It's available on the London Stock Exchange. It's an ETP. Now, this is not a typical trade that I took. I just thought that the market was oversold and I wanted to dollar cost average into this Mag 7. There's a significant amount of risk with a trade like the Mag 7 because it's a 5x leverage. Theoretically, if the Mag 7 on a particular day goes down 20%, this could get liquidated. But I was prepared for that risk because we ended up buying this at $6.95. I think the high on the Mag 7 was around $55 or so. It was down about 90%. So the goal here was to start buying and then buying a little bit more. Same with the QQQ5, which, as the description suggests, is a 5x leverage version of the Qs. Again, we never really got a chance to dollar cost average in, but you can see some of the areas at which we took profits. And all of these notes are actually posted right here in our Microsoft Teams channel. You can see here we have a new trade idea on Amazon there, as some of the other group members were posting. Google was a new trade idea back in December of last year, and I'll show you all of these on the spreadsheet. So you can see green is good, red is bad. We've had a lot of good, very little bit of bad, but I think if you're trading and you're trading as often as we are, and even if you're picking out two good trade ideas a month, I think with this system, which I'm going to show you today, which is a longer term trend following system. So while we have a version that is specifically designed for day traders, my preference, and now going back to what Jeff had mentioned about me being a CPA, my preference is to trade this on a daily time frame, because you may or may not know this, but accountants, engineers, and actuaries, we're kind of afraid of our own shadows. We don't really like risk all that much. And sometimes that's gotten me in trouble. Not gotten me in trouble that the account wasn't doing well. It's gotten me in trouble because I should have taken a little bit more risk than I actually did. So it's, when I say get me in trouble, it's more from a regret standpoint rather than oh, the account blew up or the account really didn't do well. The other thing I really believe in is having a very risk-defined process. I trade mostly options. Those on the background, you can probably see the Mag 7 and the QQQ5. Those are actual shares, but I don't mind owning those because those were for a longer term hold. But the rest of the trades you can see, DraftKings is a call debit, CDS, I beg your pardon, is a call debit spread. And call debit spreads for me give me just enough upside with just enough risk control. And I'll talk a little bit about that as we get into the session today. Please, 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 this session is meant to be interactive. Our goal here at Trading Wins is to be as transparent as we possibly can. We're not hiding anything. We're going to do this all live. If you have a request for a symbol, please put it in the question bar, question panel, and I will do my best to get to it. There's a couple of exotic strategies that we've done over the past year. This is kind of a ratio that we did. we did a trade on a VIX contract that worked out really well. Now there's a bit of luck involved on that VIX contract, and I'll show you that as well. So now that I've dropped you in the middle, let's start at the beginning. My name is Rahul. I'm creator of the Velocity system. I've been trading independently since the year 2000, which now that I think about it was a very, very long time ago. My background is as a CPA. So in 1998, graduated from university. And back in those days, the universities used to come out to, the accounting firms, the big six, back then there were six, used to come out to the universities and would recruit you on the spot, kind of get a feel for what you have to offer, and then bring you in for an interview if they thought you were appropriate. So I managed, and I got very lucky. I'm very fortunate that I joined a great firm called Ernst & Young. You probably all have heard of it. And those formative years in the accounting firm laid that foundation for what I was going to do later, which was trade full time and then eventually start teaching. Because when you go into that audit stream, you really start to learn what makes a business tick. Now, since then, I've moved on to more charting and technicals as my starting point, but that fundamental analysis is always in the back of my mind. So I would go into all kinds of different businesses, and I was so surprised that businesses that were so specific. So here's a water bottle, and I would go in and we make water bottle caps, and I would say, oh, you make plastic bottle? No, we just make the caps, and this is a $10 million business. And I was like, how is that possible? But there are a lot of under the radar businesses that are doing quite well. So my job was to go in there and make sure everything was okay as an auditor. That's what you want to, that is what you're there to verify. But I also noticed, what is it that management does and says in the notes to the financial statements and how they present the information? Because a lot of accounting or a lot of auditing requires judgment. So you could present things one way, which looks really great to one user. You could present things another way, which looks really great to another user. So we were always looking for the best way to present information, now within the guidelines, of course. So now when I look at financial statements, I'm looking at those statements through that same lens of what is it that management is trying to convey? Is this a situation where they're essentially taking a big bath, which is get everything out of the way in a certain quarter so that the following quarters look good? Or is this a situation where management is now using a bit of judgment in terms of how long it'll take for something to depreciate? And you're really starting to see this is becoming a bit of a controversial issue in terms of the chips that are being used for the AI rollout. How quickly do they degrade? How quickly should we depreciate them? And those things all have an impact on earnings. So that's where I got my start. I'm going to say that every presenter that is on here today is going to say very similar things to what I'm saying in terms of the problems that you have. So I'm not going to spend a lot of time on the problems. I'm going to spend much more time on the solution and how I think it can help you. And I'm going to show you how it's helped me over the past few years. So chasing entries, second guessing exits, this is not new. You all know this. A lot of this is, and I blame the 24-hour news cycle, and even more so now, just in the last 5 years, the market has changed, even if you don't realize it. It is no longer about I'm going long, I'm going short, stocks going up, stocks going down. It's no longer just about that. It's now become more of, here is a probability distribution. Here is where I want to be. Here's my risk. Can I tolerate this risk for the upside that I'm expecting? If the upside doesn't happen, can I afford that risk? So that's the way that I'm looking at the markets now. I'm afraid that a lot of people are looking at the markets from a much more of a gambling mentality. And that, to me, I think it's great if it works for you And when things go well, it's amazing. When things go poorly, you likely will show up on Reddit in loss porn telling people I lost 40,000. I'm surprised. I'm actually surprised at how many young people have 50, 60, 100, $200,000 to put on 0 day to expiry options. That to me is just wild. But that works for them. It doesn't work for me. So going back to the accounting stuff, going back to that professional kind of environment that I grew up in, I want things to be methodical. I want things to be as mechanical as possible. If something hits a certain level, I don't want to have to guess and say, you know what, I think it'll come back, or I think it's going to go higher. I'm not going to take profits here. I can say, with few exceptions, over guessing or thinking that I'm smarter than the charts or I'm smarter than the systems that I've put in place has always cost me money. So what if we could now actually predict? Okay, we know what happens. Charts are really good at telling you what's happened in the past, but what if we could actually predict what is going to happen in the future? If we go back and take a look at what blackjack players do, elite blackjack players, when they're counting cards using some other technique, they're hoping that over time, just like the casino is on the other hand, that over time, their edge, which is minuscule, 1%, 0.5%, they're hoping that over time, that edge is going to play out in their favor. And that's what we're looking for. We're looking for a small edge because we're fighting against, or we're trading against, institutions that have a lot more compute power than we do and a lot more money than we do to move the markets. We're kind of market takers here instead of market makers for this kind of stuff. So we're following a trend, but we have a system in place that historically has worked, and we're looking for signals that are going to work in the future. And that's what we're going to talk about today. We want to have that confidence to say that when we put on this trade, we're putting it on and structuring it in such a way that when it goes in our favor, we make 5, we make 10, we make 15. But when it goes against us, we lose 1, we lose 2, we lose 3. Okay, so that is the kind of probability distribution that I would like you to think about, not just with this system, but with any system that you're working on, because of the number of products that are currently out there in the market. You can actually structure everything or any trade that you want in any specific way that you want, and look more at that instead of just saying, I'm going to buy the shares, I'm going to short the shares, I'm going to buy a call option, I'm going to buy a put option, I'm going to do a cash secured put, etc., etc. The fundamentals of the system, it's very, very, very simple. Okay, you don't need anything on your chart. I have put the 150-day simple moving average on only because I look at a little bit of Stan Weinstein's stage analysis, and I think the 150-day simple moving average has some relevance, but we're going to keep that on our chart when we look at it just in a moment, just as a reference point. We're not looking to make a decision based on that moving average. Support and resistance, I'm going to say, is very, very important. And then the third one, we've talked about how to structure the trade. And we'll go back and look at real examples, and we'll look at live examples right now. So let me pull up my beautiful MetaStock 20. By the way, Jeff, MetaStock 20, I'm really, really enjoying. I upgraded recently. Thank you for that. This is a chart of the NASDAQ ETF, the QQQs. Okay. On this chart, you'll notice the 150-day simple moving average. Jeff and his team were kind enough to program the indicator in a way that when you're in a long trade, you will see every bar green until we get out of that long trade, and this one is still in a long trade. When you're in a short trade, you will see all the bars colored red until we either get an exit or until we get a flip to the opposite trade, a long trade. Okay, so recall what I said earlier in the session today, that this is a longer term trend following system. You could be in some of these trades for weeks, months, sometimes years. Doesn't mean that we're going to sit in that trade and wait for an exit to close us out close to where we got in. As the price drifts downward, we're going to take profits along the way. But this is not something, now occasionally you'll get gifts, and I'll show you exactly how that works as well. When I do get that, we take profits, or I take profits on it right away and roll the options out, scale out the shares. And I used to do day trading, and for me, my personality, I found out after a very short stint, I just don't like it. It's just too stressful for me. Not only is it too stressful for me, my stage in life is different than yours. I've got young kids who need me. I've got responsibilities. I've got older parents that need me. So I can't be glued to my screen watching every tick or watching every movement on a bar for 4 to 6 hours a day. And I find that a weekly chart is just, it's not fast enough. And I find that when a weekly chart flashes an exit, it's far from where I would have gotten out for profit. So it's a little slow for me is what I'm trying to say. For me, the sweet spot is the daily chart. And with the daily chart, I can do a lot with it. I can do options that are expiring the same day if I wanted to. I can do options that are expiring that week. I think options are on some of the major names are now every second day, Monday, Wednesday, Friday. So as I'm saying, there are so many possibilities for the way you can structure a trade. It's no longer about, I just want to buy the shares. And sometimes buying the shares is the right approach. But for me, it's rare that I will just buy the shares. Now, if I'm trading Lilly and it's $1,000 stock and the options are going to be $4,000 for a contract, I may either pass on it or I may just buy a few shares and see how things go. So on this chart, you're seeing a few things. You're seeing that green arrow, which is the entry for a long. You're seeing a red arrow, which is entry for a short. I just want to make one distinction here. So when you see entry long, you see there's a plus there. A plus from the calculations that we've done is a stronger entry point because an additional indicator is in line. The long plus is a stronger entry point than just a regular long. Okay, so here's a regular short, here's a long plus. So when you get a situation where the short all lines up with the additional indicator, you will see a short plus signal. The S2 and S3 you're seeing, those are support levels. So when you get to those levels, that was specifically designed by Jeff and his team that this could be an area where profit taking could be considered. Okay, so there's support level 2, support level 3. And I want to stress that trading is very personal. Just because I'm trading the daily chart and I'm taking profits when the stock is up 10% doesn't mean that your trading style is going to be the same. You have different goals. You want to accomplish different things. What I'm showing you is a system that you could use to apply to your trading. So this is not a, hey, do what I say. This is a, let me show you what it does for me and for you to be able to apply it to your system. Okay, so step 1, remember it was a 3-step process that we looked at. Step 1, look for the signal. Step 2, support and resistance. Step 3, structure your trade. So we get this signal that comes in on the 9th of May. Remember, April was the Liberation Day fiasco, and then we started going up from there, didn't really look back. Now, what I want to do when I make this assessment is I take a look at where the bar closed. Okay, so this bar on the 9th of May, if we can find it here. No, I think let's go use the 8th of May. The price is about the same. It hasn't moved a whole lot. It closes 488. For ETFs, my stop loss is no more than 5% from the closing price. So if it's 488, my stop loss is going to be about $24. Okay. But I've got to make one other major assessment. I'm going to compress the chart to show you a little bit better. Remember, I told you you don't need anything fancy on this chart. There's 150-day, which is optional. You need this, and you need a trend line. That's all you need. Okay, so I'm going to look at this entry and say, do I want this entry? This is an aggressive entry, so maybe I start here, but because I'm conservative, I'm going to look at a major previous pivot high that is above the 150-day. Okay, or in this case, simply look for a major previous pivot high that is the same color as the trade that I'm taking. So I'm going to look for a major pivot high, same color as the trade. So I take my trend line tool, doesn't have to be perfect, and I'm just going to simply draw my trend line there. Okay, so now I make an assessment. When I get this long signal here, am I above that trend line? The answer is very clear. I am not. This name goes on my watch list because what am I watching for? And if you know what I'm watching for, please put that in the comments. I'd love to hear that. All right, what I'm watching for is the establishment of a new clearly defined pivot high. Okay, so there's our previous one. When we go up a little bit, you can see we now establish a new pivot high. Zoom in for you a little bit. We now establish a new pivot high there. Okay, so I take my trend tool and draw it as straight as I can. Okay, so there's a little bit of math here. Am I within, can I tolerate a 5% move from where I currently am? So when I get this move here, this is the signal for me to get ready for a trade. Okay, you see this one closes just below that trend line. And then when I get to the 2nd of June, this is my trigger for an entry on a conservative trade. Okay, so my conservative trade comes in at around 523. That's my entry here. Now, you notice when I drew this across, we tend to find support at that level as well. Whether it's coincidental or not, I'm not worried about that. I know that my stop loss is just about 5% below that. So which is 20, call it 25 points, right down to 500, which is a nice round number. And oh, what do you know? The 150-day simple moving average comes in right around 500. So now I know I've got 2 levels of support here. So my general rule for stop losses, ETFs, 5%. This is very personal. ETFs, 5%, and stocks, 10%. Now for something like Tesla, SanDisk, Micron, anything that's a big mover, maybe there's a bit of flexibility, but I want to keep this system as mechanical as possible. Okay, 5%, 10%, 5% ETFs, 10% stocks. So there's my trade here at 523. We never get even close to testing our stop loss level. And now what do? Now I establish my first target for profit taking right here at 539. So it takes us a couple of days from the day here 514 to, where are we here, 625. So look, is that 30 days? It doesn't seem right. 529, I'm sorry, from 529 to 625, it's about 24 days. You get the weekends in between, it looks a little bit longer, but you get that nice burst out to that level that we had previously drawn in. Okay, so the way I would play this is an ETF. This is basically a referendum on the overall market, but focused on tech. I would likely play this with a leap that is slightly out of the money. So a slightly out of the money leap on this day when the stock is at 525, and let's say we go out to 550, a leap would likely be around 5% of the purchase price, so $25 or so, maybe a little less, depending on the underlying volatility at the time. And then this would be the area where I would either close out the trade, but there's no reason for me to close out the trade fully. I would close out that 600 or 550 call, and then maybe buy the 570 or 575, or even get out to the 600, depending on what my strategy is. So when I get to this stage here, this is simply a break in the action for me. It doesn't mean I'm out of the trade. It just means I'm rolling my options out so that I can put some money in my pocket in the event that this comes back and gives me an exit signal, which doesn't happen for a long time. So you can see, if you are in this trade back from a level of 490, you would still be in this trade today. Okay, and there again, it's interesting that we find support at that 150-day simple moving average. So that is basically what I do for and how I play my trades to the long side. Now let's look at another one, UUUU, which is in the rare earth space. Same kind of thing. So going back to the fact that you could be in these trades for months, sometimes years, when I was day trading, it would be a great sense of accomplishment if I made $3 on the NASDAQ or on the Q, if the price moved $3 and I captured that. Yes, if I annualize that over 250 trading days, it's a wonderful return. There's no denying that. But I'm less interested in picking up 50 cents here on a stock that's trading at $5.50. I'm more interested in picking up when it goes from here to here at 25, 26. This is the trade that I want. Okay, so yeah, it's nice that I can pick up 50 cents, and if I annualize that, and a lot of day traders do very well with that. They'll tell you, hey, I made 10% in a day. If you annualize that, it's 250 times, that's 2,500%. Amazing. That's great. The problem is, you got to now go out and find another trade that's going to do the same for you. So why would I do that when I'm already in a trade that's working for me? So I take my options, or I take my shares, I scale out, or I roll to the next strike, because the trend is intact. Nothing has happened. Even though I've taken out 50 cents by this day here, nothing has happened to the trend. So why would I want to get out? But going back to how trading is very personal, your trading style, your risk tolerance, your goals, your objectives, your mindset, all of these things play a very significant role in how you trade. I'm showing you exactly how I trade, which is a more conservative style. Now you can loosen the rules a little bit. Maybe your stop loss goes from 5% on ETFs to 7, or it goes to 10, because you can tolerate a little bit more pain. With all the testing that I've done with this, the 5 and 10, they're round numbers, but they give me enough of an estimate that I don't have to go to 6% or 4%. 5 is just right, 10 is just right for me. And as Jeff will show you, there is a way to scan for all of these entries. There's a way to scan for exits. You can do so many things with this system, so that when you're actually sitting down to trade, you run one simple scan and you look to see where the entries are. You look to see where the exits are. Is there anything that you need to do? And if you've got the real-time package, you can do this on a minute basis, on a 5-minute basis. And if that is your trading style, terrific. And if it's working for you, I say keep going. So this is UUUU. We haven't had a new trade in Quad U since May of 2025. But look at the trade we did have from May of 2025. From $5.17, we hit a high of 26 within a couple of months, came back down, hit another high around that same area of 26, and we're still trending upward. So on this one, on the UUUU trade, I played a very simple 10 and 17 call debit spread going out to January of 2027. The cost for that debit spread was about $1.30. So it was $1.30. Stock was around 10. So I think it was right around it in this area here. Stock was at 10. I was able to get a 10 and 17 call debit spread longer term. So this is when the administration was talking about creating their own stockpile of rare earths, supporting local manufacturing, et cetera, et cetera. There was a story behind UUUU, just like there was behind USAR. So that 10 and 17 call debit spread for $1.30 scaled out of 40% of it for, I believe it was 280 or 295. So now I've got 60% of the position still open with my risk down to a fairly low level. And the stock's still trading at $20. There's no reason, if it breaks this area here, or if I get a proper exit signal on the velocity system, yes, of course, that would be a reason to get out. But in this case, it's doing its own thing. It doesn't need me to help it. It's still well within, it's still fully in the money. So I would still capture that full $7 gain minus the $1.30 that I paid for a net gain of about $5.70 over the course of 18 months. So there is that probability distribution that I keep talking about. I risked $1.30 for a return of $5.70 in 18 months. For you, that may not be enough. For me, the way I'm playing this is just one of the trades that I have. It's a longer term hold because I believe in, I do believe in the rare earth story. So for me, this is nothing to do except hold on. Recently, we had a trade on FITB, regional bank, and this is going back to, let's go back to our spreadsheet and see exactly when we had FITB. We did a May 55 call on the 2nd of February, so about 2 weeks ago. So if we go back and we look to FITB, and I think I may have chosen the wrong one here. There we go, that's the right one. So on FITB, I know I'm in a long-term trend starting here on the 26th of November. The trade that we were looking at was on this bar right here, okay? So there are additional indicators that I was using, in addition to additional indicators that I was using to add on to the fact that I was already in a long trade. This bounced off a very significant trend level. And what do you notice down here? Let's go, go back to, if you're familiar, if you watch Sesame Street, which one of these is not like the others? It's this one here, that significant volume bar. Now, all volume is, of course, not the same. This significant volume bar was also accompanied by a significant volume delta, which means that it wasn't just buyers and sellers trading and there was a lot of just back and forth trading. There were a lot of buyers hitting the ask, much more so than sellers hitting the bid. So this bar, combined with this move, combined with the fact that we're already in a long position, allowed me to have a re-entry. Okay, so the re-entry, a lot of the re-entries are based on a volume, and they're based also on net volume delta, okay, cumulative volume delta, CVD. In that trade, when we put that on, it was a $55 strike. The stock was trading at $15.97 that day. It was a $55 call that we had purchased, or I purchased. Let's go back and find it exactly because this one went fast. 55 call for 115 mid. So this was at 10:42 on the 2nd of Feb. Okay. And by 12:59 that day, so 10:42 to 12:59, about 2 hours later, it had already moved from 115 to 140, so there was a bit of profit taking there. And 2 days later, it had moved to 285. So from 115 to 285 in 2 days. And there are screenshots of the actual pricing on the day at the time that these trades were mentioned on the Microsoft Teams channel. So if we go back, you can see that from 115, there was the first close at 140. There was the profit take there. We had the remaining from Feb 2nd, that was closed out at 285. And then I opened a new one on the 4th of Feb, the same day, from May 60 call. It's trading around break even right now, maybe a little higher. So, but am I doing anything with it right now? No, there's no reason to. There's no reason to do anything unless there's an exit that comes, or unless we have another significant volume bar or some other kind of thing on the chart to tell me that there's a reversal that's happening. I'm sitting in here. I've already got a good profit under my belt, and I'm just waiting for it so that I can harvest more profits. I'd mentioned earlier, if anyone has any requests for any tickers, don't see anything. All right. Oh, here we go. So Patricia, thank you for noticing that. Yes, volume. And she was also mentioning 5x leverage. Yes, 3x is okay for her. Yes, 5x, and it's only on it's only available on the London Stock Exchange. So let's look at a few more. Let's look at Apple. And this works on all instruments. We're just looking at the U.S. stock market, but I know a lot of the traders here are trading some of the other world markets, and this works on those just as well. So this, we're going to find the default template here. There we go. So same layout, 150-day simple moving average, and you'll notice a lot of the times our longs come in. What a coincidence! Right around that Weinstein 150. Doesn't always happen, but there's our short that comes in below. There's our long that comes in just at that Weinstein average. So let's take a deeper dive into the entries here. So see that first entry there? Remember, we go back to our principle of we need to clear a previous pivot high on Apple, and our previous pivot high that is green is there. So I draw my line across there. And the reason I do this is one of the biggest enemies of technical traders is a chop. So when you're going into a channel, you only know you're in a channel when you look back. You're not, as you're in the first little bit of it, you don't know that. You don't know how long a channel will last. This one simple tool of just breaking a previous pivot high or pivot low, significantly defined previous high or pivot, previous low, will keep you out of a lot of that chop. So there's my line. I draw across. We don't clear that. We have a nice little short here. We can skip that for now. This was a good trade. Let's focus on the longs for a moment. And we get our next long entry here. It's very simple. We're not anywhere close to this previous pivot high. But what do? I put this on my chart, on my watch list. And now I've established a new pivot high there. Okay. Now, forgive me. I should be a little lower. Let's move it down there. So I've got a new pivot high that I've established on that bar there. Okay. Now this low here is interesting. This low here, we're talking about how to stay out of the chop. Do I take the short? I don't, because I look at this previous low here. Okay, this is the clearly defined. So the way to check what's a clearly defined pivot low is just compress your chart. There's one there. So we'll get our trend tool out. There's one there. There's one there. And there's another one there. And there's one more there. Okay. These should be straighter, but I think you get the idea. So now let's zoom in on that long. There's our long there. I could say, yeah, you know what, it's not convincing. I'm not convinced that this is the break here. I think we might still be in a channel, but am I convinced here? Yes, I absolutely am convinced here. And when I get into this trade here at a close of 229, I put my stop loss 10% below, which is 22.90, call it $20, just to keep things simple. 209 would be my stop loss. We never come close to testing that. And I've already established my first profit take level, which is the previous pivot high. So from 229, my profit level here is reached about 10 days later at 241. And from there, I can see if there are even more previous pivots that I can use for future profit targets. So we can use this one here. Okay, and that gets taken out very quickly after we reach that first level. And if we go back even further, take our trend line here. So we're looking for areas where we're going to have some significant support or resistance. So resistance to the upside, support to the downside. Let's see if I can stretch this all the way over. And just by simply using those trend lines, you've now not only gotten into a profitable trade, but you have established profit levels and you've hit 1, 2, 3 profit levels here. So if you're using options, or if you, in this case, if you're using a 250, 270 call debit spread for no more than $6 to $7, 90 days to expiry, for me, that is sort of the sweet spot. And it's not because I'm willing to risk 7 to make 14 or 13. It's that I know that my risk is so well controlled, barring a gap, and gaps will happen, and prepared for those. I know that if the trade starts moving against me, I'm not going to lose that entire 7. It's unlikely that I will lose that entire 7. I may lose 2, I may lose 3. So if I lose 2 or 3, but on the upside, I have the opportunity to make 13, 12, 11, 10. It's basically getting a 4 or 5 to 1 risk to reward. And that is indeed what ends up happening here, because we're not trying to predict what will happen. We're looking to see what's happened in the past and where the stock is most likely to go. So this gives us that little bit of predictive function. And from there, it's the stock's job to go up, and it's your job to structure the position to give you the most asymmetric situation, where if it doesn't go in your favor, you're down 1, but if it goes in your favor, you're up 3, 4, or 5. Okay, so this is the way I trade it. My job here really is to show you that you can take this system and apply it to the way you're trading it to find a little bit of extra alpha. Okay, Jeff, are you available to come in?
I'm right here. Yeah.
Okay. Do you want to show off the scanner and tell people how they can get this? You do such a better job at this than I do.
Yeah.
Yeah.
Go on.
I'm here all day if you need.
Let's see. We did get, I don't know if you noticed, there was a couple of tickers that came in the chat.
So Patricia was mentioning 150-day simple moving average. Yes. Iqbal was saying ticker SPY, futures MES. Iqbal, it works the same. The futures, in fact, work a little bit better because they trade for longer. So the signals are a little bit more. I suspect if you're trading the the micros that you're trading them on a shorter time frame. Let me know if that's the case, and I can have Jeff show you the day trader version. Donna was also mentioning, Donna, do you mean EPD as a ticker that you wanted me to look at? I know Kevin had mentioned AVGO, which I will look at shortly. Okay, Jeff, let me look at AVGO for Kevin.
Okay, and then I will be ready to show the beautiful commentary you wrote, as well as the scan as soon as you're done.
So Kevin, this is AVGO. Again, I hate to sound like a broken record, but I want to catch the big move. I'm not interested in the point or two here or there. So there's my entry, and again, there's that 150-day simple moving average. We get above it. It looks like we may find a bit of resistance there. So if you're playing along with me at home here, tell me, is this a trade that you would take, or would you wait for some other kind of confirmation? I'll go back to the questions. All right, well, we wait for Kevin to answer. Kevin, I would wait for some kind of confirmation here. So there's the entry, and there, to me, is a beautiful, beautiful pivot high right there. So there's my level of resistance. Draw my trend line across. And this, to me, is a bit of an aggressive trade. But this, to me, you can see it pulls back a little bit. We don't get within that 10% level. Our close here is 203. Our low here is, what's our low here? It looks like 199 or so on the low. So our exit would have been at 180. So we're not anywhere close to that. And we're looking at closes only. We're not looking at intraday moves. We're looking at closes only. So there's my trade there. Very clear breakout. Yes, there's a bit of pullback. You do have that 150 supporting you, providing you a bit of tailwind. And from there, you never really look back. And if we do what we did with the previous ones and just draw our support and resistance lines, there's one. And if I compress the chart in a little bit more, I think past here, you're getting into all-time highs. So from there, I would say on AVGO, every 5% or so, you start looking. Now, I have a hard rule. I have a strict rule. I do not like to stay in trades through earnings. If there's a significant profit already built in and we've rolled the options out a few, it's a gamble, and I accept it as a gamble, because while this happened, this likely was an earnings move here, it's very likely that this could have happened as well. So I don't want to give back all that profit. So I likely will get out before earnings and then look for another opportunity to get back in. All right, Jeff, let me make sure we've got everything. Patricia was asking, what kind of indicator are you in your scanner tool, please? Velocity. Here we go. So, and Kevin, yes, I agree with you. It's the break of the pivot that I would be looking for. A more aggressive trader could take that first entry. It's just not something that I do. And as I said, I want to make things as mechanical as possible. I don't want to be taking one trade one day, another trade another day. And part of the reason for that is because when I look back through my notes and when I look back through my trades, I don't want to say the aggressive trades did this and then the conservative trades did this. I know my style, and I know it would worry me if I took the aggressive trade. And the mental game is just as important as the charting or the fundamental game. Jeff, you're on.
Ready. I'm ready to show it. Okay, let me go ahead and share my screen. Let's see, do this. Share. Okay. And I'll turn my camera too. Might as well. As you can see right here, I'm running a little bit of an exploration. S&P 500 again. When we come in and we start to do the scans, we kind of dictate what kind of scan this we want. I'm looking at the daily buy signals. I'm doing the S&P 500 and it's done. But before I kind of go to the results, I don't want to spoil you already with those. I just wanted to kind of identify some of the commentary. This is just the spiders. I was looking at the spiders. It's been in a fairly long, pronounced upward trend. But I just want to kind of kind of review the commentary that comes along with this. So let me open it up. View commentary. Okay. Right here, we're currently long. We've been long for some time, and we've got our profit targets. They're listed right here. If I go back to where this kind of started the trade, it's going to give us a lot of information that was put together by Rahul about this trade, what we should be looking for, all that kind of good stuff. And if you'll read along with me in your book, now I'll just read it out loud to you. You can read along if you want to. When we get that long, so any of these signals that we just found that have a long, this one actually happens to be a long plus. The velocity system has detected a momentum shift in this security due to favorable price action and or volume. There's been additional confirmation of this trade due to the support of the lower price level. If you wish to take advantage of this opportunity, you could look at the purchase of common shares or a 90 to 120 day to expiration call with an 80 to 85 delta. Adjustments for time to expiry on the options should be made for signals on shorter time frames. An initial stop guideline, and it kind of goes into details about where you can put your initial stops, what you should do with them, and gives you the overhead targets. I like the way that Rahul kind of takes the targets off and the way that he kind of locks in the profit. So let's go back to that scan. Ran that scan on the S&P 500. Again, with our scanner, you have the ability to run it at any time during the day. Whether you have MetaStock, DC, or RT, you can kind of get in and see results. So these are for today. We could exercise these on the market. The markets are going to close in about an hour. And if we like these, we can run this scan. We can get the results. We can see what's going on today. So in terms of this one, the one that I ran, I'll actually just show you what's available in here. I'm going to go to the scanner. I just did a search for the word velocity. They all start with velocity, so you can find them really easy. You've got daily buy signals, daily short signals. You've got your intraday buy signals and your intraday short signals. Those are the scans that are available. So there is a different signal or a different scenario. Once we got it put together, though, here are the 6 out of the 497 that have a recommended long signal. Okay, if it has a 1 in this long plus, it's a long plus. It's a long that is stronger. Is that how you call it? A super long?
I think it's just a long plus, Jeff, because when we did the programming, there was that one additional indicator that lined up at the same time. Mm-hmm. And in our back testing, it showed that those symbols tend to have a higher success rate.
Right. So you've got your long pluses here. If we're just looking for those, we've got CVS Health that we can look at. We've got Exelon Corporation that we can look at. We could go up and look at the charts. If we want to, if we didn't like any of those ones, we also have the other 4 too that you could look at. Again, the thing I love about scanning as a trader that also has to work for MetaStock. And don't get me wrong, I love working for MetaStock. Best job I've ever had for 30 years. But as a trader that also works very hard, I love to be able to go in. I run a scan every day. I want to see just the stocks that have an opportunity. I want to be able to focus on the stocks that have an opportunity and not on the 497 here that didn't. So I love that.
Jeff, you also bring up a great point. By doing the scan, I think the one real benefit is that, and I mentioned this in the presentation, I'm not all that interested in trading Lilly, which is $1,000 stock, because mm-hmm. I'm not interested in deploying $4,000 to $5,000 on one options contract.
Sure. Yeah.
So I can then screen by the price level. I can screen by.
You've got the close price right here. Yeah.
Yes. So I think the scan is so valuable in so many different ways here, and it's such a time saver for me personally.
Oh, I love it. In fact, anybody that kind of is around here knows that I try and save $130 to do my trading. $130-ish, which is 3:30 Eastern. I'm here in Utah. So that's the velocity system. Now, there are some pretty good inclusions. I'm going to kind of jump over here. I love the box that our team put together for this. But we talked about how you can do scanning. I think if there's one thing, if there's a couple of things that I really want to kind of get in, is the ability to scan and the ability to find those trades really work well. And I love the expert advisor. When I was kind of talking it through with Gemini, it really kind of said that the expert advisor was the crowning jewel of MetaStock. It takes everything, it breaks it down into English, And Rahul, when I kind of sent you the sample commentaries and said, I want something that looks good, you knew what I was looking for. You understood the assignment. You did a great job with it. So anyway, this kind of helps you break through the noise. It helps you trade with clarity, gives you your signals, gives you momentum. If you purchase this and you haven't got a free year of the Trading Win service before, you get a free year of the Trading Win service. That includes, well, why don't you tell us a little bit about the Trading Win service? And I won't read from the slides. I'll just slip my I'll let you do it.
Thank you, Jeff. One of the real benefits is the mentoring that comes along with it. So we've always been firm believers, Vince and I both, that we don't want to just give you something and say good luck with it, let us know how things work out. We meet Monday, Wednesday, Friday for a live session for an hour every Monday, Wednesday, Friday, where we talk actively about these trade ideas that we're looking at. And the group in there, the group has all kinds of knowledge. It's hundreds of years of knowledge within those members. Some are experts in metals, some are experts in options, some trade 0 day to expiry options, and we're all looking for that one common. We're working towards that one common goal, which is trying to make money in the market. In addition to that, you also get a nightly update, Sunday to Thursday. Sunday and Wednesday, I do the update. Monday, Tuesday, and Thursday, Vince does the updates. So you'll get a digest of what's happened in the market, what trade ideas we're looking at. The spreadsheet will be presented, and we'll follow those trade ideas from cradle to grave. Any adjustments that are made, any exits that are taken, any profit levels that are hit. So we don't want you to feel that, okay, here's a system, and trust me, bro, it's a system that we want to support, and we want to support you in your trading. The goal here is not to say, hey, this is what it's saying, you should just do this. The goal here is, listen, this is a system, here's how we're using it, here's how you can use it to apply it to your trading with your risk tolerance, with your goals and objectives. That is really what we're trying to offer.
I just realized what time it is. But in addition to that, you'll get a year of the advisory service. Greg goes to it all the time. He absolutely loves it. The feedback that I've had for these member sessions has always been super positive. So normally the Velocity system would cost you a one-time cost of $11.97. You're going to get that. You're going to get the Trade Wins membership. You're going to get a free trial to MetaStock if you need it to kind of help you with it. The total price would be about $3,426. As part of the conference offer, we're going to do it at $997, and we're going to back it with a money-back guarantee, so you can try it out. You can go to the live sessions that happen 3 times a week, and if you don't think it's helpful, if it doesn't help you identify those better trades, what a great risk-reward ratio. You'll get all of your money back. So you can do that. If you get in touch with us, you can call us at 800-882-3040. You can go to metastock.com/saleschat or metastock.com/velocity. And Greg is going to be putting those in the chat for us. You can click on the links. Rahul, we're out of time.
Jeff,
you did a great job.
Very grateful to you and Greg and to the rest of the MetaStock team. Thank you for having me on. And for those of you that are on, please stay tuned for Vince. He's coming on at 4 or in an hour.
He'll be in right after the next speaker. Yes. And yeah, you want to stick around for that too. He does a great job too.
Jeff, thank you. Okay. Thank you. Be well.
Prepare to be excused.
I will. Thank you.
All right. Oh, he's gone already. Okay. Excuse. Yes. All right. Cool. There you go. A very, very popular product. Again, you can try it out if you don't like it. If it doesn't work for you, if it doesn't help you, you can get a refund. $997 special price. Metastock.com/velocity, 800-882-3040, or metastock.com/saleschat. All 3 of those will get you there. We've already said thank you to our sponsors, Stocks and Commodities, and the Traders Forum. I really appreciate those guys. In an effort to get us back on schedule, I'm going to poll the prize winners after we start the next presenter. So I will actually announce the next winners after Melissa Armo. So without further ado, Melissa Armo, a great friend of mine, a gentleman by the name of Steve Bigelow, would always say that a gap is a sign of a shift in investor sentiment. And our next guest specializes in the gap. Melissa Armo right here on the screen, you can see her, is going to come and talk a little bit about gaps, how she uses them. I can't remember how many point system that she uses to create gaps. She's going to tell us though, and she's going to tell us right now. Melissa, let's get you started. Hello? I cannot hear Melissa.
Yeah, Jeff, I also cannot hear Melissa.
Okay. It looks like her microphone is on. So Melissa, I'm going to assume you can hear us. If you unplug your microphone and plug it back in, that'll usually fix it for you. Oh, she's gone. Apparently she is going to come back in.
She probably decided to unplug or log out and log back in.
Yeah. I assume she'll be right here. Do you know what that means, though?
That
means we should do a prize.
Let's do that.
Yeah.
Stretch.
Yeah. And then we can tell dad jokes, and hopefully she'll be back in here.
Yeah, it'll be a good time.
Okay, let's do a prize real quick while we're waiting for her to kind of get back in here. And if I need to, I'll give her a call.
Sure.
But the prize we're going to give away is 6 months access to the Trading Trainer Premium Selling Program. It's the Instant Income Calendar. I can't really read my notes very well over here.
Okay.
But it's an instant income calendar that's put together by AJ Brown, and he puts a value on it of $597. What I need from you, Greg, is I just need a number, and that number can be anywhere between 1 and 5,991.
That number is. Oh.
Yeah, there's Melissa.
Okay, just wanted to see if it was working.
Sorry. We can hear you, yeah. We decided to give away a prize while we waited, but we can hear you.
Yeah, I'll get out of y'all's way. The number is 3186.
3186.
And Melissa Armo, break a leg.
B3186. That is Seraphin I with a Yahoo address. Okay. We'll go ahead and kind of copy that off to the clipboard. Melissa, I can hear you now. Or I could.
Well, can you hear me now?
Yeah. Okay, good. You had me going for a second there. I can hear you now.
Yeah, for some reason, it would not allow me to log in the normal way. I'm on a browser. I think that's why I had a problem with the mic. And now I'm not sure if you're going to be able to see my screen right, but I'm going to try.
Oh, I bet it'll work. Ta-da! All right, first try. I'll go ahead and turn off the camera. Melissa, I can hear you and I can see your screen. And if you need me, I'm right here for you. Otherwise, I'll be quiet.
Okay. All right. Thanks so much, everyone. So welcome. It's a very interesting day to trade. The market, as Jeff said, had a gap today. So we gapped down today and fell initially this morning. And now we're pushing back, and we'll see where we go tomorrow. So the beginning of 2026, I think, for people that have been very bullish, has been a very difficult year. It's been a good year to short, though. I do focus on shorting. Kind of interesting because, again, 2025 from April until about October was a very good period to go long in the market and many, many stocks. But right now we're seeing a lot of even bullish stocks, even strong stocks falling, selling off. Many stocks we've been trading, which we're going to go over today. If you have any questions, you can plop it in the chat. Hopefully I can see it. I'm going to try to change the slide here, see if it works. But today I'm going to talk about gaps. I'm going to talk about trading on the side of institutional money in gaps. This is BI Pure and TV. I talk about the stock market. I talk about the economy. I talk about how I trade. If you have questions, you can always email me at melissa@thestockswoosh.com or call me at 929-3200-GAP. Probably the best place to follow me is YouTube under Stock Swoosh. I have a lot of videos there. And again, we've been talking a lot about what's been happening overseas, the talks with Iran. We saw oil fall today. So it's this type of market where you really have to pay attention to really almost every single thing that's happening. For me, though, I do trade based on the price action, based on a chart. And again, specifically, I prefer to short. But right now, it's very cold. It's winter here in New York City. I live in Manhattan. And it's a great time, actually, to make money and trade. It's not the time of the year that you really want to be outside that much. And we've had an extremely cold winter here in New York. and I'm counting the days till spring, but luckily it has been really good trading. So I've been able to take advantage of these moves in the market. I typically focus on morning trading specifically. That's when the gap is happening. But I have been trading some trades in the afternoon when we've gotten some big moves in the market. So if you've been thinking about trading and you want to do it, obviously everyone has the same goal. Everyone has the same goal when they trade. They want to make money. So why doesn't everyone make money trading? Because a lot of people that trade the market don't have a strategy. They don't have any strategy at all. Then there are people that have a strategy and maybe it only works under certain market conditions. Like, for example, I was talking about 2025. If you were a buy the dip person in 2025, that worked with an extremely strong market that made multiple brand new all-time highs, from April up until October. But those conditions have ended. And again, if something's at a certain market condition that won't last, it's difficult to use that as a strategy to make money for the rest of your life. You want to be able to do something that you can apply in the market on a daily basis and use for the rest of your life to make money. So whether you're doing this, like I said, full-time or part-time, trading is exciting. We just come off of a 3-day weekend. Market was actually down more than where we opened this morning, kind of lifted a little bit. And it is the type of market where you have no idea what's going to happen tomorrow. I'm sure a lot of people think this is the low, where we're trying to push back here, but guess what? It may not be. We could fall off the cliff tomorrow. We could fall off the cliff Thursday or Friday. Remember, it's a short week. So I decided a very long time ago that I wanted to trade for a career. I was doing mortgages and the mortgage industry was changing in 2007, 2008, but I didn't know what I was doing. I didn't have a clue. And I ended up just throwing myself into the market and creating my own system, which took 3 years of my life. And again, as Jeff said, it's based on stock scalping, which is very unique. And then I got into shorting. And the reason I got into shorting and started focusing on shorting is because stocks move faster than they fall. That's just a fact. Why? Because panic comes in. And if you traded last week, again, before the holiday, you saw huge sell-off in the market and some really nice sell-offs in some major market movers, specifically Microsoft, Google. Those have been some of the ones we've been watching and playing. Oracle too. So I put in here the stats for 2026. Since the beginning of the year in the room, my average day trade, when I say day trade, it's where I short the stock and I short the shares. And you have to have a margin account to do this. 203,467. This is through last Friday. Today, actually, I didn't do any trades. I actually looked for some shorts today. I didn't find any setups. I didn't do any day trades today. But these are my stats. My average risk is about $5,000 per trade. We've had 44 trades, 26 winners, 17 losers, and 1 break even to start out the year. And again, this is through last Friday. Monday, the market was closed. 61% win ratio. I also do options. I risk more money in my options. That's why this total is greater. I've actually also done a few more options trades. We've had a busy start to the year. I'm risking around $9,000 per trade in my options. And again, we've had some huge movers so far to start the year. We're going to talk about some of those here today. 615,250. You can take one contract. Now, while I'm talking about shorts, in an option, a put is a short. So if I'm buying a put and selling a put, for example, if I'm shorted PayPal, that's a short. So again, what is a short? A short is where I'm betting the stock price will drop. You can do one contract. You can do 3, 4, 5. You can risk less money than I'm risking. I've been trading for almost 20 years. It's really hard to believe, actually, but here it is. It's 2026 already. So I've made an entire career trading because of the fact that I focused on just one thing, and that's it. And I've gotten really good at it. So whether you do options, whether you do day trades, if you want to come and learn with me, I do both. We had 55 trades for the options newsletter, 36 winners, 18 losers, 1 break even, and a 67% win ratio. So this year has been a very good year to short. We're shorting the market, we're shorting stocks, and we're not going to stop. Again, this year is very different than last year. Again, whether or not this bounce in here we're seeing here, we got 45 minutes left in the day, whether or not we close weak, neutral, or close green in the body of the bar today or not is really no indication whether or not tomorrow we rally or not. because I'm telling you, we've had many rallies this year since January, and many of them have not held. So this is where a lot of people are seeing difficulty because, again, they're doing the same strategy they did in 2025, and now it's not working in 2026. I'm just looking here as the questions. Can I see the chats? I think I can see the chats. Somebody chats, Jeff.
Yes, it's under just the little questions box is where they will come in.
Okay, I got it.
And if you can see it, Eric, the last one said we can see your screen.
Perfect. Oh, I have to scroll down. There we go. I got it. Okay, perfect. Anyways, getting back to what I was saying, trading requires a positive attitude. It requires a positive attitude because why? Not every trade works. And you may be doing something and you may be struggling, and it may just be that you don't understand what's happening. Market conditions have changed, or maybe the strategy that you were using before just has stopped working. So again, sometimes it's like when you injure yourself, you ever have an injury and you have to do the rehabilitation, you have to do the exercises, and you may take 10 steps forward and 3 steps back. It's sort of like that when you're getting over like a sports injury or something. And sometimes that's the process with trading and learning. You know what I mean? You're strengthening. You're strengthening your skill set. You're going through the motions. You're thinking it through. You're using your brain, but you need a positive attitude. And unfortunately, because money is this thing that sometimes makes us really excited when we make a lot of it, and then really upset if we lose, a lot of emotions get involved with trading with people. And then people tend to make decisions based on emotions and not based on the chart, which can cause a problem. Now, I use my emotions actually to help me trade. I call it 100% conviction. I might say I have 100% conviction Oracle's lower or the market's lower, and that helps me. But again, I still use my same strategy. The reason behind the trade is the same. And you have to understand that not every trade that you take, even if you have a great strategy, a fabulous strategy, which I do, not every trade is going to work. So you have to size yourself correctly. Again, I showed you the stats. I have the losers in the stats. Every trade in the brackets is a loser. So you're going to have some trades that do not work. That's why you have to choose an amount and risk and be consistent with that risk, apples to apples, so that you can move ahead, so that the winners cover the losers, and you have more winners and losers that you can move ahead, okay? So what I'm saying is, even if you have a loss on a day, you shouldn't just throw in the towel and get all down and depressed, because you can take that into the next day, that negative energy, and you don't want to do that. You want to be positive. So again, in order to become successful, you need a system and a niche, very important, and it has to work under any market condition, you know, bullish or bearish. And like I was saying, when you take a trade, you take the trade and you're basically not really creating anything. You're just saying, I'm betting that the stock's going to drop or rally if you're long, but there's always a winner and there's always a loser. And so again, it's not like you're making sneakers, you know, or creating or you know, making sandwiches and selling them at a deli. You're not actually making a physical product when you actually cash out in a trade. It's the smartest people against everybody else. And when I decided to trade gaps, I decided to focus on looking at institutional money, which is basically hedge funds in the market for the most part. When I look at the market, I don't know if I have a chart in here today of the market or not, but I can just talk about it. You can pull up your own chart of the QQQs. I'll just talk about today. There's no institutional money buying this market today, even if we close green in the next 40 minutes. So I'm looking to trade with the power money, which is hedge funds in the market, big professional traders, large banks. Large banks have trading desks and trading floors, and they are taking positions in stocks too. If I'm going with an institutional money, I feel like I have a high chance of winning. If I'm against it, then I feel like I don't have good odds of winning. Okay? You follow what I'm saying? So you need a good system to succeed, and you have to follow it daily. And I feel like if I go through my process It's a rating process. It's a worksheet I use every day to try to find the best stock to trade that's gapping. If I rate the gap and it rates high, I feel like then I have a high chance or probability of making money, that it will go in the direction of the gap. And if it rates low, then I feel like I shouldn't do it at all, that it just doesn't even have a good shot, and therefore I don't want to risk my money. So I'm very, very focused at what I do, usually doing 1 trade a day, maybe 2, but usually 1 trade a day. And again, my focus is gaps. So I'm not doing a million different things. I'm not doing futures. I'm not doing crypto. I'm not buying dips. I'm not shorting rallies. I am only either shorting the gap or going long the gap. But again, today we're talking about shorting, but it's mostly fast moves that I want out of the gate. I want to see the volatility, which again, we saw a lot of that last week, and we did see that today. No matter how we closed today, this was very volatile today because we gapped down and fell this morning early, if you watch the market, you know, the first 30 minutes of the day. So volatility is your friend. That's actually a good thing. And, you know, we're talking about options. It used to be just the weekly options. Now there's daily QQQ and SPY options where you can actually do daily expirations. I don't do that, but you can. It's a cheaper way to trade the ETFs. And now they've come out with many large stocks, many big companies. This is in every option or every stock, Monday, Wednesday, and Friday expirations. So there's so much volatility going on right now in many of these stocks because they're making it more accessible to have more market participants even doing options. Again, that creates the fluctuations and the volatility. And again, volatility is your friend as long as you get the direction right. Okay, so let's talk here about what is a gap. So this is a chart of Oracle. Okay, this is a daily chart. So a gap is the difference between the close and the open. So Oracle, I'm just going back here. Oracle closed at one price here, opened at another price here, fell. Actually, I'm looking here. This is 2025, Jeff, Oracle. I don't know what happened here, but we got the wrong Oracle. This is October, November 2025, not 2026. I don't know. But anyways, this closed here, gap down, fell. So this is a gap. This closed here at 4 o'clock, and this opened here at 9:30. So the difference between the close and open is a gap. So that's a bearish gap. So if you shorted Oracle here, you would have made money. Now, there is also bullish gaps. Here's a bullish gap. This closed here at 4 o'clock, gapped up at 9:30, rallied. Now, I did not go long this. Again, this was last year, 2025 in October. But we were shorting Oracle last year. We were shorting it this year too. I don't have this year in here. But anyways, long story short, this just shows you an example of a gap. And actually, Oracle, I already know Oracle, the price of it today is around 150 something. So this just shows you, I didn't realize this was October data. But anyways, it just shows you what happened. October, November, December, January, in the last 4 months, Oracle has lost half its value because the stock's trading today at 155 if you pull it up. Any questions about that or what is a gap? Anyways, getting back to what I was saying, the world is interconnected. There's lots of news going on. It's 24 hours a day, and the gap is occurring when you're asleep. So you can get up in the morning and see the gap, you know, well before the market's even open. And that will help you decide what to do in the day. So all the prep that I do, all the prep work is actually done and what I want to trade even before the market opens. And sometimes I'm in trades, I'm already in the trade, and then it continues to go in my favor, in my direction overnight. Because again, things are happening all over the world, but that actually can help you make money if you know how to read it. Any questions here? So I was talking about, you know, the beginning of the year, how it's been such a great time to short. This has just been some of the best trading I've seen, you know, very unexpected, I should say, in some regards, because 2025 was so bullish. And also the market itself is still in an uptrend. I want to be clear about that. When I say the market, I mean the QQQs and the SPY. But there's been way more volatility and momentum to the downside in this market from the beginning of the year, that it's been extremely difficult for people to make money going long, and it's been very easy and fruitful to make money shorting. Again, you got to get the timing right. You always have to get the timing right in options. How to read what, Kevin? What's your question? Getting back to what I was saying, I use a 26-point system each morning. This is what I teach in my class, which is a 14-hour class. It's a long class that I teach once a month on a weekend, that goes through and looks at 26 things on a daily chart. I see the gap, I rate it, and if it rates 20 points or more, I will take the trade in the direction of the gap. So again, I thought this was January. So I don't have January's data here, but we did do shorts in this back last year anyways. Again, with this gap here in the morning at Oracle, you could have bought a put or you could have done a short. This was a good gap. And again, it's very interesting. Again, I'm not doing swing trading, but just to see where this went. This was the day before Halloween. The stock closed under 260. Again, I'm telling you, I don't know where it's closed today, and it probably rallied at everything else. It doesn't even matter. The stock price is around the 150s. That just shows you how powerful is the gap. Okay. And again, you can use this system if you want to do longer term options or leaps. I'm just doing this for momentum trading for short term options that expire on the Friday or day trades. Okay. Okay, so here was actually a week of trades. This was last week. I'm going to go over all the trades we did last week here. So here we are. We're January. Actually, let's go over what a gap is again. This was Amazon. Okay. This was back in January, beginning of February. Stock closed here at 4 o'clock, gap down, open, dropped, fell, boom. So this is a gap. So on the 9th, okay, we shorted Amazon here. Again, closed here, gap down. We shorted it as a day trade. We got in, got out. We also did puts in this, and this continued down. This was down today too, but this is a day trade. I'm just showing you here. 205.70. My risk was 51.20. You have to have a margin account to do this, or you buy the put. And I got in, got out. Again, I was looking for a buck, made it basically about $1.50. 46.40 profit, in and out very quickly here on this particular day. I will do puts at the strike or away from the strike. If you want to do it in the money, you can, but normally I'm not doing it in the money. I don't really feel like I have to pay for that. I'm looking for it to move, so I don't find any benefit in paying up to do it in the money. Then the 10th, I did GT. I took a stop. This backed up. Again, stock closed here, gap down. I got stopped in it. Okay, so this was a loss. Then we did Google, and this was a nice trade. This is again on the 10th. Here, closed here, gap down, shorted Google, got the drop, got in, got out. This is another one we've been hammering to the downside. Again, what is the market? The market is made up of stocks. It's kind of funny because, again, I appear on TV and everyone's been sharing about the Dow when it got up over 50,000, whatever day that was in the last 2 weeks. There's only 30 stocks in the Dow. I never understood why people on TV talk about the Dow. I don't even watch it every day. It's like there's only 30 stocks in that indices. So it's just, you're better off watching the QQQs of the SPY, and the financials are part of the SPY. Oracle, well, I have a current Oracle trade in here, but my chart in Oracle is old. But I get in trades very early in the morning between 9:30 and 10 a.m. Eastern time. Every trade that I'm going over right now, all of these day trades, I'm in very aggressive in the first 30 minutes of the day. And the same thing with my options for the most part. Now, that doesn't mean I never do an options trade later in the day, but if I do an options trade like in the afternoon, like if I would have done a trade at 3 o'clock, I'm holding that overnight. So I don't do that many afternoon options. But if I do call a trade, if you're on the newsletter and you get it, know that I'm taking it and I'm not getting out of that before 4. Do you know what I mean? I did the mat. I made a little bit of money here in the mat and I got out. This was another one here that just didn't go as big as I wanted it to, but I did make a little bit. That was the 11th. And then we did Microsoft, which I've been absolutely loving. Microsoft gap down today, broke 400. I just don't know why this has been getting hammered, but it has. We did this on the 11th here. Big, fat, red bar. Again, shorted it here, 408.80. We did puts in this too. If you didn't want to do the day trade here on shares, on margin, again, made more than $2, 4,300. You could have just done the put. Again, it's a cheap way to get a move in a stock that's this price point by doing options, because you might pay $5, $6, $7 for something instead of having to have a margin account where you have to have the shares. But I do both, is what I'm saying. Then we did the Cisco on the 12th, just another gorgeous move. Again, Cisco was earnings. What happened? It gapped down. Stock closed here around 85 at 4 o'clock, gap down here under 80, tried to rally, failed, and fell off the cliff. Came all the way down. Again, nice move in here. And we shorted at 79.50, got out quick. I should have held this. Got out at 78.30. I got out of this in the morning. Look, it went all the way down to 74. I did not hold this. So I got in and out. I always get in early. I always get out quick for the most part. And I'm done. And that is that. Again, a day trade, when I'm saying a day trade, I'm calling the trades of the room. I'm saying the exact number to get in and out with me if you're doing it. You pick your size, but they're margin trades. I do not hold them overnight after over 4. I will hold an option, but I'm not holding a trade that's on 4-to-1 margin. Or even if you have 2-to-1 margin, I'm not doing that. I'm out. And then we did the Google again on Friday the 13th. I just realized that was Friday the 13th. Before Valentine's Day. Closed here, gap down, dropped, fell, and we did the Google 306.90. This came down today. This fell today. Again, this has been lower. We've been doing puts in this. Exited this at 304.95 at a beautiful exit in this. Again, 44.85 on Friday. So again, we had, one loser last week in the room. We're just hammering it. And today I didn't do anything. Now, I will tell you, I did watch Google today. I did watch the PLTR today. I did watch the market today, and I didn't end up doing any day trades in any of those because they just didn't set up right. Even though we did have a little bit of a sell-off this morning before we flipped. But I just stayed away today. It was a little choppy. But again, consistency in trading the gap helps me get the consistent numbers, get the consistent profits. So again, what is a gap? A gap is the difference between the close and the open. Stocks gap most every single day, but not every gap is a good gap, or what I call a golden gap. I'm looking for gaps that are predictable, and not every gap is predictable. You can't short every gap down. You can't go long every gap up. People want to short every gap up for a gap fill and buy every gap down for a gap fill. You can't do that either. It's not that easy. That's why I developed the criteria. So how do I do that? I use my rating system to go through and evaluate. This is the SPY. I have to laugh here. I don't know why this is October. Jeff, you must have been thinking about Halloween. Here's a gap. Stock closed here, gap down, open, rallied, dropped. Anyways, this was back beginning of November. Okay. You could have shorted the SPY. You could have bought a put. You would have done it out for a week. Look where it went. So again, this is, when you look at the numbers, you say, oh, we're basically back in this area. So where did we really go? Remember, the SPY did make a new high earlier in the year. Qs never did in 2026. The diamonds did, and the SPY did for just a touch point. And then we sold off again last week. And now here we are just looking at October, November numbers. And guess what? We're basically where we were. Like, we've basically gone nowhere for 3 months. If you look at it, like, I don't know where we're closing today, but this is basically where we are today. Again, this is old data in here. You can find gaps anywhere. I don't pay for a scanner. You can pay for a scanner if you want to, but almost everything gaps every day, to be honest with you. So almost everything gaps, technically. You want to be technical about it. So finding them is not hard. It's learning the criteria to rate them to determine if they're going to continue down or if they're going to flip. And again, if I see a gap down that's going to flip, then I'm not going to do it. I'm not going to go long it if it rates bad. And I'm obviously not going to do it. I'm not going to short it if it rates bad, because then I don't think it's going to continue down, but I don't flip it. You follow what I mean? And we very well could have continued down today. We started to. You know what I'm saying? Again, we didn't end up doing anything today. But getting back to this idea of momentum, I'm looking for momentum in the gap to make money. That's what I want. If I have momentum, whether I have 100 shares or 1,000 shares or 5,000 shares, I'm going to make money. I'm trying to get the most bang for my buck. So again, if you have 1,000 shares of a stock and you short it, it drops $1, guess what? How much are you going to make? $1,000. If you have 1,000 shares of stock and you short it, it drops 10 cents. You're going to make what? $100. So what would you rather make? I'd rather make 1,000. So I need the big move. I need the momentum. And again, I get that in a highly qualified gap. I'm not scalping for 10 cents, 5 cents, 15 cents, 20 cents. I'm not scalping. It's too much risk. And then the winners do not cover the losers if you're scalping and taking a huge amount of size to make only a couple $100. Do you follow me? You're never going to really move ahead with that. But I'm day trading stocks. That's what I'm doing. And again, if you want to do options, I'm doing them too, but I'm usually holding options longer. So I'm really not day trading options. But I am buying the put to enter the short and selling it to exit it. Okay. So anybody that trades, though, should have a system that sets up daily or almost daily. Again, there might be some days in a month you don't have a good trade, then you don't trade. That's fine. But for the most part, you're going to find a good thing every day with a high level of predictability in the directional move. And you want to trade a system that works independently of the market and does not need the market with it to work. Because again, if you need the market, it's going to be tough because the market's very difficult to get right all the time. You may think the market's going to fall and then it flips, or you think it's going to rally and then it fails. There were many, many gap ups in the market that failed actually in the last 2 weeks, and we sold off. So again, it's not as easy as just doing it for a gap fill or taking it in the direction of the gap. There's a complexity to gaps, which I have found is very profitable. That is how I end up developing this whole system. Again, it took me 3 years of my life though. But getting back to what I was saying, success or failure has everything to do with the quality of your system. Because if you don't have a good system, it's going to be difficult for you to make inroads by the end of the year. So I got into shorting. I got into doing shorts. My niche really is shorts because I like the fast trades, specifically for the morning. When I started trading, I was doing day trades. I didn't get into doing options till about, 7, 8 years into my trading career. And again, like I said, the benefit of options is you don't need a margin account and you can also hold overnight and the cost is less. But I'm still doing puts, okay, which is a short, and I'm still looking for fast moves because again, stocks move faster than they rally. But I realized over time, when I started out myself personally, and then when I started my business, and I started to teach people, and I started to hear other people's stories of frustration and trying to reach their own level of success and failing, that people were just trying and jumping around from thing to thing to thing to thing to thing. How I got stuck on this was just one day I did a short. I made a lot of money very fast and I was shorting and it wasn't a gap. And then I just kind of never looked back. I didn't know what I was doing at the time. But then I realized there is something to these gap things and they move big. When you get them right, you can make a lot of money. And then the idea of shorting, because a lot of people, most people prefer to go long in any market. And I don't know why. I'll never know why. But for me, it was never that case. Because when I started shorting pretty early on in my career. But you really need a niche if you want to do well in this business, specifically if you expect to hit the kind of numbers I'm hitting or even do this as a career. If you want to trade like everyone else out there, your results will be like everyone else, and most people unfortunately lose unless they're in a trending bullish market. Again, it's very easy to go long a dip, and if something is trending bullishly with the market, you can get in, get out, or scalp and just go along your merry way. We're not in that market now in 2026. It actually ended around October of 2025, but I think a lot of people were hoping it would continue, and it kind of faked out like it was going to. But it should be obvious to everyone now this year is a different market. But my method is based on reading institutional money that moves stocks and gaps. Not all gaps are made with institutional money. Okay, you got to know that too. And this is one reason why people often are confused reading gap direction. But it is not confusing if you have a method to review it daily. And that's how I got into doing this. And like I said, it's based on charts. It's based on technical analysis. And so I'm seeing the gap in the daily chart. And you can too. I always am shocked and surprised and amazed how people trade with no charts at all. Again, you can talk to Jeff afterwards about charts. You're blind as a bat if you don't have charts. You can read all the earnings reports that you want and say, oh, this looks great and Microsoft's higher and doo-ba-doo-ba-doo. But at the same time, if the stock price is falling off a cliff, you're going to lose. And a lot of people buy stocks when they're falling, and I just scratch my head. You're not Warren Buffett. You can't keep buying it until it gets down to zero. I'm not saying Microsoft is going to zero, but I'm just saying, active day trading, active trading, which is what I'm doing, you've got to get in and get out and get the move pretty quickly. I've only got 6.5 hours in the day on any given day to do my margin trades, and I only got a week or maybe a week and a half for my options. You don't have a lot of time to mess around, and you don't have endless amounts of money to wait for the trade to go back in your direction. And on top of that, the broker will kill your trade. Again, that's what happened with some of the sell-off we saw in the last 2 weeks with some of the margin trading for futures traders, where, the broker just took them out of trades. We have a question here. Fascinating. You're using volume to deter institutional money. I don't use it. I just won't trade anything that doesn't have volume. So I guess in that sense, you could say I use it, but I really don't even bother with anything that doesn't have volume. So I'm not trading low float stocks or penny stocks or anything like that, or it's a weird one. I don't trade stocks just in general. It's not like a rule, but I just don't, because it's not going to have a big move if you don't have institutional money in it. And if it doesn't have any volume, you don't. So it's just like, I just don't even bother with those types of things. Okay, getting back to shorting. So how can you make money shorting? Again, you're betting the stock price is going to drop. Who can short anyone? Again, you can buy a put. So even if you don't have a margin account, you can open up a cash account, an options account with cash, and you can short by buying a put. If you want to trade your retirement account, or if you're not sure about your broker, you have to call the place, ask them, and find out if you can buy puts or if you can short, and how do you set it up? You got to look into it. Anyone can short as long as you have an account set up to short. Retail traders and professional traders both can short, and hedge funds short. Yes, they do. They absolutely do. So again, think of yourself like a professional trader that has millions and millions and millions of dollars, even if you're taking small size. So selling happens fast to the downside. Moves are usually done pretty quickly. And again, we did this Oracle. This isn't a current chart, but it is interesting that this is in here. It's just showing how this price has been chopped in half from last year. We did on 129, the 160 Oracle puts that expired last Friday. It was just a great trade. So I called this at 10:13. So it was a little bit later in the morning. Again, got out of this the 5th. Again, you could look up a current chart of Oracle yourself. 525 was a cost, not bad, not bad. Again, we did a lot of day trades on this too. You can look back from the stats from the beginning of the year. Sold at 23, made $31,950, a 338% return on investment. A nice trade. Again, if you did 2 contracts, beginner risk, or you could do 1, 10.50. You risked, you could have made 35.50. Nice trade. Again, you're in this for a couple of days. Not a big deal. It's not the end of the world. Couple of days. Again, this isn't months and months and months and weeks. And I'm not saying Oracle's going out of business either. But again, I did a webinar, in December. someone was saying, oh, you're shorting Oracle, it's at the lows, and I'm like, again, momentum trading is just, it totally makes sense. I don't know why people don't do it. Most traders don't do it. I don't know why. You go with the momentum. Again, this is an old chart. This is funny. But we also did the 155s that expired. This was a quick one. We did it on Tuesday, expired on the Friday. This was, though, a much bigger trade. Cheaper too, $3, sold at 18.50, 46,500, 517% return investment. And if you got 4, you could have made $6,200. Oracle, again, is falling today. It doesn't even matter where it closes today. It's just, that chart is a gorgeous chart for looking at momentum to the downside. And again, this isn't a current chart, but actually this is a gorgeous chart too, just from October, November, and we were doing it here. So for momentum, is there a percentage above average volume that catches your attention? So for momentum, is there a percent above average volume that catches your attention? If you're doing so, are you trading during the first 15 minutes? I'm trading sometimes immediately. So I don't wait necessarily 15 minutes, no. As far as volume, I would say I'm not even going to touch anything if the average volume is under 300,000. But I can't even tell you something I've done recently that's like 300,000. So it's sort of like, I mean, all of these companies, even go back and look at the stats, all of these companies that I'm trading, just flip through here quickly. I don't want to run out of time here though. These are, everything. You're like, oh, I know what this does. I know what Microsoft does. CVX is Chevron, Visa, oh, your credit card, MasterCard, oh, you know what? You know everything. Lockheed Martin, everything you hear. Oh, I know this one. I know Apple. I know this one. I know this guy. There's the bank. Boop, ba-doo. We're Netflix. You got it. You know everything that we're doing. Again, what's his face is testifying tomorrow in that trial that's going on, Zuckerberg with Meta. I don't know. I'm not in any trades in it. It's certainly on my radar tomorrow. See if it does something. Disney. So PayPal. These companies. So they're going to trade. They're going to have volume. They're going to have big moves. They're going to be played by the big boys, whatever you want to call it, or the big girls. They're going to move. Whether you do one contract, like I said, or whether you do 10, you've got to get momentum. And you're going to get it in these stocks. And again, there's a million stocks that I trade, but I'm just showing you, you've heard of all these companies. And you're going to get filled. And you're going to get in, and you're going to get out. When you want to get out, you're going to get filled too. I mean, you trade crap stocks. What if you can't get the hell out? I mean, trust me, that's happened to people. Or the stock goes under or goes bankrupt, and you're in it, and then it goes under. It's off the exchange. I've heard horror stories like that from people that have traded crap stuff. They never get their money back. It's gone. That's happened. I forget what it is. I don't trade any of these crap things, but there's one, again, I'm up here on Charles Payne's show. There's some stock, he was talking about it with somebody. This is like last year. I don't even know what it's called. I want to say it has an M in it or like a W. Oh, God, I have to email him. You know what I mean? There's some stock that just went off the exchanges and it's gone. And like everybody that was in it did get their money back and they never will. I mean, it's just like, be careful is all I can say what you're trading. Getting back to what I was saying though, short moves happen fast. Why? Because there's panic that comes in. Panic is fear. Fear creates selling. Again, you could say there are people who are panicking because the government shut down. People are panicking because of Iran. You could say whatever reason you want to say. There's always a reason. But again, very often you don't find out the reason till after the fact. You can see the price action before the reason pops up on your news feed. Do you follow what I'm saying? I'm just getting in. If you want to wait to get in for a cheaper price in a trade, that's up to you. But you could miss it. So you could miss it. So anyways, how do I find the best shorts daily? How do I make the picks? I use a rating system. This is what I teach in the class. It's a 26-point rating system that teaches me and you what to look for and whether I should do it or not. And again, I didn't do any day trades today. I'm already in options, but I didn't do any day trades today because, again, I am looking at something and I'm trying to find the best thing to do. So again, gaps are created with large institutional money. That is what makes the gap. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and confirm that the large money will flow with it. And I'm just seeing somebody else on my screen. Jeff, I don't know if you're there. There's somebody else just popped up on my screen. I don't know if it's just mine or not. That was funny.
It's Vince Bohr.
Vince Bohr. Vince, you might want to turn off your camera.
Yeah, please.
We got a little guest.
Yeah.
Anyways, getting back to what I was saying, I look at a checklist for finding the shorts because people get scared, okay? Like, again, if you had the TV on all last week, you could even hear the commentators in their voice. People were scared when the market was selling off, but they were trying to tell people like to buy stuff. And I'm like, I mean, this is like, you're telling people to buy when things are falling off a cliff. And again, I'm not talking about your retirement account. If Microsoft goes to 360 and you're like, oh my God, this is a great price, I'm going to buy it from my retirement account, that's one thing. I'm not doing long-term investing. I'm doing trading, active trading, momentum trading, where I'm trying to make money by Friday, or I'm trying to make money today before 4, or maybe next Friday. Now it's a short week, so any options I do this week are going to be out for next week just to give myself a cushion. But again, the idea of shorting is you can make money very quickly and fast, okay? So what if you have a small account? Can you still short? Yes. You just have to call your broker, have it set up correctly. Again, you can buy puts, which is a cheaper way to do shorts on margin account. I'm looking to make 1-to-1. Many trades are more than that, but I'm trying to find 1-to-1. And again, I'm going through the checklist, which gives me high odds. If it rates 20 points or more, I feel like it is high odds to work. There's no 100%. That's why I have to choose and set my risk. When I take a day trade, I put a stop in. I can lose if it stops. So again, I know that if I'm doing something, again, it could lose. So I have to set my risk and I have to put a stop in my day trades. Again, I might get stopped and retake it, but you have to know that this is about playing the odds. So I feel that the odds are in my favor, that I'm going to get more winners and losers if I take only trades that rate 20 points or more through my rating system. Okay. And like I was saying, you have to have a positive attitude because you're going to have some tough days and you got to pull yourself out of it. You know, the only way to move forward if you have a losing day is to make money the next day. You know, and so you have to understand that this is a process. Again, like I said, like if you have a sports industry where injury, where you're learning, and maybe you've been learning for years and back and forth with a different thing. So don't give up. You can learn. I often say that people that find me are meant to find me. There's a lot of people out there to go to and learn from different things. You know, you have to listen to the things I said today to see if anything I said resonates with you. Again, I only do gaps. That's it. And I'm mostly shorting. And I do mentor people. Again, I call the live trades in the room. I think it's important to have a mentor. I think it's important to have someone that you can ask questions to. What do you think about this, Melissa? What about this? What's the target? Whatever. And I'm here for people. But it is about taking calculated risk, not risk for risk's sake. You're not going to make money if you don't take risk. So again, you have to be willing to take the risk. But I tell people to start slow. Start slow so you can learn it and it not be in fear. And that's important too. And gaining the confidence in yourself. There's nothing like gaining confidence where you're green. That's really going to help you a lot. But anyways, create a plan of action to achieve your financial goals, whatever amount of money you need. Again, I'm looking for 1-to-1. If that helps you. And if you come and take my class, you will learn how to measure gaps or rating them on the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, preferably. Big move in the day, early confirmation of the bias of the move between 9:30 and 10, and precise entries with follow-through and a good risk-to-reward target potential. So my class is called the Golden Gap, and you will learn the Golden Gap system. You'll learn the entries, the exits, and the 26 points. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. This checklist tells you what to trade when and in what direction. The 26-point checklist predicts directional bias in a stock. And again, focus is extremely important. You should only need one trade a day to make money, and then you add size. And one strategy really is all you need to be successful in the market. I'm proof of that. And again, you will get good at something if you're focused on that. If you're all over the place with everything, how are you ever going to get good at anything? It's just like, again, the Olympics are going on right now. You have people that are in very niche sports, and they're excelling. They're great. They're the best. These are the best people in the world. Even people that don't medal, these are the best people in the world. And they're doing that one specific sport, and they're great. You know, if you've been watching Olympics, I've been watching and enjoying it. You know, they're not all over the place. You do not need a general overall broad-based view to make money. Tons of people have that and fail all the time. Learn how to read institutional money and price patterns and gaps, and you don't need to do anything else. And I was really lucky, actually, that I realized that very early on. Because if your reason for doing this is to make money, I'm telling you this will make you money. People have joined the class for this weekend, and they've already made the cost of the class just because we've had a lot of great trades. It's a luck of the draw. You never know when we're going to have some absolutely huge, huge winners. I will tell you that we were short the market before it fell off the cliff in the last 2 weeks. Again, I traded the gap, and we did it, and we got it, and we'll see where we go from here. It's not that I never go long. We went long LMT. I still think that's higher. But the fact is that, again, I prefer to short, and short moves do happen fast, and a lot of traders actually prefer to go long. So you will learn the checklist in the class, and I do it every day. So if you come in the room, I say, I like Oracle, I like whatever. I'm doing the rating myself. I'm telling you, we're doing the trade. I'm calling it. You do it with me, but you should learn how to do it yourself so you can do it. So the class is called the Golden Gap Course. It's a class on how to find, pick, and play professional bearish gaps. Class is online. You can be anywhere in the world and take it. So the class is February 21st and 22nd for February, 9 to 5. $69.99 is the cost of the class. Again, if you want to sign up, you can email me. I'm also doing an Olympic package, which I am doing for this weekend, for this week. So this includes the newsletter, free to the end of the year, room free to the end of the year, market report free to the end of the year, 2 one-hour mentoring sessions with me, and the wealth manifestation class. This is a big bundle that includes 3 classes plus everything I just said, which is the Golden Gap, Trends class, which is Tuesday, and the options course, which is next Thursday. And this is $89.99 for 3 classes and everything I just said. And this ends on Friday. Any last minute questions here? I think I'm doing okay with time. Thoroughly enjoying the Olympics, more so than the summer one that was just on. Any other questions?
We did have one from YouTube that I'll throw over to you if you don't mind.
Yeah, go ahead.
Let's see where to go. Gopa wanted to know, how do you know it's institutional participation, high frequency trading?
Well, that's what I'm looking at, the daily chart, and I'm going through a rating system, and it's a checklist that tells me, let me find a chart here, and I'm going through it, and I add it all up. That checklist tells me if I get 20 criteria that it is institutional money. And if I get 20 or more, again, the higher the rated gap, the higher the quality of gap that it'll move. If I don't get the criteria, if I rate it and go through the checklist and it totals 15, I say, no, this isn't institutional money, and then I don't do it. And like I said earlier, I don't flip it and go long.
All right, cool. Kevin wanted to know, and I think this is a really fun question. Do you split the bid and the ask, or do you pay the bid to get in?
If I'm trying to get in something right away, for example, then I will just pay it and I will just buy it and I will get in, because I'm not trading options for pennies. So if the spread is like 35 cents or 50 cents, I just want in, because I'm trying to get a big move, $2, $3, $4, $5 in something like, you know, PayPal or Oracle. I don't want it to go without me. Yes, you can wait for it to quote unquote pull back, or you could put it in between, but what if it goes? I mean, I've been in some things that have gone and then they've gone $3 through the strike I called. So you did. So some people don't wait it. They said, well, I want to wait till it pulls back, and they don't even get the trade. So that's like over time, I'm just said, I'm trading the momentum of it. I'm paying what it costs. I'm sizing myself correctly, because I'm not trying to be stingy about the price, because I don't care about 25 cents in the price of what I'm paying. I'm trying to pay $5 for something and get it to go to 10 or 12 or 15. If I pay $5.50 or $5.75 and it goes to 12, I'm making money no matter what. Do you follow me?
Mm-hmm.
Somebody asked, how do I decide what price to pay for a put or not in the money? How far out? Again, I'm not doing them in the money. I'm really not doing them in the money. I'm doing them away from the money. Like if I said the target in Oracle is 150, then I'd buy the 150 puts and I just pay it and I say it's going there. Like again, I don't know where we closed today, but I'm just making up a number. Like Oracle is going to go to 150 again. So, but I'm just saying I will look at the time I have and I will see where the stock is. And I know these stocks and I'm familiar with these stocks and how they move. But if you want to buy the 155 puts and it's trading at 155, you buy it. But I'm not going to buy the 160 puts if it's at 155, if that's what you're asking me. No, there just isn't. There's no reason to do that. I think that's it.
Yep. All right. Very good. That's also.
Anyway, great seeing you, Jeff. I don't know what happened here with this on the web browser, but we'll get it fixed for next time. But at least it worked.
Yeah, I'm glad you got here. You did a great job. Thanks, Melissa.
Thank you.
All right. Good. Let me go ahead and dismiss you. And I do appreciate her being here. Let me go ahead and turn on my camera. Let's go ahead and make this video a little bit less blank. And as we move on to our next speaker, I want to say thank you to our sponsors. Thank you to Stocks and Commodities magazine. Stocks and Commodities is a great magazine. Love them. And they've been a great supporter of MetaStock over the years and the conferences and all the summits that we do. You can get your Stocks and Commodities subscription if you go to traders.com. And big thanks to them for supporting the event we do. If you haven't yet joined the Traders Forum, you can join the Traders Forum at thetradersforum.com. There you can chat with other traders about what you're interested in, talk to them, learn about the markets. It's a community of traders designed to help traders. You can join up for free. www.thetradersforum.com. Greg, I do think we always have time for a prize. Let's go ahead and do one real quick, and then we will kind of get on with the day.
You got it. I'm just trying to. So Gopa Marcianat 3695 asked where to ask a question on YouTube, and I'm sorry, I can't say your name or your moniker. At any rate, you can ask questions right here in chat on YouTube if you're on YouTube, and of course, if you're on GoToWebinar, just ask it in the questions tab.
Oh, okay.
I'm sorry, Jeff, go right ahead.
His question was, where do I ask questions? Yeah, right in chat.
Yeah, that's what I was trying to answer.
Gopa's a member of the forum, I believe. I'm very sure.
I expect he's been around because Maverick said hello, and he knows people.
Yeah, although Gopa goes by just Gopa in the forum. So,
I see.
Yeah. In any case, let's give away a prize. Larry McMillan wanted to give away some copies of his McMillan's 14-topic home study course. It's got a basic, an intermediate, and an advanced section. It's a retail value. It's 14 lessons total. It's about $433 of value. And we're going to go ahead and select a winner. Now, Greg, why don't you just make sure that everybody knows? If you're watching a GoToWebinar, you're okay. You've already registered. You can get the prize. You just have to be lucky. Do you feel lucky, Greg?
Sure.
Okay.
I feel lucky.
And then if you're in YouTube,
where's the phone, Jeff?
Are you feeling lucky? There's an interesting story that maybe I'll tell in a minute about a podcast I listened to recently. But let's stay on task. If you click on the link that's pinned at the top, it'll take you to a registration form and you can register. And if you do that, you too could be lucky enough to win a valuable prize. Greg, let's get.
Don't register only once. You needn't register more than once.
Correct.
That just mucks up the work.
What? 2 and 59.91.
Oh, I already pulled that up. It is. I didn't pull it up. It's 2065. 2065.
And that is Etor in Canada with a Rogers.com email address. So Etor, if you're watching, you are obligatorily required to say, hey, I want a prize. That's awesome. But you don't have to be present to win these prizes. So congratulations. We will email your information over to the Larry McMillan's team, and he'll get them over to you. All right, cool. Thank you very much, Greg.
Later.
All right. Let's move on to the next speaker. I do want to remind you that you can get that extended trial that we've been talking about for MetaStock. All of the offers that we're doing here internally, anything like that at metastock.com/conf promo. If you have questions, we would love to talk to you. 800-882-3040 or metastock.com/saleschat. Our next presenter is somebody who has had a tremendous impact on my trading. He's released some of our most popular add-ons, including Victory and Victory 2, which he's going to talk about today. Vince has a very good, some of the things I've learned from Vince over the years is he likes to find stocks that are in a great trend. He likes to find stocks that don't have a lot of support and resistance above them when he's buying them, things like that. I like Vince in terms of he's got a very good teacher nature to him. I'm going to put it that way, which is a really, really weird way to put it. But Vince, let's go ahead and get you started. How you doing today?
I'm great, Jeff. Thanks for having me on, and I apologize for the camera mishap earlier.
Hey.
Normally I have it preset to be off when I log in, but for some reason it turned on unexpectedly. But thank you.
It's always great to see you, Vince, even if it's unexpectedly. And also, I'd be lying if I would say I think it's probably happened about half the time. So.
Oh, really? Yeah.
People just pop in and you're like, hey.
Yeah.
Okay.
Thanks for having me on. Appreciate it.
Of course. Go ahead. If down below is the share button, you can just share. I don't even have to give you control.
Sure. Let me just see which screen I'm sharing here. There we go. Let me know when you can see my screen.
Yep, I can see it. That's a pretty
beautiful.
All right.
Beautiful.
I'm going to get out of the way. It's your turn. Go.
Thanks, Jeff. Appreciate it. Welcome, everybody. It's good to be here with you again. As Jeff said, today I want to talk to you about our Victory 2 method that we've been using since 2019 now. I'm Vince Four. I'm the head trader here at tradingwins.com. If you were around earlier today, you saw my colleague Rahul with his Volatility system. And today I'm going to demonstrate our Victory 2 method here. As I said, we've been using it for several years now. And as Jeff said, it's a system based on trend and momentum. And so what we try to do is identify a group of stocks, ETFs. You can trade this on anything, Forex futures, Bitcoin, Ethereum. It doesn't really matter. Whatever you can chart, you can trade. It works on any time frame, any stock exchange around the world. It's simply based on technical analysis. So anything you can chart, this works on. And so what I like to do is start with sort of a top-down approach where I start with a monthly chart of the index charts like the Dow, the S&P, the NASDAQ, and the Russell. Sort of get a feel for where the markets are going. Are we in an uptrend? Are we in a downtrend? Or are we in a consolidating market, a sideways trend? Right now, I'm showing you the chart of the SPY, the SPY, which is the ETF for the S&P 500, on a monthly time frame. And looking at this, we are clearly still in an uptrend, a pretty strong trend here. Now, the last month or two, we've been kind of sideways. So, are we making a top? Are we not? Hard to say at this point. But certainly we've been in a very nice and strong uptrend. And that's what we want to see. And when we do that, the system will automatically tell us when it's advantageous to get in and when we should be exiting the system here. So let me start by explaining what you're seeing on your chart, and then we'll go from there. So obviously there are these green and red arrows. Now, if you look closely, there are two different types. There are smaller, lighter colored ones. And by the way, all you have to do is hover your mouse over any of these symbols, and it will tell you exactly what it is. So the smaller, lighter colored green or red arrows will either say long or short. Then we have what we call HPB, which is a high probability buy, or an HPS, a high probability sell. This has an extra layer of confirmation compared to these symbols. So early in that trend, you'll see a straight long or short. Once we get into that trend, you'll see them appear as HPB, confirming that we're in an even stronger trend. Now, along the way, you may also see green or red dots. What these are the exact same signals as the arrows. The only difference is we're already in a trade. So we decided to mark these as long RE, which is re-entry, or short re-entry. So the way you can do this is if you missed the first one, now you can feel free to get in on that trade, or if you're already in, you can add to that position along the way. But I would encourage you to have strict money management rules and not be overexposed on any one position, right? So we also have exit flags that appear every once in a while. But a lot of times we will go straight from a long to a short or a short to a long. Now, I will say we certainly don't want you to take every signal you see. If you do, I mean, testing has shown us they're still going to come out ahead. But what we want to focus on are the symbols that have the strongest trend and momentum on your side. So what you also see here is a blue line. Now, if I hover over it, you'll see that it's a moving average. It is the 20 period simple moving average, right? And we use that to judge the amount of momentum behind a move. So what you want to see along with an arrow here is a slope on that 20 period moving average in the direction that you're trading. So if we're trading long to the long side, you want to see a slope upward on that 20 period moving average. If we're trading to the short side, you want to see a slope lower, downward slope on that moving average. And the higher the degree of slope, the better. So ideally, these are the kinds of trades that we're looking for. The ones that appear near that blue line and that have a significant slope on that blue line in the direction of the trade. Now, at the bottom here, you'll also see a couple of ribbons. In this case, they'll say weekly and monthly. The reason for that is when we're trading with a daily time frame, we want to know what our victory method is telling us on 2 higher time frames, right? So if I'm trading off the daily, say I'm looking to take this trade, I want to know that the weekly is also green, meaning it's also currently in a long trade using the victory method. And same with the monthly. Now, say you're trading on a 5-minute time frame. All you have to do is right click here and apply template, and then go to the bottom. They're in alphabetical order, so you got to go to the Vora ones, and you apply the 5-minute time frame. And what that's going to do is throw on a 15-minute ribbon and a 30-minute ribbon, right? If you do the 30 minutes, it's going to throw on the 1 hour and 2 hour, etc. So there are different templates for the different time frames that you are going to trade with. Okay, but basically what we're trying to do is make sure the trend is aligned on 3 different time frames. That gives us a much higher probability of actually making a profit on that trade. Okay, and so now, as I said at the start, what I like to do is sort of take a top-down approach and see what the overall market is doing. So I look at the chart on the monthly and then I move backwards. But to get a sense of the overall market, meaning a broad index like the S&P 500, for example, along with the different sectors or industries in that, we have what we call a multi-time frame view here. And again, you right click on your chart, you go to templates. Here, let me just show you again. You right click, apply template. And if you go down to the Vora ones here, there it is. There's the market overview and the market overview MTF, which is multiple time frame, which is the one I'm showing you here. Now, when you add that to your chart, it will take a minute to load, basically because it's bringing in data for all of these different symbols at the same time on 2 different time frames. Here on this snapshot, I have the daily and the weekly. Now, this is an older snapshot. This is not what the current market is telling us, but what you're basically trying to gain from this is to have a look down these rows here, and we have the Dow, the S&P, the Nasdaq, and the Russell, the 4 major U.S. Indices, along with the different sectors, all right? Energies, financial, healthcare, etc. Now, these are going to be colored green or red. And if it's green, it means that the victory system on that symbol is currently in a long trade. If it's red, it's currently in a short trade. If you ever see yellow, it's because it's not in a trade at all. It's in a neutral, it's at a neutral point. Okay, so generally you may get a mix, but when we're either in a strong uptrend in the overall market or a strong downtrend, what you're going to see is either a lot of green straight down the row here at the far right, all right, or a lot of red. And that'll give you an idea of how strong the overall trend for the market is. So in one quick snapshot, you get that whole picture, and then you can go back to your charts and start looking at individual snapshots. And again, this works on any time frame. If I go to a 5-minute chart on the SPY, okay, it's going to show you what's currently happening with 5-minute bars. And so there's going to be periods where you get long setups and periods where you get short setups. Obviously, on a 5-minute time frame, days that are very active have a lot more volume. There's news, things are happening. You're gonna get some strong moves, and it'll be easy to find these trades. Other days that are quite boring, you're gonna get a lot of chop and not a lot of setups or good setups anyway. Okay. Now, as I said, the intent here is not to take every single setup. So we have an 8-point checklist that I'm going to quickly show you here. This is what I want you to focus on. Number 1, a clean chart. What do I mean by a clean chart? Well, something that's trending strongly. And let me give you an idea. I'm going to go back to the daily chart. I'm going to look at mostly daily charts. It's the time frame I focus on. But please let me know if there's any symbol that you want to see, anything that you want to look at, and let me know the time frame that you want to look at, and we'll bring up a chart. Okay, but let's go to something like Micron, for example. Right, Micron's been trending strongly recently here, and I want to show you this as an example of a very clean chart. Now, when you're in a very strong trend, what you tend to see are bars that are more or less the same size throughout that move. It's nice and orderly. There isn't a lot of mess, and you can clearly, in a split second, tell whether we're in an uptrend or a downtrend, right? Something messy. For example, I think Zoom has a messy chart, or usually has a messy chart. Yeah, there you go, right? It's a lot more difficult to tell, are we in an uptrend? Are we in a downtrend? Should I trade this? Should I not? Look at the bar sizes, right? All over the place. Some very small, some very big. This is a clear picture of volatility. And the problem when you're trading something like this or trying to trade something like this is that you end up getting stopped out very often. And that's what you want to avoid, all right? So you want to select charts that are nice and clean. So that is the first piece of criteria that we look for when we're looking for a trade. Okay. Next, we're looking for a reason to enter. Obviously, here we're looking for a victory entry. So one of those arrows or dots, either green or red, right? Then, as I said, the slope on the 20, and the more significant the slope is in the direction of the trade, the better, right? And then we're looking for the distance from the 20 and where the bar closes. So, for example, have a look at, and this isn't really a good example, but this bar with this green arrow is a little further away from the 20. Now, let's say it was this bar up here, right? Much further away. I don't like taking those trades for the main reason being when price moves away from the moving average, and this works the same with any moving average, doesn't necessarily have to be the 20, but when price moves away, it tends to snap back, right? So the last thing I want to do is buy here and then sell down here, right? So if, for example, we buy very close to the 20 here, and we get in this trade and it turns around on us and stops us out, it's normally a very, very small loss, right? And if it works, great, you get that push away from the moving average and you're already in profit before it starts to snap back. So that's the reason why we want to buy near that blue line. Secondly, on that bar, where does it close that day? I mean, obviously there's a high, there's a low, an open, and then the close. So we want this to close in the top half, preferably the top quarter of the bar. The closer it is to the high for that day, for long trades anyway, the higher the likelihood that this is going to follow through over the next few days. So that's what we want to see when we're looking for a long. In addition to that, we want to make sure that there's little to no overhead resistance. So what do I mean by that? I want to look to my left and I want to see blank space, right? A lot of blank space. If there was a lot of prior activity here, a lot of trades, a lot of bars back and forth here, we are likely to run into resistance. We're likely to hit that area and get rejected. In this case, there is nothing. So the closer you are to all-time highs, the better it is, right? And lastly, we want to check the higher time frames, meaning we want to make sure these ribbons are aligned with what we're seeing here on the daily time frame. And then we want to make sure that the next earnings report for that company, if you're dealing with a single stock, if you're dealing with an ETF futures contract, you don't have to worry about earnings. But for a single stock, you want to make sure the next earnings announcement is at least 10 days away, if not more. Okay. Those usually result in gaps, and we don't want to get caught in those gaps one way or the other. So this is a perfect trade example here, right? Where we have a nice clean chart. We have a victory entry here. We're near the 20. That bar closed near the high. There's very little to no resistance overhead. The longer time frames are aligned and earnings are far away. And then we go from there, and we can add to these trades along the way, or we can hold until we get a change of color. Now, we obviously encourage you to scale out along the way. And with this indicator, if you decide to try this indicator, there will be a couple of training classes that come with this where we go over this in detail, okay? But we have certain methods of taking profits along the way and also adding to our position along the way. But what I want you to remember is that if you ever see a change in color, whether it goes from green to yellow or green to red or vice versa, you need to exit the full position, all right? There's no reason to stay in this trade if it's changed color. That is the sign that is a hard stop. You need to get out of the full position there. But it doesn't necessarily mean that you're going to reverse course and go short. So for example, if we go through those rules again here, for a short, we're looking for the 20 to be sloping lower. Do we have that here? We do not. So this trade doesn't qualify. Same thing here. For this long trade, is the 20 flat or is it sloping? It's flat. So none of these trades qualify here. All right. And this is a beautiful thing. I mean, where traders lose most of their money are in sideways markets. So when this happens to the market, traders buy and they get stopped out. They short and get stopped out. And it happens over and over and over again. And this is where the newer traders lose all their money. In trends, it's easy to make money. Okay. Obviously, our algorithm looks at a number of indicators that line up and will give you a higher probability entry, an exact point to enter where the odds are stacked in your favor. But during a strong trend, you can pretty much buy anywhere along that line and make money. That's why it is so safe to do so when there's a strong trend with strong momentum on your side. Okay, let's look at some recent trades. And again, please feel free to enter symbols if you like. EGO, right? Gold, silver markets have been trending very strongly recently. Now, remember when I said that during a strong trend, the bars are more or less all the same, right? Same size. Look at what's happened recently, right? all different sizes, big swing back and forth, right? That's volatility. So this is where you got to be careful. During these times where you have a nice clean chart, nice strong trend, you've got that 20 sloping, you get these high probability buys, you've got nothing overhead, you got the multiple time frames aligned, right? And if earnings are far out, these are the safe trades. So as I'm flipping through these charts, just focus on these areas where there's a nice, clean, strong trend, and you'll see that the majority of these trades are winners. With this, you should have more wins than losses, but more importantly, your wins should be way bigger than your losses. That's the kind of math that works in your favor, both short term and long term. Okay. Sure, we can look back now and say hindsight's 2020, but this 8-point checklist is what is going to make sure that you stack the odds in your favor every single time, because it won't allow you to take a trade in a sideways market. It won't allow you to take a trade during this kind of back and forth volatility. If you follow the rules, you will be focusing on these types of trades. And again, if you're trading on a weekly time frame, on a monthly time frame, it works the exact same way. All right. There's no difference whatsoever, whether you're on a very higher time frame or a shorter time frame. We go from an extreme, a monthly chart down to a 1 minute or a 5 minute chart. It doesn't matter. It all works the same. So remember that. So look at these times back in here. These are the nice trades that will qualify according to that 8-point checklist. Okay. That is the main thing. Let's look at a few more here. And let's look at some different markets as well. So gold, for example, right? Whether you're trading a single stock, an ETF, a commodity like gold, doesn't really matter. Again, look at this trade here, right? At the time, there's nothing over here. If we go back, everything is below it. At the time, we had moved into all-time highs here. Then we consolidate a little. We move back towards that 20. We get the high probability long setup. The 20 is sloping higher. The bars are very similar. It's nice, strong trend. Look up overhead. There's nothing but blank space. Look down here. Both are green, which means the weekly and the monthly are, currently in a long trade as well. And we don't have to worry about earnings. And that bar is close to the 20. It closed pretty much close to the high. The next day, what we look for is 1 tick or 1 penny trade above the high for that day. And look what happens next, right? It changes color and we are out of that trade. That's what we look to repeat over and over and over again. I always tell my students trading can get boring because you're doing the same thing every day, day in and day out. If you build the right habits, you find a method that works and you just stick with it. So if you're doing this on your own, it may get boring, but it's a good boring because it's profitable, right? So let's look at something like Bitcoin, right? Bitcoin has been choppier, right? Not a lot of strong trends, but if we go back, you can clearly tell those areas where there's a stronger trend than when there isn't, right? These periods. And again, it's based on the slope. So what are you going to be doing every day with this? Well, you'll run a scan, you'll find a number of trade candidates, and then you'll spend your time with this 8-point checklist comparing one trade to the next, right? And that's what we're going to focus on the training with you. Excuse that error message. And so that every day what you're doing by scouring those trade candidates and comparing them is you come out with 1 or 2 strongest trades for that day, or if you're trading intraday, for that 5-minute period or whatever. But you can also, if you're already familiar with technical analysis and so on, you can look for patterns. You can include chart patterns with the victory method, you can include things like a channel. So here we had a nice move lower. This was a great trade right here. You know, and the shorts are just the exact opposite of the longs, meaning you still need a signal, but a red one, not a green one. You still need slope, but downward, not upward. You still want the bar to be close to the 20. You want the close to be near the low of the bar, right? You want the two ribbons to be red, okay? If you ever see blank space like this, it's because there aren't enough bars to paint that. So on the monthly time frame, you know, Bitcoin's not hasn't been around as long as something like IBM or Ford, etc., and may not have the full history, and that's why it might not show. And if you only see the one ribbon, that's good enough. And then again, you look for support down here. Is there a lot of activity here? No, there wasn't, right? So that's why that was a nice strong trade. Then we go sideways. Now have a look at this. If I mark these lows around here, right? Look what happens. So we break below the moving average, right? At this point, the sell, we had an upward slope, or at best we could say flat. We certainly didn't have a downward slope, right? So we cannot take that trade. Now, it moves, it comes back for the retest, and it gets rejected right at that 20. This time we do have slope, and we have a close below all this prior activity, which tells us it's a great entry, and off we go, okay? So again, whether you're trading gold, silver, Bitcoin, it doesn't really matter, single stock. You can go to different markets, right? Like the Nifty 50 here. We've tested this all over the place in Australia, Canada, US, UK, Japan, all over the place. It works exact same way, right? And again, any time frame. So what you'll want to identify again are clean, strong trend areas, and you can pretty much tell that by the bars on their own, right? Recently, it's been a little more choppy here. Let's see. I think we have a few symbols here. Neil wants to look at Intel. Sure, let's look at Intel. Oops, I got the wrong one. I was typing a little too quickly here. 1 second. There it is. Intel Corp. All right. So what does Intel show us? So you can tell by the bars, you know, a little choppy on the daily, right? But we are in an upward swing so far. But, you know, right now we're below the 20. Is this a valid trade? No, it's not. We don't have downward slope. It wouldn't allow us to check off each of these 8 points. I want to stress this. You need to be able to check off each and every one of these. If only one of them you're not able to check off, you cannot take that trade. The odds are not in your favor. Okay. If we look at a different time frame, say a weekly time frame on here, you know, again, the higher the time frame, the more the smoother the price action is. So you're able to read the swings much easier. So if you know, you have a full-time job, a family, etc., and you don't have the time to do this every day, weekly charts are great. You just review your charts on the weekend, run your scans, place your trades, set your stops, and move away. If you're more of an investor, you want to use monthly charts with this system. Okay, the higher the time frame, the smoother it is. Now, if you see this kind of, you know, back and forth, odd-looking price action, I would just walk away. There's so many charts, so many setups for you to look at. You don't need to try to force a trade on any particular stock. Hey, Michael's here. How are you, Michael? Michael wanted GLD. Michael's been to so many of our presentations. I really appreciate it. Look at this monthly chart on GLD, which is the ETF for gold, right? I mean, how clean, how strong is that, right? And so let me give you two other things that you can consider. A lot of people that I talk to don't have the patience to wait for a trend to be in you know, already in place. and wait for that slope. They want to pick the absolute bottom and the absolute top. Now, I will tell you, I think it's a losing game, but if you want to do that, if you want to try to pick the very bottom, here's what I'm going to give you 2 rules that you could look at that might allow you to take some of these versus not. Now, again, I will stress, I highly suggest you stick to the ones with the 8-point checklist. But if you can't help yourself, then on something like this, when you see a channel, I would highly suggest you wait for a break either above those highs or below the lows. Okay, draw a box around it and wait for a breakout one way or the other. Okay, but let's look at this one here. The only way that a long or short entry, victory entry, is justified when you do not have slope on the 20. So during a flat 20, the only time I would ever take a trade is one, if I get a close. So if this setup bar was a close above the prior high, it wasn't here, so wasn't a good trade, but let's say it had closed up here, okay? That's one rule that allows you to take that trade. The other is on a retest of the 20. What do I mean by that? Well, if you look through a channel like this, a lot of times you get a close above the blue line, turns around, closes back below, then closes above, closes below, right? Now look at this time. It went above. When it came back here, it did not break below. You see how it held? So that's a retest, okay? So it confirmed that it found support at the 20 and has now turned. So that is a reason why, and you usually see that at the end of channels. That would allow you to take it. Now, again, it's still a riskier trade than something with slope, okay? And let's say it was the first case where it closed above that prior high. It may still be too far away from the 20 for you to take. So be careful with those ones. And especially if you're just starting out, I would stick to the ones that have slope and meet all 8 items on this checklist. Okay. Let's see if there's anyone. SLV was the other one. Yes, silver, gold have been super popular. Again, you know, no-brainer trades when there's a trend here, no question. And if you want to trade them, you know, when something is trending that strongly, if you want to try to catch shorter term trades on a 1 minute, a 5 minute, etc., you certainly can. Again, here was a trade that would have qualified, right? You know, we had significant slope on the 20, right? We had nothing but blank space here. Now, I don't have the template here for the 15 minute and the 30, but I can tell you in all likelihood that they would have both been red here. And we had a bar very close to the 20, closed pretty much at the low of the day, right? So everything was there. Meets that 8-point checklist, and off it goes. All right. Let's look at a few other ones here. The energy sector is starting to come alive. ExxonMobil is one that has recently started to trend strongly. Now, again, you get a lot of chop, a lot of nothing, and then you know, you clear that area. You clear that area. So always look for new highs, or you know, these moves into an area of blank space. Look how easy and strong that move was. That is because there was no overhead resistance whatsoever there. So it spent a lot of time consolidating down here, and then finally broke out, and off it goes. Okay, we had slope, we were near the 20, nothing overhead, closed near the high of the bar, multiple time frames green, all aligned, earnings were far out, off it goes. It really is that simple. And it may seem here when you hear me say this a lot simpler than it actually is, but over the years, and I've been doing this for over 3 decades, it's the rules behind it that really put the odds in your favor. All right. They make sure that you're trading with trend and with momentum. And it's hard to lose when you're trading with that. Let me see. Patricia says, okay, only choose entries in the ribbon direction on. So for a 15-minute ribbon would be, 30 in an hour. And yeah, if for a long trade, they need to both be green. For a red trade, they both need to be red. If you start skipping some of these, right? You say, well, there isn't a lot of slope, but that's okay. It still looks good. Or all of this lines up, but there's a resistance overhead. I'm going to ignore that. That's when you're asking for trouble. There is no need for that. We as traders make trading difficult. That's what it is. Again, before I release this, tested it on many different markets, over thousands of symbols, made sure it was good enough for me. And I say that because for those of you who don't know me, let me tell you, and others on here that have seen me before or followed me before can confirm it. I'm probably the most, if not one of the most conservative traders you'll ever find. When I first started out, I thought I knew a lot more than I did. And like most people starting out, I took a huge loss and it really affected me. And so the only way I can allow myself to continue trading is to be in a position that I feel very, very safe and very confident in. And that only happens when I meet those that 8-point checklist. Okay. Also, I will tell you that after that big loss, I wanted to find a way to make sure I never took a big loss again. And so what I did is I created a money management plan with just 5 money management rules. Okay. If you try this out during the training, I will teach you those 5 money management rules. With it, I can guarantee you, and you don't hear a lot of people in this business use that word. Okay. If you follow that 5-point money management plan, if you follow it religiously, it's impossible for you to ever take a big loss again. You will have small losses, yes. You can't have big losses. The only way you have it is if you don't follow those rules. You put too much money in a trade, or you don't follow the rules, you ignore it once you're in it, all of that stuff. If you follow the rules, your losses will be small from here on in, right? Let me see. APA was another one from Greg. Let's see. Why isn't it going in here? There we go. APA.O. All right. So again, a quick glance is all you need here, right? What I don't like about this, at least not on the daily time frame, is again, look at the bars. A lot of back and forth, a lot of back and forth. So the general direction is good, right? We're going from bottom left to top right. It's good. But it doesn't meet the cleanliness checkpoint, right? Was there a time here where it was trading? See, generally this thing just is messy. So you can do one of two things. You can move to a higher time frame to see if it's a little cleaner. And it is a little, but not much. Or better yet, move on to a different chart. I think you also wanted to look at IR. Let's have a look. Here, I'll try to squeeze in as many as I can. So again, overall, kind of a choppy, messy chart. Here, look, there's the difference. This is what you wanted to focus on. Now, you might not realize it until you get here, right? Or even here. But it doesn't matter. It's not about the trades that you miss. It's about the trades that you catch. That's what this is about. And if you stick to trades this clean, I mean, look at that bar. Look how small it is. Look how close it is to the 20. If you had gotten in this trade and it turned around on you, you would have been stopped out with a minuscule loss. On the flip side, if you caught this trade, you would have had a very nice win, a huge one. One of these wins can overcome many, many losses. But again, what you should be having, if you're following the rules here, is more winners than losers. All right. Let me see. Do we have anything else? XLE, the ETF for energy, the energy sector. And what does this look like now? There we go. We're starting to trend. See, now we're in a strong trend here, aren't we? Already. So if you missed it, it doesn't mean you jump in now and chase it. You're waiting for the next pullback and the next entry. Okay. And again, when you get that entry, it still has to match the 8-point checklist. You're not just going to get in, because of what it's done already. It's what the system is telling you could be coming. All right. But overall, and let's look at a little deeper here on the weekly, because energy had really been doing nothing for a while. So here's one thing I will tell you. When you get a consolidation like this, what you want to do is measure this consolidation. So we can always sort of box this, right? Mark highs, mark lows here, and try to find the breakout points. But what a lot of people don't do is once we do get that breakout point, is what they should do is measure the length of the channel. So if I draw a line from where the channel started to where the breakout point was, regardless of which direction it breaks out, that next move, up or down, should be equivalent to the size of this consolidation at a minimum, okay, or very close. So by looking at this on the weekly, this channel was in place from what, Q2, almost Q3 of 2022 until the start of 2026 here. So better part of 4 years. That means we have a long way to go, right? And is there anything above here? Is there overhead resistance? Let's look at the monthly and see. Is there anything above here? Can I squeeze this down? Let's see. There's nothing now, nothing above here. We're at all-time highs, so it has a wide open road ahead, which tells us there's plenty of opportunity to the upside on XLE, which happens to be the ETF for the energy sector. So what do you think you should do now? You should break down XLE. You should look at the stocks that make up that ETF. You can just Google it. What are the components of XLE? It'll tell you, Exxon, Chevron, etc. It'll even give you the weighting of it. You put those in a watch list and you flip through those charts, or you scan those charts on a nightly basis or whatever time frame you're trading, weekly, monthly, and look for the new entries. All right? That's what you do. Another tip I will give you, have a look at Citigroup. Okay? Have a look at Citigroup. Now I'm going to go to the monthly because that's where you're going to see this. Obviously, you've all heard of Citigroup, but have a look at Citigroup. Years ago, back in 08, 09, during that great financial crisis, got hammered, killed. Ever since, sideways, nothing, right? Now, if we mark the absolute high of this channel here, let me try that again. Looks like it's somewhere around here, right? I could have drawn it a little higher, right? And the lows. You can mark the lows. I won't even bother. Look what happened recently. We got a breakout, right? How long has this consolidation been in place? About 16 years. So what is this telling us? If we measure this, we're at least going back up here, okay? Now, is it going to happen in a week or a month? No, this is going to take a long time. But what this is telling us is that this symbol, the letter C for Citigroup, should be in a watch list that you monitor on a daily, weekly basis, right? And you're just waiting for those setups. And the setup doesn't have to come on the monthly, okay? It can come on the daily as long as the weekly and the monthly are green. So there you go. These ones were the trades that we take. And now we're waiting. We're in consolidation. We're waiting for that next long with slope, nothing overhead, higher time frames align, etc. Okay? So this is how you do it. Yeah, break of structure, exactly. Once it breaks, and the longer it's in place, the bigger the move that follows. Okay? But remember, regardless of the chart pattern, you can have a head and shoulders at the same time. you can stack a number of things. Regardless of how strong it may seem, you need to make sure that you're following that 8-point checklist before you enter any trade. Okay. Now, this isn't the only great part of this indicator. What MetaStock did, if you go to the top left of your MetaStock platform here and click on View, go to Expert Commentary, right? Now, this will bring up a box here that'll tell you a bit more about myself, the victory system, and trading wins, all right? But it'll also tell you what we're looking for in a trade, and in most cases, I add some extra text. So you see this little red triangle here? It always defaults on the far right, the most recent bar, and it doesn't matter whether you're in a 5-minute time frame, a daily, weekly, monthly, etc. Always defaults here. Now you can move it over any prior bar by either clicking on it, clicking above the bar. There you go. I clicked above this arrow, and there it is. Okay, or using the arrows up here in the expert commentary box on the top left, right? Now, when we get a signal here, this is going to add some text here. And more importantly, as the trade continues on, okay, let me move this forward. There we go. There it is. So you'll notice, and I hope you noticed, I even forgot to mention it at the beginning. Once you're in a trade, the bars are all colored the same. That is on purpose. It is to help you remain calm throughout the trade and help you stay in that trade for the duration of that trade until we get a change in color. A lot of times when you get into a trade, you start to move ahead, you're in profit, and then you see 2 or 3 red bars, a minor pullback, and it ends up scaring you out of the trade. You're thinking, I don't want to give back this profit, I'm just going to sell it, only to watch this thing turn around and continue to go higher. So in a long trade, all bars are green. In a short trade, all bars are red. When you shouldn't be in a trade, you're going to see yellow bars. Okay. But this will tell you that it is flashing. I don't know. It keeps going away. There we go. It'll tell you that you're currently in a long opportunity. And then for those of you who trade options, it will also give you a few tips on what kind of expiration you should look at, what kind of delta you should consider, that sort of thing. But more importantly, as the trade develops, okay, with every new bar that develops, this is going to give you a stop level. This is meant for those of you who cannot be in front of your screen all day, right? So if I enter my trades and I go to work all day while the market's open, I want to have a stop in. If I can't look at this, I can't know when it's going to change color, right? I can only do that after market close. So I want to stop just in case there's some news event or something and price starts to really go against you, right? So to give you a stop level, so you'll see here $100.48. If I move to the next bar, it's now 165 cents. And then the next bar is 172. So it's a trailing stop mechanism. So it kind of holds your hand throughout the whole trade. It's really great, right? And the other great thing is if you go on the left side of your screen here, go to Explorer. This is where you're going to find the scanner. Now, again, these strategies are in alphabetical order, so you're going to have to go to the bottom here to find all of mine, all the Vora ones. And what you want to look for is the Vora Victory or the Vora Victory Filtered. Now, what's the difference? Well, the filtered one accounts for that slope. It'll only give you the symbols that come back with slope, so that'll save you time. You don't have to look at every single one and then say, well, the 20's flat, so I'm not going to consider that. You can just focus on the ones with slope, all right? And the reentry ones, same thing. The dots that you see that are reentry, we also have a reenter filtered one that accounts for the slope. Now, any of these that you're going to use on a regular basis, rather than coming to this page and scrolling down every night, you want to just right-click on it and add to favorites. Click add to favorites. That'll put it in this little folder here. And then you have your, your few that you follow, and you can check off the filtered. It'll remember it. And then down here, you pick the markets that you want to search, whether it's equities, ETFs, etc., and which ones, North America, Europe, etc. You pick the time frame here, and you start your exploration. Okay. Now, I'm almost out of time, so I'm not going to run it now, but I will tell you that earlier today, let's see if it's still there, MSTR, okay, strategy, was showing an entry here to the short side. There it is. Okay. So again, let's go over the checklist. We have a victory signal. We have slope on the 20. The bar is near it, right? Where is the close right now? More or less in the middle. So hopefully it sells off a little near the end of the day. Higher time frames are aligned. They're both red. Now, to see whether there's activity down here or not, right? We may have to go to a higher time frame, or we need to squeeze things in. We need to put enough data on the screen to judge it. But so there is some activity here. It's not completely blank, but it looks like from here to down here there is a gap. So it has potential to go. And look how sharp that slope is. Look, I mean, this one is a falling knife. It's really been selling off. So this is one that I would consider to the short side. And then we have AX. AX here, Axis Financial, which should be a long. And let me go back. Yeah, on the daily, let's see. Oh, it's not right now. One thing I will tell you, that while the bar is open, okay, you may see the signal and may disappear, like as price is fluctuating while the bar is open. So if you're on a 5-minute bar, right, during those 5 minutes for this bar, the signal can change. But once it closes, it's there for good. Same with the daily. Once we close, it is there for good. So it doesn't repaint. It's just a live reading of that algorithm going on. Okay. So anyway, that is the victory system. The scanner will save you hours and hours of time finding candidates. And if you stick to this checklist, you'll be making sure that the odds are in your favor on each and every trade. Doesn't mean you're going to win each and every trade, but it'll help you keep losses small and allow you to stay in these nice big winning trades. So I'm going to turn it back to Jeff. He'll let you know how you can grab a copy for yourself. If there's any other questions, happy to stick around, but thanks again for the opportunity, Jeff.
Thank you. Wow, where did that hour go?
Goes by so quickly.
Yeah. You did a great job, though. And I really like how you show off the scanner and the commentary and really kind of go through things. So I'm just going to do the offer and kind of talk a little bit about how people can get it. Thank you so much, Vince.
Great. Thanks again.
All right. Let me see if this works. I'm just going to share my screen. Let's do this. Okay. You should have Vince again up here on your screen. Norm, we're not ready for you yet.
Okay.
But you're showing up as Chester drawers.
I know. It's a new system. I was confused, but
All right.
I like Chester.
All right. I was wondering if that was you. All right. Very cool. I want to talk a little bit about how to get this. It has been. Version 1 was our best-selling add-on the year it was released. Version 2 was also our best-selling add-on the year it was released. Vince already did a good job of going through and talking about the commentary and how it breaks down. It gives you expert alerts. You do have full market scanning, both for the triggers and the re-entries, as well as the filtered scans. So and system tests. And I actually kind of like this, the fact that we have the filtered scans, because I actually was using them for myself, added them to the system, and I said, hey, Vince, let's add the ones that have the filter in it. So a couple things in here to kind of just point out as we go through this. I'm going to go quickly, but I do really enjoy this is what we call the market overview. You can open this up on any time frame, and it's just going to give you an idea of what all the indexes are doing, as well as all of the sectors. So you can see that this is a daily, weekly, monthly view, but you can actually set this to any time frame that you want. If you want to look at what the intradays are looking like, this is just a kind of a dashboard that'll give you an idea of what's going on. Vince talked a lot about kind of the templates and the how they work and that kind of stuff. We do have scanning in there. It's got the victory. You can scan for the filtered signals, the re-entries. And the filtered, what we do is we just look for the slope to be over plus or minus 5 based on the victory slope. So Vince did talk a lot about the expert advisor. He did such a good job in actually creating the expert commentary and kind of how it works and exactly what you should be doing with it. Very, very good. It does have system testing and scanning. As part of the system, when we released this to the public, we decided to include the winning momentum strategy, which was another very popular system Vince created, and the veracity system. Those are just included as part of the install. They come, you can get it. And they also, another thing that we talked a little bit about this with Rahul's presentation. If you sign up, you're going to get a year of membership for the Trading Wins service. That you're going to get the daily training ideas, 3 weekly training sessions, on-demand technical analysis training and videos, option trading ideas, all that stuff is included. We did also record a bootcamp class. It's available. It's available as soon as you get done. Vince does a section where he talks about just the victory setups, how to use them, what to do with them, all that kind of stuff. With my section, I actually kind of go in and talk more about scanning and setting up charts and manipulating charts. And so that's all included too. There's just a lot of stuff crammed into this package, and I don't have a lot of time to talk about it, but you'll get Victory 2, one of our best-selling add-ons. You'll get Veracity, the winning momentum strategy, that pro membership. All of that's normally available at $5,657. As a conference price, we're going to do it for $997. So you get all of that for $997. You can do that if you go to metastock.com/conf promo. You can give us a call at 800-882-3040, or you can go to metastock.com/saleschat. And as part of the conference offer, it's $797, not $997. So give it a go. It's a discount of a huge discount. I was going to do the math, but almost $4,000. You'll get the bootcamp class. You'll get Vora Victory. You'll get that 12 months of Trading Win service, Veracity, the winning momentum system. We'll throw in a trial of MetaStock if you need it. And of course, we're going to back it with a 30-day money-back guarantee. So give it a go. Go to the classes. You're going to enjoy this. It's one that Greg was saying he uses all the time. I've used it extensively over the years. You can get it at metastock.com/conf promo. You can call us at 800-882-3040 or metastock.com/saleschat. So as we move on to our next speaker, I want to say thank you to Stocks and Commodities and the tradersforum.com for sponsoring the event today. Greg, we are running just a few minutes over, but I do want to ask you to do a prize drawing with me.
You got it.
Okay.
You got it. So I should say real quick, this is Vince's 8 rules, which I had scribbled and stuck onto my computer for some time, and then when I moved up here to Houston, I lost it. And even though I have most of it checked to memory, I went ahead and printed them off so I can stick them back on my computer.
Cool. All right. Let's see. Okay, where are my prizes? Okay, conference prizes. Okay. We are going to give away Greg Capper came in. He spoke yesterday. He did Master Trader. He has a swing and options newsletter. We're going to give away a copy of that. It's I believe it's a 1-month subscription. The value of it is $97. And what I need from you, Greg, is just a number. Give me that number. It can be anywhere between 2 and 5,990.
According to Google Random Number Generator, that number is 285. 285.
0285.
That favors the early registrant.
It doesn't want to do that low. 285. Let's try it again.
What?
John B. in the USA with the Yahoo address is the winner of that prize. Thank you, Greg. Very much appreciate
You're welcome.
The help. Our next guest is Norm Hallett, also known as Chester Drawers.
I'd like to know more about that whole label, actually.
I got a quick story about Chester drawers. I don't know how many your Jewish friends may have told you about this, but when somebody passes away, especially a close relative, they have what they call sit shiva, where you spend really 7 days. This is the Orthodox Jews, of which I was raised as one. You sit in a very uncomfortable. You don't. There's not lying down. But you sit and you mourn for 7 days. And people come and visit you, and they bring you food and so on. Anyway, at the time, one of my parents died, and I have 3 brothers, a twin and a brother that's just a year older, and we were in early teenagers. We were so bored. I mean, after 2 or 3 days of mourning, we said, "Geez, we got another." We started to make a list of names like Chester drawers, bend over. And we made a list of literally 200 names of people that mean other things. And so Chester drawers has always been dear to me. So I appreciate you mentioning that.
Well, would you prefer we call you Mr. Drawers?
Yes, we can open with that, of course. But
today you're going to talk to us about prop trading, and I'm going to prefer to call you Mr. Hallett. Norm,
let's do that for today.
Thanks for joining us. Let me go ahead and just click on the share button. It's below me, or it's actually right there. You should be able to just share your screen.
All right, I'm seeing the share. And I'm seeing a lot of different, don't see the share actually. Let's see the window. I see. And I see that. Let's do it this way. And are we sharing it correctly?
I'll tell you in just a second. I'm seeing a big blank.
I'm seeing a big. Let's try that again with the share.
Yeah. Sometimes I maybe try the share screen.
Let's try that. I'm going to take my face off just to be clear here.
Oh, it'll just
be always put me back on. All right. I think I'm going with the entire screen. That's probably the best way to go. All right.
Oh boy.
That's okay.
That's a lot of me. I can see the consistent map to payout reading.
Do you see the consistent payout roadmap? That's the place we need to be.
Yes, that's where I can see it. I'm going to go ahead and get out of the way. It's all yours, Mr. Drawers.
Thank you. Well, today we're going to talk about the consistent payout roadmap, and I don't want to disappoint anybody, so I'll tell you up front that really this is really an exercise in why prop traders and all traders. I'm going to bend it a bit to prop traders because that's where I've been spending most of my time, and it's something that I believe is almost a panacea to many traders, especially those with very small accounts. But I'm going to assume that that if you're a prop trader, you know the basics of prop trading. But this particular presentation about making consistent payout roadmaps could have been called consistent profit roadmap. It's really a presentation on why struggle happens and what one needs to do as far as the trading plan is concerned and the elements of that and the mental and emotional parts and so on. So I'm going to take you through a journey today that I know you haven't seen before, but I believe it may be not life-changing, but a trading outcome-changing journey that is going to be very, very beneficial to you, whether you decide to move forward with me or not in one capacity or another. So this is called the consistent payout roadmap. And again, it's named that for the idea of having a consistent payout when you're prop trading. So let's get into it. A little bit about me. I think you noticed before I doused the video that I went to the University of Cincinnati, and it was a work-study school where you went to school for a quarter and you worked for a quarter because I needed to work to pay for school. So I started in engineering, but I couldn't get through mechanics very well. So I decided, went out the door with math degrees. And so it took me, I spent about almost 6 years there learning math and having math degrees, and got out and decided to, was after the nightclub and restaurant business, I went into options. I said, what could I get into? My brother was a Harry Brown fan, who was one of the original gold bugs, and he impressed me that may be an interesting area to go. Well, within about 2 years, I was running one of the largest option firms in the country. I really took to it like a duck to water, as they say. This is a picture of a room that looked very similar to it. This was in the 1980s. We didn't even have these kinds of large screens. This was probably late 80s, early 90s. But most of our work was done on a telephone with the tote board. We would deliver charts every weekend that were oversized, and we would do all of our technical work on these large charts. In any event, these were all professional traders that were responsible for, they were all licensed commodity trading advisors, and they were responsible for trading other people's money and making money. It was in the options market. And here is where I learned what it was to have a responsible trading plan. And after this experience, I wound up writing several books. Some are still on, at least one is still on Amazon, about how to build and run responsible trading plans. But here is where I learned that every trader is different. Every trader has a different personality, and that your trading plan must match your personality as much as it can. In other words, if I have a trading plan that's working for me and I give it to somebody else, it may or may not work for them. The ease of running it, the ability to stick with it, because it's not a good match for them from a personality standpoint. Here's where I learned the lessons of what a good trading plan is and how to match that trading plan to an individual. I will say that one of the most the most common issue was that the trading plan was much too complicated. I will say that right off the bat here, I didn't mention, I saw the end of the last presentation with MetaStock. I've coached many traders. If you have not tried MetaStock as a charting mechanism, I would have to say that to a person, everybody who has used MetaStock really likes it, and because it is complete. Two reasons: it's got everything you would ever need as far as indicators, but also the fact that although it's complete and it may look complicated on first glance, it's an easy startup. And I just, before I forgot that, I should have said that up front, but I wanted to mention that as kind of a segue to what I'm doing. Anyway, these people did not use MetaStock. I don't know if it was even around during that period of time, but I did want to get that out as far as people, if you're hunting for a platform to be trading on. All right, so this is what this picture is about. I was bought out by Payne Weber. They were buying contracts of individuals that they wanted. I was a commodity trading advisor myself. I worked with them for a couple of years, almost 3 years, and did very well. And in fact, at that time, we were making a commodity trading advisor. We earned 20% of the money that we made for our clients, and if you're running millions of dollars, it can be good. Those were some of the biggest years that I had. The problem is I didn't like selling, and a lot of it was about selling and getting new clients, and I felt I could do all of this on my own. And I was wrong for a while, and then I was right for a while. So, and I kind of been, I guess, right ever since. But Payne Weber was an interesting experience, a much more institutional arena. Actually, this is the book I think that's still on Amazon. About constructing a trading plan. There's actually, I think one of the places where I met Jeff was one of these expos. You can correct me at the break here. The first time we met was one of the trading expos, of which they usually put me on first because I tend to run around the stage in a mostly kind of an active way. And somebody's written a book about some of the quotes that I've said along the way that they believed were inspirational. It's actually somebody that worked for me and surprised me with this. But that's also actually available, I believe, on Amazon. But I started the Disciplined Trader in 2000, in October of 2000, with the express goal of helping traders with the missing piece, and that missing piece was the mental and emotional part. Traders don't want to hear about this. Those that want to hear about it and take it to heart are the winning traders. Those that don't that don't give the proper respect to the mental part. So we'll talk about that a little bit, but this particular presentation is not all about the mental part. It's about the total package of what you need to win in prop trading and all trading for that matter. But so from 2000 to about 2015, I'm sorry, 2000 to about 2020, right in there, the firm was exclusively about the mental and emotional issues, and we partnered with firms like MetaStock and others and delivered for them and to their people the mental and emotional issues, workings and instruction for proper and effective trading. But we were getting people. We were getting people disciplined to run lousy trading plans, and I thought, you know, I know all about trading plans. Why don't I start to help them there? And so that's where we started something called the Loaded Gun, which is the trading plan, one of the better ones, or maybe even the best that I've ever written. And it's if you've been around any time, you've heard about the successes of Loaded Gun. And so now we're working with traders with the trading plan and on the mental part. The Their Money, Your Profit is a particular offer that does offer Loaded Gun for traders and really has a twist toward that toward the area of prop trading. Their Money, Your Profit. In fact, the latest book that I've written, which came out only a few months ago, Their Money, Your Profit: Cashing In on the Prop Trading Revolution, also there for you. I think for $12.99 on Amazon. So if you're interested in that, that's available to you. Let's get to the presentation proper, because I think you're really going to, I'm going to dig in here with you. We're going to spend most of our time on this slide right here, and we're going to fill it out as we go along. And I want you to help kind of fill it out with me mentally, because this is something that I know that you've never seen before as far as the structure that I'm going to lay out here. At least you've never seen it in this way. Our goal here, or the goal of this slide, is to delineate the process of achieving a consistent, reliable income with prop trading. And again, I say with prop trading, but don't let that leave you out if you're not a prop trader, because everything I say here is also applicable to trading your own money. Okay, but you will see a twist every once in a while toward prop trading. So this is the goal. We don't want to just, you know, in prop trading, you generally people come to me and they say, well, my goal is to pass the evaluation stage and be funded, because they're usually a two-step process. You get evaluated, you trade and make a certain amount of money, and in that account, and if you do, without breaching the red line, without giving back enough money to reach that red line, you're going to be funded. And then it starts again where you have goals to earn, and once you get to those goals, you can start requesting money on a consistent basis. So consistent, reliable income. So when somebody comes to me and says, my goal is to pass the evaluation and get funded, that's really not your goal. That's an interim goal. But the goal, with any goal, you have to have the big picture in mind. You have to have, and in the case of prop trading and trading, really, it's got to be something like a consistent, reliable income, something that is truly a nice stream of income that you can rely on. The steps to get there are the goals but you must keep that vision out there, because those interim steps can be challenging. And when they challenge you to a point where you start asking yourself, is this all for me? And refuse to change what you're doing to make progress happen. That's where you've probably lost the vision of the grand goal, in this case, the consistent, reliable income. Let's go. The first leg, or the first side of this triangle, is the question that I hear probably most, and I can't find a trading plan that works. So we need to reverse that. We need to find the perfect trading plan for you. And here's how we do it at the Disciplined Trader. The first thing that we do is we hand you a proven, simple trading plan. When I say proven, it's almost like some of these AI bots and things that are coming out right now. I really believe, as a sidebar, that in probably 2 or 3 or 4 years, somewhere in that range, 3 to 5 years, we're going to be looking for the right AI assistance in order to trade, and a lot of it will be done on an auto way. But until then, whatever you're seeing coming out right now, I believe that you're being experimented on. So I think between now and the next couple of few years, you need to continue to understand the methodology to trade on your own and to make your own decisions. In fact, when AI comes, I think there are other courses that I'm actually developing that talk about how to command AI so that it works for you, working with AI rather than having it work for you, so to speak. In any event, we hand you a proven, simple trading plan, and that word "simple" is the important part. Remember, I talked about that the main issue with traders that I coach now and even back then in the 80s was the idea of too much complication. If you have too many indicators, too many hoops to jump, there can be hesitation on making your move, on instigating a trade, hesitation to pull the trigger. Many indicators, for instance, the MACD and the RSI, they have differences, but the differences are slight, and they are both momentum indicators, and therefore you really should have one and not both. Pick one. They both are valuable. They both have value. Use one. Don't have two, because the more hoops you have to jump, the less the more you can get into that situation where I'm waiting for that last hurdle to jump before I get in. That hesitation causes the market to move without you. Then you're chasing markets. Also, I will say, because I myself, I'm kind of a type A, wouldn't call myself quite in the ADD, but I coach many ADHD traders who I need to match the trading plan to them. And if you have too many indicators, you're challenging the issue of patience. And type A's like me, we like the action. There's an old expression: I'd rather be out of a market wishing I was in than in a market wishing I was out. And that's a valuable expression, and it really makes a lot of sense. On the other hand, I'm here for the action. I'm here for as far as a futures trader is concerned, I'm here to take responsible risk and benefit by that. And so I have to have a trading plan that responds to me as a person that likes to be in the market. That may mean something as simple as using a shorter term candle chart rather than a 10-minute candle chart where each candle is 10 minutes. Maybe I'll go to a 2. I generally like to trade a 5, actually, because it gives me some time for development and so on. But if I have less time to trade and I want to develop more signals, I want to see more signals happen, I'll go to a 2. So that's a very elementary way of matching you to your trading plan, which is an important part of success and a very important part of this particular leg. Not only do you have to have a proven system, but you have to have a trading plan that matches you and your personality. There's 2 ways of matching you to your trading plan. In other words, having a trading plan that really fits you. One is to change your trading plan to fit you, and one is to change your mind to fit the trading plan. Both are valuable. Both you should be doing. Why? Because unless you are a good match for your trading plan, bad things happen. That's where leaks happen in your trade, and you say, why did I do that? Should have been in. I shouldn't have gotten in. All of those things happen with a poor match. The tendencies are not there to win. The tendencies are to crack. So I always, with any with any trading product that we sell, I always have a one-on-one identity discovery where I personally will talk to you one-on-one on Zoom. In fact, it's usually 90 days as many times as we need to talk, where you and I will get together and I will ask you the kinds of questions that will uncover the kind of trader that you are. I want to know your experience. I want to know what you like as far as indicators, what seems to fit you and what doesn't, what areas that you're having trouble with, and so on. And I will help to customize a trading plan for you, and with what I call nuances. Nuances match who you are. There's small changes in a proven trading plan that is not enough to change it to make it unproven. It doesn't affect the outcome of the trading plan, other than to sometimes expose you with just a little bit more risk or a little bit less risk, depending on, but still not enough to make a trade undoable if it's a doable trade without the nuance. So we use nuances. I've never heard of anybody talk about this, but it's something that I learned in that room, in my later stages of that room, and something I've carried with me the entire time. When I write, even currently, when I write trading plans for professional traders, this is a step that is one of the most important steps. I need to find out who you are, how you are internally. I need to know your experiences, because your experience will oftentimes dictate the kind of trader that you are today. If you've been losing a lot, then you tend to be a trader that's very careful and has very close stops and so on and so forth. I saw the previous presenter talk about allowing a trade to run. If you're a trader that somehow gets out and the market continues to go, and you say, why did I get out? It's likely because you're used to losing or struggling. And listen, losing is a habit, struggling is a habit, and winning is a habit. I'm going to talk about that in a few minutes. But you need to develop and own a winning habit, okay? And there are ways to do that. I'm going to show you how it is. So you need a proven, simple trading plan. You need to discover who you are as a trader, your experiences, and what makes you who you are today as a trader, though it may not be somebody who's trading successfully yet. The facts there are what is important in order to adjust your trading plan to who you are, okay? And we do that here by applying nuances to match your identity. We call that the unique plan DNA alignment, this particular process. So now that if you follow our unique DNA alignment, you're going to have a plan that works for you, okay? The next situation that comes up, the next question that I get asked most commonly is, or issue that comes up, is I keep jumping off my plan. I have a plan. I know that it works. I know it can work if I can follow the damn thing, but I keep jumping off my plan. Well, we need to get you to stick to your plan every time. Okay. Now, if you do jump off your plan one time, that could be enough to take away the days, sometimes in these volatile markets, a week of proper trading. So you need to be as tight as you can. Look, I'm not saying that every mistake. Some mistakes, you make money. That happens too. That's of course a bad lesson. But when you don't want to be, you want to have a trading plan that is tested and works and you can stick to. That's the only way to trade. Okay, so you need to stick to your trading plan every time. So how do we do that? Okay, again, in this particular case, my wife Tisha, who is a well-known in the field of psychology, she's on many of the psychological magazines in her career. I met her, was married. I've been married 44 years. And I met her, and she, in the first couple of years that we were married, she couldn't believe how out of control I was as far as some of the ways that I was trading. She could tell when I walked out of my home office, she could tell if I had a losing day or a winning day just by the way I was acting. And I think when you get good at this, now she can't tell whether I've had hey, how was the day today? it's a great day. And she says, boy, you don't seem like that. Well, with good days, bad days, I try to stay as neutral as she has allowed me to. She's worked with me. And I said to myself at some point, why don't I allow my wife to help others that I'm training as far as the technical part of trading? Why don't I bring her into into what I'm doing? And that's where we started the Disciplined Trader in 2000. She's been working with me literally for the last 26 years. She is in charge of helping with the mental and emotional issues of traders exclusively. So she will have a one-on-one meeting with you. And in our courses, we also have, you're allowed a series of as many meetings as you need with her based on what you believe you need and what she believes you need, as far as meeting with her to get your mind straight. Whether it's revenge trading, which was the most common issue last year, that kind of overtook fear of losing, which generally dominates most years. But we noticed that revenge trading was a big issue last year, and continues into this year when we bring on new traders. So she needs to understand your background in trading, where you've had your successes, where you've had, and in fact, I don't want to get into this too much because she really doesn't let me know much about this because, or anything really about this, but sometimes when she talks to a trader, the reason that they jump off the plan has nothing to do with their trading experience, has something to do with something that personal happened. Somebody passed away, a child that won't listen, a divorce, or whatever it is. My wife is capable of helping you with whatever issue it is. Now, she's not going to be your psychologist, but she will help you in that narrow path, whatever it is, to help you unwind that so that you're clear-headed and can follow your trading plan, stick to your trading plan every time. So that doesn't happen every time. It happens fewer times than I'm making it out to be. But when it does happen, if many traders just seem to open up to her, and it's kind of the elephant in the room. With that happens, she can help you with that too. But the idea is here, we're meant to help you with the issues in the mental and emotional areas of trading. And you'll have as many one-on-one sessions with her as you need, just like you have them with me on the structural issues. She will, in those meetings, she will scientifically amplify your strengths and eliminate your weaknesses. There are two, well, there's more than two now, but there are two basic techniques that she uses. One is really straight subconscious training, which she's been famous for in her career. It's your subconscious mind that dictates whether you're going to, how you act. You may have that voice in your head that you're talking to. That's your conscious mind. But I can tell what your subconscious mind holds true for you by the way you act, by what you're doing with your trading. She'll be able to tell that, and she'll be able to help you unwind that. And she uses subconscious trainings. I'm going to call them meditations. They're anywhere usually from about 8 minutes to 11 to 12 minutes. She will record a specific meditation for you that is that will serve to eliminate that weakness, whether it be hesitation to pull the trigger, lack of patience, whatever the issue is, revenge trading, and she'll record that. We send it to you, and you can work with that until your next meeting with Tisha, which she asks how you're progressing, and if there's something else that popped up. Sometimes these things are like dominoes. Maybe you have you lack patience, but you're also chasing trades. Sometimes if you work on the fear of losing, which may be another thing, all of the other issues fall as dominoes. So sometimes this can be a very quick process. Sometimes it can open up some other areas that you may not have known was an issue. She will work with you on that. This is very, very important. So she will use the other methodology she uses, something called the emotional freedom technique, of which she was trained by the person who originally put the emotional freedom technique together. It is an Eastern philosophy that actually uses body energy. When I heard it, I said, nah, this is not. But I'm telling you, working with your energies and because really thought is energy, so on and so forth. I don't want to get into it, but and you don't even have to believe it. It is actually now the go-to therapy for post-traumatic stress disorder, for soldiers coming back from war. Now, I'm not saying that the trauma of trading is anywhere near or should even be in the same sentence as post-traumatic stress disorder, but I will say that if it helps those with post-traumatic stress disorder, it's going to help we as traders. So these techniques, as well as one or two others that I don't have time to describe, are the techniques that are the backbone of what she will deliver to you based on what she discovers about you. Okay, and then you will periodically troubleshoot your situation based on your performance, because that's all we judge on. You want to start winning, and if that's not happening, something is happening that we have not discovered together, and that is either something structural in the trading plan. Even if you used our trading plan as a base, that makes things a lot more simple if you've accepted that, but maybe there's a nuance that we need to talk about there. And of course, in the mental and emotional areas, if something keeps popping up, that needs to be worked on. But you know, the more honest you are and the more committed you are to your own self-discovery, the quicker you will achieve consistent, reliable income. Okay, so that is this leg of this training, and I'm going to give it a name in a few minutes. But this particular leg, the right-hand leg, where Tisha works with you on the mental and emotional issues and eliminates your weaknesses and amplifies your strength, is called the Personal Empowerment Blueprint. One thing I will say about the middle part of this that I didn't say before, amplifying strengths. You know, it's one thing to eliminate the weakness or nullify the weakness, but generally, we have found that traders also have strengths, and it's not all about the weakness. And it can sometimes be easier and even quicker to amplify your strengths, and while we tone down and eliminate the weaknesses. Okay, so that's called the Personal Empowerment Blueprint. So now you have a trading plan that fits you. You have a coach that is going to help you and solidify your mental game so that you can follow your trading plan, stick to the trading plan every time. And now that you are now that you're in that positive path, that yellow brick road, and you have 100% confidence, the next question is, the next issue that comes up is it seems to work in the beginning. Certain things, and this is our process is not like this, but when people come to us, they say, well, it works in the beginning and then it crashes. What's going on? I mean, when you look at most traders, most gurus out there, their testimonials, it's not I've made money for the last 5 years. It's boy, I really love chapter 1, and the beginning is very easy, but the consistent reliability of creating income is something that can escape very quickly right after the beginning. And that's when you move to the next trading plan or the next guru, and you keep grabbing the gold ring. So this third area is about sticking with things and making sure that habits are developed. You want to achieve that long-term income by design. And we have we give access to our loaded gun trading room. A loaded gun trading room is run by a guy named Danny DiMaria. If you were a floor trader, you may probably have heard of him from the CBOT. He retired in May of last year, and he called me and said that 15 years ago he bought one of my products on the mental and emotional part, and he said it was just terrific. He's always been wanting to be a coach for me. Well, now he runs the loaded gun trading room, and he is known as the trader's trader, the floor trader's trader. And so in this room, you're going to learn one basic thing, and that's what winning looks like. Remember that I said struggling is a habit, losing is a habit, and winning is a habit. I want you to see what winning is like. Danny has had not only every month since he's been with me had a positive outcome, but every week except for once, and it was a low 3-figure losing week. He's had winning weeks since he's been with me. He knows how to win. And the most frequent testimonial that I receive from those people in the room are that when he is behind, when he loses his first trade or two, that does not faze him. His ability to come back and have winning days from losing days, that is the most impressive thing. That I want you to learn what it's like to win. I want you to see it in action. Whether you just sit there and watch him, sure, you can copy the trades, you can take the trades when he takes them, and you can kind of have a winning experience yourself, and that's good. But watching, but envelop, and I don't know the right word, but to see it actually in action. That really means that it's possible for you. I want you to know that having a winning habit, the habit of winning, which really is resulting in an expectation to win. A struggling trader comes to the table every day. I hope today's a good day. It was a good day yesterday. Maybe I can put together a string of, or if it was a bad day yesterday, I really got to get out of this. These are the kinds of conversations that you have with yourself. A losing trader has even more negative conversations. But what you want to come to the table with every day is, I don't care what yesterday was. Today is going to be a great day. Why? Because I'm a winning trader. I've already proven it to myself. I've got the mental game down. I've got the trading plan down. Now I just need to start trading and start making that money. So having a winning expectation, a positive expectation, is key to the long-term income by design. So you get access to the trading room so that you can experience what winning is like. And also, there are traders in the room. He's usually got 40 or 50 traders in there, and their mics are open, and they're in the little Zoom boxes, and everybody's, not everybody's talking, they're quiet, but when somebody has something to add, and there's of course the chat, but there are traders in there that are actually getting paid on a consistent basis, and you can talk with them in the chat, or you can deal with them on the side, whatever, all kinds of things happen, but you get to model traders that are getting paid. Not traders that had a good day, but people who are already in this triangle, that are developing, that have developed consistent, reliable track to run on, consistent, reliable income. So you see what winning is like. You see what you can model, the traders that are already getting paid, and we also have a school site. One that is that I wish actually was a little bit more active. I think traders can be. I think we have a lot of new people that are only in their first few weeks and so on, so they haven't quite developed they're on the yellow brick road, but they've only taken a few steps. And I think that's a place where you can ask a question. I'm in the room. I monitor the school site on a daily basis. So does Dan. And Dan's son, what I didn't mention is that in that trading room, it's run by Dan DeMaria and his son, Matthew. The two of them run the room. So it's really an exciting room. And we all check on the school site. If you've never been in the school site, it's really kind of it's a community site. And you can ask your questions. I do posting my opinions when I see certain things in the market, certain markets that I'm trading to watch that you may want to trade, certain techniques that I use that really aren't in the course proper that we have, any of the courses, sometimes something that new I'm coming up with. So my wife says, you're always learning, you're always doing things. You have to in this business. We've got a school site. Also, we have monthly Q&A meetings where every last Wednesday of the month, we meet, usually at 4 o'clock Eastern time, or you can get the recordings. We've got about 40 recordings of past monthly meetings, so we've been doing it for several years, where we all have our little boxes. There's usually 30 or 40 or so people in these meetings, or depending, and you can ask any question you want. New people ask newbie questions. Nerds ask nerdy questions, and it's all fine, and we can, sometimes I have another nerd answer the nerd question. we all help each other. It's a place where we are a community, because I think that once you know that you have the support, once you know that you have your back. Now, through all of this, you actually have email capabilities to myself, to Tisha, to Dan. We all help in the coaching. You need to meet with Dan on the coaching, you can do that too. So Dan also often offers in the trading room, hey, you're asking the kind of questions, why don't we meet? We'll spend an hour together. I want to show you the solutions to some of the things that you're looking at, so I don't have to take up the time here with the team, with the meeting, because I'm in the middle of trading. So this is the package that is the complete package. So what you have here now, after you spend time in the room, you've modeled traders getting paid, you've been active in the school site, you've been to a monthly meeting or two, you're really getting going. We call it the total support framework in this leg. And now you've developed a steady, stable revenue. This is the package. This is what it takes to make it all happen. Okay. So again, we call this entire shebang, we used to call it, the consistent payout roadmap, better known really as the CPR. And actually, we've just it's going so well that this particular package here is going to be our go-to package. In the beginning of the year, when Tish and I, every year we look at our goals for last year, we assess congratulate ourselves for what we got done, and look at some of the things that we didn't get done, and then we project for the next year what we'd like. And what we decided this year is we want to work with less traders. We want to work with only traders that can see the value of these three legs as their answer to the struggle that they're experiencing, that they need to break that struggling habit or that losing habit, and come to us with intention. Most of the people that come to us have already they've already had 4, 5, 6, 7 trading plans. They've spent tens of thousands of dollars. They've been through 150, 200 evaluation accounts and blown out 20, 30 funded accounts. They just cannot seem to achieve a consistent, reliable income. This is the package that can make it happen for you. We're already seeing it happen. Okay, this is the consistent payout roadmap. And what's interesting is that I was looking at we've just put together a logo. I won't be able to show. I was hoping to have it for you today. But now that we've been running this now since the beginning of the year and already seeing the kind of results that we've been wanting to see, CPR is, that's saving people with the heart attacks. CPR is, I'm not a medical person. Maybe you want to put it in the chat. I'm too into what I'm talking about here too. But with the paddles, when you have a heart seizure, you put the paddles on and somebody yells clear, and you put the electricity through you, and it gets your heart started again. So we're using that particular CPR to kind of revive traders from distress to a beautiful life and the consistent, reliable income. So if anything, watch for our logo. It's we've got an animated logo that kind of talks about that. So we've had a little fun with it. But it seems, and I didn't say what do we name this to fit CPR. Consistent payout roadmap was the name of it from the beginning, and I just realized it when we were just taking the letters that we're reviving traders. This is, when I first put out the call for traders who are interested in joining Tisha and I and Dan and Matt with this adventure, I thought, what do we CPR? Wow, that is. Let's just use that as a as kind of a fun way of putting it together. That really, all I wanted was people who were determined to win, people who have been thrown to the ground, stepped on, and somehow they caught the bug. They know that they can do it. They really feel that they can be a successful trader, but they have spent years and thousands of dollars to get nowhere. Okay, to get right back from the beginning, nothing but frustration, but still still want to get it done. These are the people I'm looking for. And I don't have to go through quite all of that pain, but the more pain that you've gone through, the more you realize that what I have shown you here is the answer to where you want to travel. Okay, this is the complete package, and I'd love to work with you. And so would Tisha, so would Dan, so would Matt. We are all here to help you in the consistent roadmap, consistent payout roadmap. I'm not going to sell you anything here. Here is the. I did put it up. It was put up for me. Thank you, Suzanne. This is the CPR logo, and I think if anybody would appreciate this, it would be Jeff, who has an excellent sense of humor. But the animated version is kind of fun with it, with the thing, with their heartbeats and so on. But this is really where it's at. We're going to clear, and we're going to shock you into understanding yourself and understanding how you can work with yourself and the way you are, change the things you can change, emphasize the strengths that you have, neutralize some of the things holding you back, and be the consistent payout, the consistent trader you want. We call it the consistent payout roadmap. All I want you to do is this is all I have for you. Well, I got a couple of other things if you want to try something else, or you don't know who I am and this looks all too big for you. Just write me at nhallett, not at Chester Drawers, but NHALLETT at thedisciplinetrader.com. And in the subject line, put CPR details. Send me the details of what I've just described to you. I want to show it to you in written form and so that you know exactly what the success path looks like and why you may be the perfect fit for it. Okay, you got to be a determined trader. You got to be willing to get up off the ground. Who was it that says it's not how many times you got knocked down, it's how many times you get up? If you're still getting up and you're still running the same track, you're going to keep getting knocked down. Let's do it together and make it happen. Just write me. You can put this in the body and in the subject line, CPR detail, and I will respond to you with the details of the program. Okay. I wanted to also, just for those people who are just beginning prop trading, I do have a kind of a beginner course for prop traders. It's called How to Build a Substantial Long-Term Income with Prop Trading. It gives you the general principles. If you have a trading plan and you want to try to adjust it yourself, there are some of the general things that I look for in traders, and it's going to help you to understand whether prop trading is for you or not, or whether if you're built for prop trading yourself. And it really is, it's a $497 course. For this particular session here, it's $197. I've already changed the pricing on it. There's no, I've just temporarily changed it for this and the week that we're spending here with Jeff and MetaStock. So $197 if you're interested in and you're new to prop trading. How to build a substantial long-term income. Take a look at it. You can go to the disciplinetrader.com/prop. And you know, if you don't know me at all and you're saying, who is this guy that keeps saying he can help people? Let me get his book and let me take a minor step and get to know this guy. Just go to Amazon and the book is Their Money, Your Profit, Cashing In on the Prop Trading Revolution. So there's three things that you can do to get to know me, getting to know all about me. I just saw the movie with Jennifer, with Hudson and the guy with the claws. That movie with Neil Diamond is very, very good. If you haven't seen it, I mean, the acting is it. I have a brother that I asked him, have you seen the movie? It's terrific. Song Sung Blue, it's called. It's streaming right now on one of the services, and on what's the thing with the leaves with the fanning tail. Anyway, it's streaming right now. Find it, and it's really good. My brother says, I hate Neil Diamond, I'm not going to see it. I said, do you like acting? Do you like unbelievable acting? I mean, she's been nominated. Anyway, it's a terrific movie. Didn't mean to break into a song there, but this is what happens with a happy trader, I guess. So write me at nhallett at thedisciplinetrader.com, and I'll send you all the details on the CPR program, okay? And if you're a beginner and know nothing about prop trading or kind of wanted to know about it, or have tried it in 1 or 2 breakouts, this may help you to at least get on your feet a little bit on the 197. Take a look. I think it's one of our more popular beginner courses. And then, of course, you've always got the book if you need that. Jeff, that is, I'm not sure we have any questions. It's not the kind of presentation that begs questions, but I did want to let people know what I believe and what I've experienced through my years is the formula for developing long-term reliable income. So that is my speech to you. Is there anything that I need to answer there, Jeff?
No. No, I was going to try and make up something, but I just don't have any humor right now. Norm, great job. Thank you for coming in.
The streaming service is Peacock, I think.
Oh, there you go.
That's it. That is it. Have you seen the movie?
No, I haven't, but I got your clues by streaming feathers, a bird. That was a very good hint.
Excellent. I'm not sharing the screen anymore.
All right. I'll start sharing mine. Thank you, Norm.
Okay, I think I want to just say goodbye personally to people. Thank you for here's the University of Cincinnati, my Bearcat. Jeffrey, thank you so much. I'm sorry to those who expect to see charts, even the great meta charts that I was promoting in the beginning, but I really felt that I needed to get down into the roots with you, and really, from my experience, you need the whole package to beat the struggle. So thank you again, Jeff, for allowing me to present.
My pleasure. Thanks for coming in. As always, Norm, or Mr. Drawers, whichever you prefer. All right, let's go ahead and do this. Oops. Okay. All right. Yes. Moving on. Thank you. As we move on to Jody, our next speaker, I want to say thank you to Stocks and Commodities Magazine. You can join Stocks and Commodities Magazine at www.traders.com. A big heartfelt thanks to Sean and the guys over at Stocks and Commodities Magazine that have been working with us and helping us sponsor the event for a number of years. It's appreciated. We absolutely love them. In addition to that, a comment that kind of struck my thing. Patricia says, thank you. Patricia said, community is important. Just mentally, without copying anything, my trading mentor was still alive and traded way better when it counted. I do think community is important. And, we have a community that you can join. It's called The Traders Forum. You can join it at thetradersforum.com. We talk about all kinds of different things, indicators, topics, how to trade options, Black-Scholes models. We do a bit of a lesson every week on a different indicator, a different feature. We've covered CANSLIM. In addition to that, we'll bring in guest experts. We'll do a little bit of a podcast format kind of a thing where we talk about what we see in the market, what's going on. It's a lot of fun. And every day there's people in there sharing ideas. And it's a great community of traders. It's built to have traders help other traders. And it's growing. So you can help us grow by coming and making some friends at thetradersforum.com. It won't cost you anything. I'd love to see you there. Thetradersforum.com. Greg, it's prize time. Let's do it. Are you ready?
That's my favorite time.
All right.
Let me the best time.
Let me grab the prize laptop. We can call this a prize laptop from now on.
Okay. You have a laptop dedicated to giving away stuff. That's awesome.
Exactly. Until next week, and then it goes back to being my normal work laptop. So,
I see.
In any case, let's give away Jeff Tompkins. Not him particularly, but an ebook that he wrote called The Top 10 Stocks for 2026. It's a $97 value. We're going to give away. Jeff Tompkins is great. He's going to talk, I think, tomorrow, if I'm not mistaken, or maybe the next day, or the day after that. One of those 3 days.
Okay,
but very good hedge fund trader. He has worked with us on Trade Trend. Are you looking for him on the calendar?
I was really quick while I was listening to you. I thought I'd just zip through the calendar. He's tomorrow.
That's what I thought. Yeah.
2 Eastern.
Cool. All right. So we're going to give away his ebook. Tomorrow he's going to talk about his oh shoot.
Crack the code, the hidden number that predicts markets.
Yeah.
I just pulled that out of my pad. It just
There you go, dude. That's amazing. And
I have amazing ability for instant recall. It's fascinating.
Yeah, and you know what? We're only like 10 hours in today, so. All right, let's
two more whole full hours of training. People don't go anywhere.
Yeah, we're saving some of the best for last. Can you give me a number between? We'll go ahead and give away this prize. It can be anywhere between 1 and $59.91.
I've already pulled it. It is, according to Google random number generator, is 2,298. 2298.
Ooh, I put too many twos in there. That is Thomas T. Thomas T. with a Hotmail address. So I'll go ahead and get that over to Jeff Tompkins' team right away, and they'll be in touch with you, Thomas. Thank you, Greg. I appreciate it.
You're welcome.
I want to remind everybody as we transition to our next speaker, all of the MetaStock's been rated the best software program. It's been rated that for 32 years in a row. We've talked extensively about how it can help you find the right opportunity with a scanning engine. Scott came in yesterday and showed how you can test trading ideas to see what works the best. We're going to talk tomorrow about the forecast. We're going to spend an hour on kind of that patented technology that's in there. Bottom line, it's been a software that's been rated so highly for 32 years, and we want you to try it. We want it to be helpful for you. We want it to help you find better trades. We're confident it will. If you sign up for a month of our MetaStock DC package, it'll cost you $75. If you do that, we'll actually give you the second and third month for free. We will back that with one-on-one consult with one of our new account specialists. It'll walk you through the program, show you how everything works. We'll give you unlimited technical support. We'll give you the training, everything you need to be successful with MetaStock and help running MetaStock. We want you to be one of the customers that have been with us in another 10 years when we're doing these conferences in another 10 years. So to do that, if you do that, $75, that'll get you good for the next month and the month after that and the month after that. You'll be running until May 17th. If it's not helpful, if you don't find any value in it, if it's not helping you find better trades, it will. But if it doesn't, there's no obligation to continue your subscription. So to do that, you can go to metastock.com/conf promo. You can give us a call at 800-882-3040, or you can chat online with us. We'll be happy to talk to you. Answer any questions you've got, metastock.com/sales chat. I wouldn't trade without MetaStock. I've been using it for now 30 years. There's a reason it's been rated #1 for so long. You should give it a go. That's what I've got to say about that. metastock.com/conf promo, sales chat, metastock.com/sales chat, or 800-882-3040. Right. Patricia says, thank you, Norm. And she's going to join us, guys. She's going to join the Traders Forum. Awesome. We would love to have you. Jody Samuels is a good friend of mine. We are working on kind of putting some of her methodologies into MetaStock. She runs the FX Trader's Edge. Jody is such a smart person. We love to have her on. I actually need to bring Jody in for a ticker talk. Jody, let's go ahead and get you started.
Okay.
Oh,
hi, Jeff. Good to see you.
It's good to see you too.
Thanks for having me.
My pleasure.
So,
we'll have you anytime you'll come.
Yeah, absolutely. Thank you. Thank you. I really appreciate it. I love what you do.
And go on. Tell me more.
Yeah. No, I mean, the software is great, as you just said, and it's great that you have these conferences. That's fantastic. So.
All right, cool. I can see your screen. I'll get out of the way. I know we're starting just a few minutes late, but it's all yours. Go.
Okay, thank you. Thank you so much. Well, welcome everybody. I'm very excited to share with you a simple 3-step process for mastering trends and corrections with the Wavy Tunnel Pro dashboard. In today's markets, we have a lot of uncertainty and a lot of volatility. Yet price action often remains in sync with the underlying market cycles. I'm a big Elliott Wave person from way back when. And mastering the timing of these cycles, I feel, is really crucial in making your trading decisions. So I'm going to show you a structured roadmap today with straightforward timing tools so that you can navigate the markets with confidence and make better decisions as a result. And I'm going to show you one of my favorite setups in particular on the Wavy Tunnel Pro dashboard. Okay, first I like to start with the disclaimer. Thank you for reading that. I just want to introduce myself a little bit before we dive in. My name is Jody Samuel. Some of you might know me, some of you might not know me. So I began my career as a professional trader with JP Morgan a long time ago, trading currencies both on Wall Street and Bay Street, where I managed positions that generated millions for the bank. And over the years, I've expanded into future stocks and options, so where I am today. And for the past 20 plus years in my FX Traders Edge business, my passion has been teaching traders how to move from emotional, inconsistent trading to consistent rules-based success. I also wrote The Trader's Pendulum, The 10 Habits of Highly Successful Traders, and in it I described 3 pendulums that traders must manage. The market pendulum, so that's what we're going to cover today. It swings between trends and corrections. The financial pendulum, which governs risk, reward, and capital, and the emotional pendulum, which swings between fear and greed, patience and impatience. So the pendulum framework is at the heart of what I teach. So before we wrap up today, actually, and after I discuss some of the cycle work with you, I'm going to show you we're going to look for trades on the Wavy Tunnel Pro dashboard after I show you my favorite setup, which scans over 5,000 symbols. And that'll be great. You'll get some trade ideas to take away with you. And recently, my work has also been recognized in major publications, including USA Today and International Business Times. It's always an honor to be featured, but what matters most to me is showing traders like you how to apply these ideas in a practical way. And that's for traders just starting out or for traders who are very well advanced and have been trading for a long time, just like I've been trading for a long time. So that's what we're going to do today. And let's get started. Why we built this dashboard is, I don't know about you, but if you trade stocks, for example, now this dashboard has stocks, futures, ETFs, Forex pairs. It has almost 5,000 instruments, symbols. And I don't know about you, if you endlessly scroll through charts with no clear direction and you miss opportunities because one day you're looking at one thing and you say, oh, gee, that looks good. And then the next day it goes and you've missed it, maybe from late entry or second guessing yourself. I don't know if you have emotional trades caused by lack of structure. I'm very big on structure, and inconsistent results despite having a strategy, and wasted time trying to find the trade instead of executing it. So I'm all about structure, and the Wavy Tunnel Pro dashboard has a lot of structure in it, which we're gonna show you shortly. So this dashboard, this solution is the dashboard, one of the solutions. It shows clean setups, and it scans over 4,500 symbols daily, stocks, ETFs, futures, Forex, and crypto. And it flags high probability Wavy Tunnel Pro setups for trends and reversals. It's built for traders who want structure, not guesswork. So what process do I follow to find trades, and what is the dashboard built on? And have the confidence to pull the trigger and manage my trades with clarity. Well, this is a 3-step process. The first is this is my system. The first is the analysis. So I'm going to show you what the market map is and how to read it. So this is called a top-down approach. We start with the analysis. And then we go into the strategy. I'm going to show you my favorite Wavy Tunnel Pro strategy. And then we need trade management and optimal risk reward. So this is my system, the 3-step process. Now let's just break it down and start with the analysis, the market map for the Wavy Tunnel Pro. Where does the market map come from? Well, it comes from a few people that you may have heard of. On the left, we have Ralph Nelson Elliott, and on the right, we have Leonardo Fibonacci. Ralph Nelson Elliott studied various market indices over a 75-year period in the 1930s, and he discovered that stock markets traded in repetitive cycles, and that these cycles or waves reflected the emotions of investors. You can see that in the markets, and I'm going to show you when the market is getting really hyped up, and then when it and when the market reverses because of that. And Leonardo Fibonacci, an Italian mathematician from the 12th century, discovered the Fibonacci sequence of numbers, which is below, a sequence of numbers after 0 and 1, where each successive number is the sum of the two previous numbers. Now, this Fibonacci sequence is where all of the retracement ratios come from. You know, the Fibonacci retracement ratios, 38.2, 50%, 61.8. And then the extension ratios as well, 1.618, 4.236, etc. On the left, we have the complete market cycle. And this is what our market map is based on. We have the 5 waves moving up. This is just a trend. You can put channel lines around the trend, around any trend. And as soon as we break down from the channel lines, that's when most likely we will have a correction. Now, this is called a zigzag correction. It's a significant correction. And this is what one of my favorite trades is based on right here, buying it right here. So on the left, we have a lot of technical analysis patterns that you might recognize, such as at all these swing highs, okay, and lows. What do you think these are? Head and shoulders formations, head and shoulders, and reverse head and shoulders formations, reverse head and shoulders formations. So you see that at the end of every market turning point, you do see a head and shoulders formation, which gives you a clue into how you could trade the reversal or trade the next move up, etc. So these are called pivot points at swing highs and lows. And what you see here, the numbers, this is all from the Fibonacci sequence, all from the Fibonacci sequence. So this is the complete market cycle. And these patterns that are tied to collective human behavior are tied to Fibonacci numbers, and this is from the Wave Principle 1938. So let's look at the emotions behind some of these market moves. In this slide, Warren Buffett says, be fearful when others are greedy, be greedy when others are fearful. So you recognize the market map over here, the trend move up, and the significant zigzag correction down, and the corrections are labeled in letters A, B, C. But at point T, which is the end of the trend, this is where the emotions kick in, and traders tend to get greedy, optimistic, and exuberant, load up. And you all know what happened in silver up here, right? That was an exhausted move with a lot of greed, a lot of FOMO, a lot of getting in at the top because, my gosh, it was going to go much, much higher. And then what happened? We turned around and we did something like this. So up here, this is where we have to train the brain to, instead of being greedy up here, we want to flip this around and be fearful up here. And this is called the contrarian view, which is what Warren Buffett is saying here, be fearful when others are greedy. So it's be a contrarian up here. You don't have to go short, but you can take your profits and you can just stop yourself from jumping in because the emotions are kicking in. Down here, when traders become fearful and panicked and discouraged and actually bail, this is the time to look to buy. And I'm going to show you, this is my favorite trade right down here, the end of the C wave. It's called the Breakout 4 trade, meaning the end of the wave 4 for the next move higher for the wave 5. So this is the point that we're looking for, and this is what the dashboard scanner looks for on the daily and the weekly charts, and then we can go down to the smaller time frames to take the trades. And I'll show you some ways to express this view through the options market as well. I'll just give you some ideas for it. So this is the 8-wave cycle. Now, how does that translate into what we do, the wavy tunnel? Well, on the left, you have the market map, the 8-wave market cycle. And on the right, what do we have? We have the moving averages. And doesn't this pattern look exactly like the market map, where we have the trend move up and then we have the A, B, C down, and this is called the tunnel. It moves right down into the tunnel, and it's very, very clear. Most of the time we trade below the tunnel, and then at the end of to find point T, we look for divergence in the awesome oscillator, for example, because that tells us the market might be running out of steam. It gives us a heads up that we need to be careful. And if the initial move down is what gets us to think, okay, we get the initial move down and we can go one of two ways. We can make new highs, or we can trade up and not make a new high and start to roll over for this ABC correction. So now we get to the strategy, the Wavy Tunnel Pro setups, and there are 5 core setups in the dashboard that I'm going to show you. I'm not going to show you all of them. We're going to focus on the one. So the second step in my playbook to reaching the path to success is to have a highly effective strategy, which is easy to understand when making a trading decision. After a good analysis, strategy is used to identify the entry point, the stop loss level, and the profit target, and to know when to trade and when to stay out of the market. So we're going to cover this today. Removing the emotions is also key. So that's the strategy, and you might have your own strategy, and that's fine. The important thing is to come up with your trade plan and to know exactly how to trade your strategy, and to know what kinds of success it has, and then trade it. And it's easy to say that. It's not easy to do it. I know that it's very easy to use intuition and take trades. I know when I first started out trading Forex in, again, a long time ago. Oh my gosh, I'm so old. No, I'm young. It was new to me. Trading was new to me, and the markets, especially the Forex markets, were really, really volatile. And I traded the British pound from 240 down to 105, back up to the 150s, and it was just a roller coaster ride. So all of the work that I've done over the last 40 years, that's right, has been to, all of the work that I've done has been to really work with what I've learned and know that whatever I've learned, other traders are experiencing as well. So hence I wrote the book, and I developed a coaching program, and I developed all of these tools. And since I have an L8 wave background, we actually hired one of the floor traders to work on our desk. So he taught us L8 wave analysis, and I really picked up on it and loved it. So all of my strategies are sort of based on the market cycles, and it's a whole package. And the dashboard is really the culmination of it all. To be able to scan almost 5,000 symbols is terrific. So the strategy. This is what the Wavy Tunnel Pro setup looks like on the dashboard scanner. And you can write down these moving averages. You won't get these are called semaphores. You won't get the semaphores. That's proprietary. But this is the 12 EMA, and this is the 34 EMA and the high, low, and the close. And this is called the tunnel, the 144 and the 169 EMA. So at the end of the trend, this is where you're going to see divergence. We don't have the awesome oscillator here. You're going to see divergence, and you want to look for a 1, 2, 3 reversal, which is right here, in order to get in or to get out of your long positions. And so this is the end of the trend trade, and we at the end of the trend we get a purple semaphore. And then there's trend continuation, breakout, or pullback. So that's when you're in the trend and you're pulling back into the wave, and you get these little dots, which says, okay, it's time to buy now. And we also use the bungee strands, which confirm that, but that's a whole education in itself. And then we have sideways range bound when these moving averages are intertwined. You don't want to really do much when they're intertwined. But then we have, after we reach a purple diamond up here, we have a massive drop, and we get the gray diamond. And this is the end of C right here. And this is what we're going to scan for today. But I just wanted to lay it out for you. So this is an example of what happens when, another example of when the market moves down into the tunnel, and we have divergence in the awesome oscillator up here to say maybe the market is running out of steam, be careful. And then we get this. And this is what happened after we got the gray diamond. The market went up. The market went up. So it's finding this gray diamond, finding the end of C, finding the place where the market is really burnt out from buying up here and selling out down here, when this is really the time to be buying. Okay. And also this I like looking at the daily on this setup and the weekly on this setup. And then I move down to the smaller time frames to trade it, to look at trading it. So this is just one example, the case study. Breakout 4 trade, it's called, riding wave 5 for explosive moves. We might not get an explosive move. An explosive move would mean that we make a new high above this purple. It's not always going to happen, because what could happen is we trade up close to the purple, and then we come back down again, we trade sideways, and we have an extended correction here. But the key is to set your profit targets, and your first profit target is always going to be a fraction of this move, and you might want to take most of your profits before we take out the high. If we are going to take the high, capture most of your profits, keep a little bit just in case we take out these highs or not, and make sure to get out if we start to roll over again. So spotting the wave 4 completions and anticipate the wave 5 move up, the blast off, well, that's if it really blasts off, is what we're going to discuss today and show today on the dashboard. So now you've seen the setup. Now I'm going to show you the dashboard, and we're going to scan for this breakout 4 trade. And let's get to it. Let me show you the scanner. So okay, I think you can see my screen here. Okay, you can see my screen. Yeah, so this is the dashboard. So what I want to do, I want to remove this chart because I want to show you the real estate here. And if we go into the filter here, I'm going to just tell you what we can assign our columns to. We have the asset class, which I've unchecked because it's going to be either stocks or ETFs or Forex, or it's not necessary. It takes up too much real estate. Then we have the name, the price, the volume, the percent daily change. I don't need the country. The sector is good. The industry is good too, but I have them unchecked. And then we have market cap. Now I'm interested if the stock or whatever it is optionable. So that's important to me. So I'm looking to see if it's optionable. You can check the earnings date, the ex-dividend date, the dividend yield. Okay, I'm not going to, the forward dividend. So you can check all of these. And then we get into the wavy tunnel stuff. So I'm just going to check all of the wavy tunnel stuff. And let's just, yeah, we have it all across the top. We have the daily trend and the weekly trend. So we can sort for example, we can, on the daily trend, we can say, okay, I'm just interested in the stocks that are up, meaning green. So that already cuts, if the daily trend is up, that already cuts it down in half. Okay. The weekly trend, you can say up as well. So now we're down to 1,675 stocks. I'm saying stocks, but it's really instruments. It could be futures, Forex, it could be anything. And then you have all of the wavy tunnel trades. So I'm not going to go into what each of these are, but I am going to focus on the breakout 4 on the daily and the weekly. So now I'm going to go back and uncheck the rest of the wavy tunnel trades, and let's just unfilter these, and let me just uncheck them so that we can just focus on the breakout 4 trades. I'll keep the trends in because that's important. Okay, and now let me show you how we can set up the scan. And then we're going to look at some charts. First, let's look at the chart side now. And let me just move this over so I can see at least the daily breakout 4 trade. This is the daily chart. This is the Apple chart that I showed you earlier, where we got the gray here. And remember, I said sometimes we don't quite go through the purple. Well, this is it. So that's why you have to leave profits along the way. We almost got there, but no cigar. And then we rolled over again. Today, this is end of day, by the way. See, we don't know what happens today, but if you want to know what happens today in the trading day, you click on this little wheel and we can say dual chart view. Now, dual chart view linked symbol. Okay, let's just show you that first. So on the bottom, we have the weekly, and on the top, we have the daily. That's how I've set it up. And this is with all the wavy tunnel stuff on it. So we have the indicators on the chart, the semaphores, and I already told you what these moving averages are. This is the bungee, and this is the awesome oscillator, and these are the weekly. This is the weekly chart. You can also put live data down here. So why don't we do that? And we'll say live at bottom. And this is the hourly chart. So this is what happened today, basically. Okay, so you can always see what happened today. We don't have the wavy tunnel on this, but if you want to see what happens today, if you want to put up the 5-minute, you can do that. You can put any time frame. It automatically goes to the hourly when I set up the live market data. But I'm going to remove the live market data now. It's after the market closed, so live at bottom. And I'm going to remove the dual chart view. Okay, let's see what else you can see here. Anything else here? Okay, trade alerts. We'll talk about the trade alerts shortly, and notes. We'll talk about the notes shortly. So we don't have the dual chart view. Okay, I'm sticking with the daily. Now I want to go back over here, and these are all notes. So you can click on something and write a note. You can take a screenshot and put it in the note for any symbol that you're looking at. So it's almost like, oh, let me just look at the time. Okay, I don't want to go on and on and on and forget my time. I'll show you this feature in a minute. But now let's go to the dynamic watch list. So this is the key to this scanner. What I've done is I've programmed the breakout 4 trade already for the daily and the weekly. So for example, I can just do it live for you here. For example, I want price to be greater than $25. I want a volume to be greater than 1 million. let's say I want it to be optionable. And let's say for the daily trend, I want it to only be up or neutral. And at the same time, I want the weekly trend to be up or neutral. And now, so now we've set a filter here, but now I'm going to go into the breakout for daily. And I want to see the buy readies and the buy signals. We're just going to do the buy readies and the buy signals, and we're going to do less than 20 candles. So we get 29 here, 29 stocks from 4,900 stocks. And what is the buy signal and the buy ready? So looking at Apple here, the buy ready is when we get the gray the gray diamond. That's the buy ready. The buy signal is when we close above this filter. That's the buy signal. So it's a little bit like saying, okay, we want confirmation. So when I scan for both, and I'm going to show you. So then what you would do is you would save this. You would save this scanner by clicking Add Dynamic Watch List. And then every night I would, if I set up the alerts, I would get a list of all of these new stocks, any stocks that are on this list. Every night I get an email with a list of the stocks so that I can then open up my dashboard and look at the charts and analyze. Okay, so every night with this breakout 4, I will get my dynamic watch list because it's an end of day scanner. So let's just get rid of all the filters because I've already set up. I've done the same thing. I've already set it up. Only I set it up a little bit differently because I'm only getting 25 here. I have 2. Let me just see something because I have 2. What did I do there? Yeah, I'm not sure what. Okay, here I have 43. No, let's just go back to the initial one. Okay, so 25. And what I'm going to do is the up arrow it means that we are already confirmed above this filter. And the diamond means that we haven't gone above the filter yet. So I'll just show you an example. APP. This is the diamond. Okay. Now we have warnings also. Like, I don't like to. Here's the purple diamond, and we came down and we went up and we came down again. I won't touch a stock like this because I see the wave moving down below the tunnel. So I won't touch a stock like this. That's number 1. But let me just sort and let's just have a look at the ones that have already crossed the filter. We already looked at Apple, okay? So the signal came over here, and this was the ready right over here, and we went up to there, and then we retraced, and okay, so that we already looked at. Let's look at some other, and you can take a screenshot of these. These are all of the breakout 4 trades that have set up. So here we have First Solar, and 10 candles ago, we moved above the filter. So we've been trading sideways. We've been trading sideways here. Okay, that's one. Let's look at another one. Okay, Tenet Healthcare Corp. Okay, so we got the right over here, we got the signal, and I don't know what happened here. I'm not familiar with what happened here, but we blasted off. This is what a blast off looks like, by the way. And when a blast off happens like this, the purple moves when we make a new high. This was purple before. This moves to the new high. So this is the definition of a blast off. You can see that. Again, I don't know what happened here, but this was the setup, and this is when the ready showed, and this is when the signal showed. So that was a very nice move. Oh my gosh. Okay, let's look at another one. Here's when. Okay, this is okay. This is still okay. This actually moved to the right. So this was the gray diamond, and we went up, but we didn't, and then we rolled over, and then we made a new low. So I can tell that we made a new low here because I know how the indicators work. We definitely made a new low here, and then we bounced off there. Okay, so let's look at another one. So here we got the gray diamond. This is Broadcom Inc. And then we traded up and we came down. So these are all in CVS. 7 candles ago, we got this cross, and we're trading higher. Again, we would have gotten this. I remember when we got this, and when we did get this, and I think I was giving a presentation, because we gapped down and we traded down, I just said, confirmation might be a 1, 2, 3 reversal on a smaller time frame or a close above the filter. Okay, but it was a very big move to a close above the filter. Let's see what else, and then we're going to go to the weekly. Okay, so here is another example, and these are all the same patterns that I've been showing you, where we have the purple diamond, and then we have the gray diamond, and then we turn around. And I think there might be some questions here. Let me just have a look. No? Okay. Not okay. And let's just look at a few more, and then we are going to go to the weekly. Okay, so here's another one. This is a very nice, and notice that the green is showing up for the daily trend and the weekly trend. And my definition of a trend and the way this is programmed is when the wave is above the tunnel, this shows up green. When the wave is in the tunnel, this is sideways. Okay, and when the wave is below the tunnel, this is red, and I'm not interested at that point in this trade. Okay, this trade only works when the wave is above the tunnel. Okay, here's another one. So you can see the pattern. You can see the pattern. Okay, let me just see. Here's another one. Just look at the pattern. Just look at the pattern. Now, this I'm not really interested in because the wave is moving down below the tunnel. So I'm not interested in that. Okay. So this is the pattern. Now let's look at the weekly, because there's some interesting setups on the weekly. And we have fewer setups on the weekly because I've really made it. Okay, here we have 43 setups on the weekly, but I am going to say that I want to filter only the ups, let's say. Only the ups, the trend up on the weekly. That means that I only want the wave to be above the tunnel. So I'm going to put up the weekly chart now. And let's have a look. Let me go in here and let me put the weekly up so we can see the weekly right over here. And we're going to sort for this. Okay, this is Vertex Pharmaceuticals. So this is really, really nice. I remember when we had this move down and we had a beautiful 1, 2, 3 reversal on the weekly. When we get a signal on the weekly, I mean, it's even more powerful than on the daily. And I remember looking at this and saying, okay, this could be a really nice one. And then we closed above the filter, and we haven't made a new high above this purple, but if we do, then the purple will move over and this will become gray. So this is a very, very nice trade. Here's another one. Okay. On holding, ON, and we just bounced off and retraced and pulling up, moving up again. Here's another one, waste management. That was a nice move as well. So you can see that these really nail really, really gorgeous opportunities, gorgeous setups. Now this is an ETF, okay? This is consumer staples. And so look what we have here. We just blasted off. And this is a true blast off. The purple moved from here to here, and this became gray. This was the setup right over here. And then we had a 1, 2, 3 reversal. 0.1, 0.2, 0.3. I mean, this was a beautiful buy when we took out these highs or when we closed above the filter with a stop below the low. You're always going to leave your stop below the low. I mean, this is really, really, really nice. And the other way that you can use this is if you're just trading ETFs, you can just set up your own watch list. Or if you have, let's say, 50 stocks that you're watching, you can upload your watch list into this and create your own watch list. So, and just click on it, and you'll be able to look at the charts and just, go down and just do your own analysis. And by the way, the developer that I'm working with is very eager to add instruments if you have instruments that aren't here right now. And even if you want something, I don't know, if you see something on the way the dashboard is organized and you want to see something different, we're very open to making changes. So you can be part of the development of the dashboard, even though this has pretty well stayed the same for like since April already when this first came out. So this was a really nice blast off. So again, you can just type in your instruments. You can look at the weekly and the daily. You can look at the live markets, or you can just set up your own watch list and then scroll through. Let's see if there's anything else. Okay, here's another one, Pilgrim's Pride Corp. I mean, just look at how beautiful this setup is. So remember, this is where we get the purple diamond. So you can look at the awesome oscillator. The awesome oscillator is, I learned from Bill Williams way back when, because in the 90s actually. And he taught me all about the awesome oscillator. I worked with him directly. There were three of us working with him at his home. He's very entertaining. I loved learning from him. And really the most important thing that I use today that I learned from him is still the awesome oscillator. So the awesome oscillator tells you a lot of different great things. It's like a momentum oscillator as well. But look at the divergence. This shows that the momentum is running out of steam and we might be due for a correction. And this is where the market gets greedy and thinks we're going to continue to move higher. And then what happens? It rolls over. And it usually rolls over, not usually, but often it rolls over in a 3-wave move. And you can see the 3-wave move here, A, B, C. You don't have to count the waves. I don't count the waves. I just see the patterns. Okay, I'm not a consummate Elliott wave counter because I'm a trader, and I always, when I worked at the bank, I always had an Elliott wave counter sitting next to me because I wanted to know what they were seeing in the markets. But I then developed the wavy tunnel to count the waves without really counting the waves. So that's a little bit about the awesome oscillator. And the bungees are really terrific as well. the bungees tell their own story, which I'm just not going to go into right now. But if you sign up for the dashboard, you get a whole education on on how to use the bungees and what all of the Wavy Tunnel Pro setups are, and how to we show you how to scan for all of the setups. And I would be prepared to meet with you to see how you like to trade and to guide you and to really go through the setups that might be more in tune with your trading personality and the time frames that you're trading, etc. So here's another one. Let me just oh my gosh, there are a lot of them. Okay. Okay, so this is an example. This is a good example where we repainted. Okay. And this was, because I want to show you what happens also if we fail. And this one failed. Here we had a gray, and then we rallied. We even closed above the filter, and then we came down and we got a purple semaphore. So this is why your stop has to be below the low. There's no question. It has to be below the low. Okay? Because not every trade is going to work out, but a lot of the trades do. I've got to tell you that this is my favorite setup in the Breakout 4 world. Okay, I think I've shown you enough about the dashboard. So let's get back to the presentation now. And if you have any questions at all, I've already told you what the moving averages are, so you can set these up on your charts yourselves. You can set them up on your MetaStock charts, okay? Because we're not on there. So you can set up these moving averages on your MetaStock charts. You won't get the semaphores, but you'll be able to see the market cycles, and in particular, this setup that is really very, very cool. So let's get back to the presentation. Okay. We had the live walkthrough. I hope you enjoyed that. So let's summarize a little bit. Okay. Trading in action. Identify entry, trigger, and re-entries. So this is another trading platform. So it has a little bit different. It has triangles instead of the diamonds. Sorry about that. Okay. The purple arrow is the end of the swing move. So that would be the end of the swing move. That's one, or the purple arrow. Yeah, I guess it's a down arrow. And so that's the end of the swing move. This is also the end of the swing move. This was purple when we were back here. And then we come down, and these are the breakout 4 trades where the gray arrow kicks off the trend. So this is one gray arrow, and this is the second gray arrow. So the market happens. It shows that repeatedly sometimes when the trend keeps on moving higher. So if you have some strong stocks that you're looking at, that you're trading, and you see this kind of a move, but the fundamentals of the stock haven't changed and the theme is there, this is an ideal time to buy it. Because what happens is that we could move higher. Now, this is the S&P futures. So this is the S&P. Obviously, this also works on all of the futures markets. So I'm talking to you about the dashboard, but we have indicators on all of the different trading platforms. Not all, some of the trading platforms, we don't have them on MetaStock yet, but some of them, such as NinjaTrader for futures and TradingView. Okay. So these are the breakout 4 trades that we just spoke about. Now, I did talk earlier about how you can express your trades either by buying the stock, which is purely directional, and you leave your stop below the low, or you can buy calls, that's leverage directional. You can do a bull call debit spread, that's directional and target based. You can do a bull put credit spread, that's structural and for income, and you can do a cash secured put. Okay, So you have to decide what your business model is. The Wavy Tunnel Pro defines the wave where we are, the breakout 4 trade. The trader defines the business model, growth, income, ownership, all inside the same structure. Okay, this is the bullish structure playbook for the Wavy Tunnel Pro breakout 4 trade. So we've seen the dashboard in action. We did a live walkthrough. I didn't show you some of the advanced features. I meant to, the built-in note-taking and journaling. So you can, if you like one of the stocks or if you do a scan and you like one of them, you can actually take a screenshot of the chart and label it and stick it in to your note. And that's a form of journaling. I spoke about custom dynamic watch lists that you can set up with your own filters. And I showed you 2 of the dynamic watch lists that I created, the breakout 4 on the daily and the breakout 4 on the weekly. And we have all kinds of setups there. So you can scan for your favorite Wavy Tunnel Pro setups. And we have all the education around these setups. So this tool is a complete trading workflow, not just a scanner. So if you're ready to trade smarter with the Wavy Tunnel Pro dashboard, this is your invitation to join us, and you will get access to the full feature scanner across 4,900 symbols with real-time alerts, which you'll get at the end of every day. So catching setups without screen fatigue. You don't have to flip through all of these charts. Like the setups will come to you. You have integrated tools for note-taking, optionality, filtering, and dynamic watch lists, private Discord community, support with biweekly Q&A and training with me. And these are some examples that set up quite a while ago when we first had the scanner. So Microsoft, we got the gray, and then what happened? A 37% move in 2 months, a 35% move in 2 months with Charles Schwab, a 31% move in 2 months with Live Nation. Okay, and this is all from the dashboard scanner. So as a dashboard member, you will get full access to the Wavy Tunnel Pro dashboard scanner, ready to use setup guides and trade templates, insider sessions with me and the development team, a voice in shaping future features. Okay, if you want a feature that you're not seeing, we can add it. So you'll stop missing trades, you'll help shape the future of this tool, and you'll finally trade with confidence in the structure that you've been looking for. Okay. It's no magic, just market structure mastery. This isn't a black box system. You'll understand every setup you take, just like we described the breakout 4 trade today, with structure, confidence, and discipline, hopefully based on real-time chart context. So we don't rely on hype, we rely on time-tested market principles. No system is perfect, no trade is guaranteed, you know that. So we teach disciplined, rule-based setups so you can trade with clarity, not emotion. And this is not a buy and hope system. You'll know what you're trading, why you're trading it, and how to manage it from entry to exit. So this is your invitation to join us. We spoke about the watch lists and the importing your own watch list from a CSV file. At the end of every day, you will receive automatic email notifications 2 hours after the close when new symbols appear on your dynamic watch list or watch lists that you've set up. We have live mode and dual chart mode. I showed you that. Trade notes for journaling and chart screenshots. We spoke about that. We have light versus dark mode and full screen mode as well. So the website is wavytunnelpro.com/dashboard. I see that Greg has posted it. Thank you. And this is the price. It's a discounted price for this show, $797 for annual. But if you want to try it out, it's $79 a month. Okay. So it might be worth it just to try it out for a month to make sure that you're using it and then you like it. Okay. So thanks for being here. The Wavy Tunnel Pro dashboard is about clarity, confidence, and consistency. You can email me at jody@fxtradersedge.com if you have any questions at all. And you can scan the QR code here, or visit wavytunnelpro.com/dashboard. And I'm here to take questions if there are any. Thanks, Jeff. Are there any questions?
Yeah, I had to find. How do I find my my microphone? Was the first question. We don't have a question. We did have a little bit of some comments. Patricia said, "I like the projection from different time frames in one chart. The bands, the wavy channel I use as approach for different trend finder line settings on smart trader charting. I figured the settings to show 4 hours and daily on the 15-minute chart."
Yeah, we do that too. The higher time frame, moving averages.
And that is the only question I've got.
Okay. Well, thank you so much.
We have put the links in both the chat and the YouTube chat. And good job. Thank you.
Okay. Thank you.
All right. Thanks a bunch.
Bye. Bye.
Bye.
Okay. I'm just going to click leave session.
Okay.
So I don't
good.
shut it down. Okay. Bye, Jeff. Thank you.
Don't shut it down, please.
Okay.
Okay.
No.
Let me go ahead and share this. We will go and migrate to our speaker. Hopefully he is here. I'm sure he is. He is. Okay, good. Let me turn on my camera real quick. Let me share my screen real quick. Okay. Hello, Daniel. I can't hear you.
Oh, hi, guys. What about now? Can you guys hear me?
That's a lot better. Yeah. You can actually help me out. We've had a big long day, and I'm going to give away a mega prize. Do you want to help?
Sure.
Okay. Before we do that, I want to say thank you to our sponsor, Stocks and Commodities Magazine. I want to say thank you to the tradersforum.com, which you should join. Great community there. Live market chat with other traders, learn about the market, a community of traders designed to help other traders. You can join it for free. Thetradersforum.com. Active community of traders. I think we're up to about 13 or 1400 right now, and a totally free place to join. Great community. Daniel, here's the deal. We've had discussions all day long, and we've had questions and we've had comments. Derek says hello. Patricia says bye. Patricia says you're very instrumental. You know, the comments really help, and they help with kind of the YouTube algorithm and all that kind of stuff. So we usually save our best prize for the end of the day, and then we usually give it away to somebody that randomly asked a question. So what we're going to give away real quick here is 3 months of our MetaStock real-time platform. We're going to give away 3 months of the news service and 3 months of a product called learnmetastock.com. What I need from you is let me make sure I'm showing all of the questions for all of the day. And they are unfiltered, so I should be able to just scroll and scroll and scroll until 12 hours of questions come through. I'm going to start at the top of this list, and I'm going to scroll down. And when you tell me to stop, whoever I stop on is going to win the prize.
Sounds good.
I will let you know when I start scrolling. I'm scrolling.
Stop.
Kevin Cunningham. It was actually Patricia, but she won yesterday. So Patricia's been very, very, very interactive is the way I put it. Kevin C won, though, for the prize for today. And Kevin, you said break of a pivot earlier today. I'm not sure in what context that was. It's been a long day, but because of that very comment, Daniel Sinig picked you to win. All right, let's go ahead and get started. Daniel, you're where are you at exactly right now geographically?
Oh, I'm in Montreal, beautiful Canada.
Oh, okay, so it's not terribly late. I thought you might be up really late. Well, you are going to take us home today. We saved the best speaker of the day for last. Daniel is what I would consider when it comes to writing indicators, I consider you a mad scientist. You do a really, really good job. You kind of think of ideas nobody else thinks of, and I think you do a great job. So there is your introduction. I'm going to go ahead and let you get started.
Perfect. Yeah. Thanks, Jeffrey. Thanks, everyone, for staying on so late. It's been a long day. I've heard a full day of great speakers, and I'm honored to be here tonight to close everything. So I'm gonna get right to the point. I'm gonna share my screen, and then we're gonna get into the markets. We're gonna see lots of good trades and ideas today. And of course, if you have questions, guys, you know the deal. Don't be shy, and yeah, just voice them or put them into the chat, and Jeffrey will potentially interrupt me and bring those questions to my attention. All right, so I'm going to try to share my screen. There we go. It's a bit sluggish. Let's see if I find the right one. There we go. All right, Jeffrey, please confirm if my screen is shared and if we are good to go.
I see a screen. I see a MetaStock chart. And then I don't see you moving anymore. Uh-oh.
Yeah, I also don't see him moving unless he does a really, really good statue impersonation.
He's gone. Maybe
I'm back. I'm sorry. Yeah, I'm not sure why this happened, but I hope I'm good to go now. So Jeffrey, can you see my screen?
I can. Well, we had a great freeze frame. You looked like this.
Yeah. All right. I hope my connection will be stable. Yeah. If not, just say something. I'm gonna repeat something. But well, let's get started before everything breaks down. It's been a long day, so let's get into it. So my title for today's presentation is AI-powered trading, smarter indicators, and better decisions. And what that may mean, we're going to discover together today. But before we get into it, I want to say a few words about last year. I've been on this MetaStock or various MetaStocks event in 2025, and it doesn't happen every year, but last year I did have what I would call a perfect MetaStock year. So what do I mean by this? Well, let me show you, because every time I come on, I try to do something special. I try to, point out a symbol, a trade, a setup that I really like that day of the conference. So I came on in May 2025, and back then I looked at Meta. Meta had an interesting setup. I had a little long entry signal here at around 640. I pointed out a target and a stop loss, and a couple of weeks or maybe a month later, we hit our target. Nice, good start to the year. Well, then a couple of months went by, and I was back in October at MetaStock, and I found Google also had an interesting setup. I can see it here, another long entry signal, a good setup based on this indicator down here, which I'm going to talk about in just a bit, where I point out the entry, the target, and the stop loss. And also this one, a couple of weeks later, hit the target. Oh man, 2 for 2, great. And then I was back in November 2025. Very much the same setup. Another long entry signal. I found entry on 73, target 82, stop loss 69. Ventas Inc., a company in real estate in the S&P 500s, and also this one hit the target. Whoa! So what a year it was. And what I'm going to try to do in 2026, well, you may guess it. I'm going to try to repeat the same performance. Of course, there are no guarantees, but I will surely try. So this is my trade for today, but actually for tomorrow when the market opens. Another long trade. When I trade stocks, I typically look at the long side because of the upside bias of most symbols in the stock markets, in particular in the S&P 500s. Arch Capital. Another interesting long entry signal, and we're going to have an entry and a target and a stop loss as well. But let me show you quickly why I like this trade, and then we're going to, spend the remainder of this session teaching you how you can find these trades as well. So what do I like about this one? Well, first off, once again, we do have an entry signal here on the last bar, on today's bar. This is a daily chart on the bar that just closed. Long entry signal. All right, not bad. The symbol itself has been, you can't really see it on the snippet here, but has been in a long-term uptrend, but lately has been consolidating. But now there seems to be some kind of breakout move to the upside. Secondly, there's a number down here which says long efficiency, 77%. This is a long trade, so we're only going to look at the long efficiency. It says 77%. That's really high. All right, what this means, I'm going to explain it in a bit, but this is another convincing factor, at least to me, why this is an interesting setup. And thirdly, you see this little circle here at this indicator down here. This indicator shows me we are currently in an uptrend, a mainly green area, but just came out of a bit of a pullback. If you know trend trading, you may know, okay, there are good times to enter into a trend trade, and there are not so good times. A not so good time would be perhaps to enter when everything's extended and really high up. A better time is we wait for a pullback. We're going to get a better price, have less risk on the table, and the anticipation is the overarching uptrend is going to continue. So three things came together which allowed me to find this particular trade. What I'm going to do now in the remainder of this presentation is I'm going to show you how I found this setup and why I picked it. I already gave a little bit away why I picked it, but I'm going to show you how I picked this setup using the great MetaStock platform. Well, we're going to get to this. Now, you may ask, well, who's this guy? Who is this guy talking about these trades and these setups and percentages and pullbacks and trend trading? Well, let me give you a bit of background of who I actually am. So my name is Daniel Sinek, and I am one of the founders of TradingIndicators.com, a platform specialized on offering innovative trading indicators. And innovation is dear to my heart. Let me explain to you why. Because early in my career, many years ago, perhaps, I don't know, 15, maybe 20 years ago, my main career objective was not in trading. It was not in finance. It was in software engineering. I always wanted to become a professor in software engineering. So I went through all the levels. I did my master's in software, my PhD, my postdoc. I started doing research and teaching at various universities in and around Montreal. I even have a little site here. I'd rate my professor if you want to check it out. But you know what? During all these years back in my career, I also was fascinated by the markets and how you can make money using the markets, the financial markets. So I started trading on the side. And unfortunately, as many traders perhaps also do, when you just start off trading, just really with anything, if you're starting off, you tend to make all kinds of mistakes, which is completely normal. And so did I. So I overtraded. I took too much risk. I traded when market conditions were simply not right. And, I revenge traded. And after donating quite a bit of money to the markets, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, as a software engineer, needing help meant I need better tools, better indicators, better software, which will allow me to make better trading decisions. So I rolled up my sleeves and I started coding. And the very first indicators which I've ever written, they were solely for my own purpose. But once I realized, these indicators are actually allowing me to make better trading decisions. They're actually helping me. I thought maybe others could benefit from these tools, from these indicators as well. And this is really how the story behind TradingIndicators.com started. All right, but enough about me. Let's get
Daniel, we lost you again.
It may help if he turns off his camera, Jeff.
Yeah, that might help. I
see his mouse is still. Yeah.
Okay. Trade ideas and strategies and setups discussed and shared in this webinar should not be construed as trade advice. These are for educational purposes only.
Hey, Daniel.
I'll try and send him a message if you want to continue the audio approach.
I see it's trying to load.
A long way in the world of AI, cloud computing, quantum computing. Jeffrey, did you want to?
Hey, you're breaking up quite a bit, and we think
maybe really
conserve bandwidth. Well, okay, you're kind of talking about yourself was fine. The disclaimer kind of came through choppy.
Maybe I'm gonna
might save bandwidth if you turned off your camera.
Yeah, okay, I will do this. I'm sorry, guys. This is not my intention. Hopefully now it's better. Jeffrey, can you guys hear me now? Is it a bit better now?
We can. We can right now, and I've got my fingers crossed.
Okay, me too. All right. Well, let's see. It's been a long day. So what I was about to say is that with everything we try to do here at Trading Indicators is we try to push the envelope. We always try to go the extra step, the extra mile to create indicators which are truly useful, which truly have a value add to you, the trader, which will really help you to make informed and better trading decisions. Now, we were asking ourselves the question, in this attempt, what else besides trade signals could traders possibly need? There's so many indicators out there which give you like entry signals, exit signals, perhaps if they're good. But what else could be out there? We thought, wouldn't it be cool if it was possible to have some sort of indication of how much a trader should trust a signal or perhaps distrust a signal? So give you some true guidance as to whether you should take the signal or perhaps not take it. And here's an example of what I mean by this. So back in the day, maybe 10 years ago, maybe 15 years ago, poker used to be a big thing. That's just going to be an analogy. And during poker broadcasts, you could always see the statistics on the screen. For example, here, the percentage, 80% for this guy, Nengrau, or whatever his name is, and 20% for this other guy here. And these percentages would indicate to the viewer at home what are the odds, there are no guarantees, but what are the odds for this player to win this pot or this hand, or for this player to win this hand. And I thought, that's a cool idea. What if we could use the very same principle and bring it to the world of trading? Imagine, what if
Uh-oh, Daniel, we've lost you again.
How would you trade if you had this kind of information? And Jeffrey, am I breaking up again?
You did just for a minute there, and now you're perfect. It's really weird.
I don't know what's going on.
We'll do our best.
Do you mind if I try something real quick?
I don't. What are you going to try?
I'll try to put my VPN on, because sometimes the firewall in our data center here is blocking the webinar tool. But let me just try it. Let me know when I'm back.
You're back.
Okay, cool. All right. Hopefully, fingers crossed, it's going to be working better now.
Okay.
All right.
I've got toes crossed to you this time.
Okay. So, what would you do as a trader if you could know the odds of having a next? If you would know the odds of having a successful trade, but before taking it, how would you trade? And I think everyone in his right mind would only take a trade if the odds are in my favor, and would stay on the sidelines if the odds are not in my favor. And sometimes, of course, not taking a trade is the best trade advice that you can get. Wouldn't that be cool? We thought, yes, this would be cool. And we asked ourselves this question: can this be done? Is it possible to somehow display these odds, these numbers, directly on your price chart or on the expert commentary? The easy answer is yes, this can be done. We are able to display these percentages. You can see it here on your chart for you. In this case, the odds of winning your next long trade, we call this long efficiency, or the odds of winning your next short trade. But of course, the real question is there actually any value in these numbers moving forward? Are they actually having any effect on the future performance of a trading system? So we asked ourselves once again the very same question. This is a much tougher question to ask. And what we've done is to get to the bottom of this is we have implemented or created a test system where we back tested a swing trading system over the course of multiple years across major US stocks, about 100 US stocks. And over the course of this back test, about 4,000 signals were generated. We looked at the performance of these 4,000 signals completely unfiltered at first. And unfiltered, we got mediocre result, I have to say. It was not great. But then we did something. We used a filter for the system where only the signals would be taken if at the time of the signal, the odds were in our favor, and if not, the trade would be skipped. And the performance of the system was overwhelmingly improved. And this gave us so much confidence that we decided to develop an entire suite of indicators based on this principle, based on this odds prediction technology. All right, so this was the first game changer that we've discovered with our indicators. We call this the instant performance statistics. Now, what is possible once you have these statistics? Well, first off, and this is obviously the most important part, is you can now make fully and truly informed decisions. You'd only take a trade when the odds at the time of the trade are in your favor, and if not, you would skip the trade. Done. Basically allowing you to only trade when the odds are stacked in your favor and the market conditions are beneficial. But another side effect of this thing was that, hey, these numbers, these percentages directly displayed on your price chart, they can also be used to find out, hey, what are the optimal parameters for a given indicator, which gives us signals. You know, every indicator comes with parameters, like the RSI has parameters, like the RSI period, stochastics has parameters, super trend has parameters, all these indicators, they come with settings and parameters. But how do we know which settings are the best ones? Well, now we do have the tool which allows to see hard facts directly on the chart, seeing which parameters are actually improving the performance and perhaps which settings would make the performance worse. But this brought up another issue. Because, you know, manually trying out all these different settings and parameters is, well, to say the least, quite challenging for most traders and investors. Not because it's so complicated, but mainly because it's so tedious. You know, trying out all these different combinations of parameters. This takes a long time. And you as a trader, you don't want to spend your time, you know, trying out different parameter combinations. You want to focus your energy on what really matters, which is this final decision of whether you should take the trade or perhaps stay on the sidelines. This is what a trader should focus on, not the tedious figuring out what are the best parameters to choose from. And we thought, hey, yes, this is a real problem. And this is why we have invented another technology, which we call auto-optimization. A technology which would empower the indicator to do an introspection and to figure out what are the best parameters for the given symbol and time frame at hand fully automatically. And this was another game changer because it took away this burden from the trader and by doing this fully automatically. So these two breakthrough technologies have dramatically enhanced and changed the way we trade, and we have used them to implement and we've used these technologies to enhance the indicators which we are now offering. In summary, instant performance statistics directly in the price chart showing you what are the odds of having a successful trade, and auto optimization technology which will find the best parameters automatically for you. Now, to show you how this works, we have implemented these two features into a whole set of indicators. One stop and reverse indicator, which I'm going to show you in a second, one trend trading indicator, one divergence indicator, one breakout indicator, and one confluence indicator. And our idea was that, hey, no matter how you trade, no matter what your trading style is, no matter which indicator you use, these two technologies, auto optimization and instant performance statistics, they can be used to enhance any indicator. I'm going to prove this to you right now in this session. So let's start off with stop and reverse. All right, so when I say stop and reverse, one particular indicator comes to mind. You may imagine what it is. Well, it is the super trend indicator. It's a classic out there. It's one of the most known trend trading indicators out there. And in fact, it was developed by a French trader, Olivier Seban, back in the day. And he even wrote a book about this indicator, which basically was called everybody deserves to be rich. Well, so it featured this indicator in this book. And this indicator has become one of the most influential trend trading indicators out there. And what it did is it had a couple of, at least back in the day, revolutionary technologies built in. First off, it specialized on the early detection of trend reversals. You can see it here a little bit. We're an uptrend, reversed into a downtrend, and the indicator shows you, okay, now perhaps it is time to get out of this uptrend, this bullish move, and reverse your position into this bearish move. So the indicator gave you these entry signals, like this short entry signal here, but it also gave you what we call a trailing stop. You can see this little green line here, which is always moving upwards, or this red line, which is always moving downwards. And this trailing stop allows you to stay in a trade for as long as possible, to stay in this trend for as long as possible. And only when this trading stop is broken, then you would get out of this trade and we would reverse the position. So the long entry signals would always be replaced by a short entry signal, which would then eventually be replaced by a long entry signal. And the moment where we replace the signal is when the trading stop, like this green line here, is broken. The green line here is broken to the downside, or the red line would be broken to the upside. So we have buy entry signals, these green triangles, a trading stop, sell entry signals, and also a trading stop for the sell entry signals. So let me quickly show you how this classic indicator works. And I'm going to show you how it can be optimized. All right, now let's check it out. Let's go to MetaStock. All right, so I'm going to be here on my MetaStock platform, and I have applied, just to start off with, super trend to the S&P 500 on the daily time frame, the SPY. And we can see here, all right, we have some, some green arrows facing upwards, some red arrows facing downwards, and we have this, this dashed line here, which is our trading stop. And you can see, okay, quite a few trades have been taken over the course of this period. But you may also see, this doesn't look also convincing. We have a lot of zigzagging in here, a short entry signal, quickly reversing into a long signal again, then short again. This perhaps doesn't look ideal. And you know what? I agree with you. But for now, this is just a hunch. You can look at this chart and say, hey, this does not look perfect to me. Well, guess what? We actually now have some hard facts built into this indicator, which will allow you to see directly on your price chart, or on the expert commentary in this case, to see what is the actual performance of these signals. So we're going to go to Expert Advisor, Commentary. This will now open up a sub panel, and once it's opened, let's give it a second. There we go. I'm just going to put this here into the panel. There we go. Dock it into the lower end of the chart. I'm gonna, oh, come on. Where did it go? There we go. Okay, perfect. Just took a little second. And in the expert commentary about this indicator, the super trend indicator, we can now see, okay, over the course of the chart here, 58 trades were taken, 41 win rate for long trades, and 41% win rate for the long trades, and 27% win rates for short trades. This doesn't sound too good. Even though with super trend, sometimes because your winners outpace your losers by a bit, even a win rate below 50% could potentially be beneficial. But in this case, actually, it's not. Look at this one here, the profit factor, which is a metric which takes into account the size of your winners and the size of your losers, is below 1, indicating that this is right now in its current configuration a losing trading system. An indication to you right now, with this configuration, with the parameters which are currently used, these signals should not be trusted. They would be losing. And you may say, all right, like most indicators, it doesn't look too good. But at least now you have hard facts. But what if there was a different combination of parameters? Right now we're using the default parameters, 2 for the multiplier and 20 for the period. What if there was a different set of parameters which would give you better performance? All right, let's see. Let's enable the auto optimization feature of the indicator. All right, let's do it. So I'm going to go to the settings here, and this is just an example I'm giving you right now, or currently we are only trading with the auto optimization enabled. I'm going to go to Super Trend Bullseye, which is the name of this enhanced Super Trend indicator. All right, I click Edit, and I will enable auto optimization. Don't worry if this looks a bit cryptic. We have a handbook on all of this, and by default, auto optimization is enabled anyways. So we'll close it, and I will refresh my chart here, reload it, and then let's see what happens. All right, so now the indicator is recalculating. You can see it here. It takes a little while. And now look at the chart at first. Aren't these signals so much clearer right now? Much less zigzagging? You probably would agree with me. Short, we stay in the short trade, and a long, really long winner here, short trade, long, and so forth. Really long, really run up, long trade here, and so forth. This looks more clean right off the bat. And this was possible because now the optimal parameters are used. 4.5 as the multiplier. It used to be 2 before. And a period of 100 instead of 20. Much cleaner. And the indicator did this using our auto optimization technology. So this looks much cleaner. But does it actually perform better? Let's scroll down. Let's look at our performance statistics. 71% win rate for long trades and 42% win rate for short trades. Much bigger, and a profit factor of whopping 3.02. Contrast this with the profit factor we had before of 0.78, I believe it was. A difference of night and day. And this was possible because now our auto optimization technology is enabled. And guess what? Guess what happens when we change time frames? Let's try. This is the daily time frame here. Let's go to a smaller time frame. Let's go to the 5-minute time frame, an intraday time frame. What will happen now? The chart will load. Give it a second, and the indicator will auto optimize in the background. All right, so it's loading. We get our signals here for the 5-minute time frame. You can see it here. Some very nicely hit swing points here. And if you go down to our settings, oops, 1 second. Where do we go? There we go. To our settings here. 1 second. Come on. There we go. We can see now the best parameters for this time frame are 3.5 and 60. Once again, they've changed. Why? Because now the optimal parameters for the 5-minute time frame are used instead of the daily time frame. And if you go down to the performance statistics, they went down a bit. We can see that short trades worked much better in this case at 66.67%, and the profit factor is 1.91. Now let's talk a little bit about these statistics down here. Long win rate, 33%. Short win rate, 66.67%. How should we interpret this? Well, first off, overall, had we taken these signals, we would have been profitable. But perhaps we could have done better. Perhaps if we had only focused on the short trades, maybe our performance would have been even better. And you can see this because the short win rate is almost twice as high, or exactly twice as high as the long win rate. So this is another takeaway. Because sometimes if there's such a big discrepancy, what you can do is to only focus on the better performance signals, in this case the short signals, and skip the long signals altogether. All right. Let's change it up one more time. I'm going to go back to the daily time frame again, and I'm going to now change.
Hey Daniel, I can see your screen still moving, but we lost audio for some reason.
I hope it does.
Oh, there we go. You're back.
Oh, did I?
Just for a few minutes, like it's your audio that goes out. I can still see the screen moving and everything. So
for a few minutes?
Oh, not for a few minutes. I'd say maybe 10 seconds or so.
Oh God. Okay.
From when you said let's change the time frame.
Okay. Wow. Not sure what's going on. But nonetheless, this is a different symbol here. This is Bitcoin. Okay. So I changed not only the time frame now, I also changed the symbol. We went from the SPY to Bitcoin. And once again, if you look at the signals here, you can see they are pretty much dialed in. And if you go down to our settings, now the best settings for this signal, for this symbol, is 5.5 for the multiplier and 20 for the period. And our performance statistics is 75% for the long side, interestingly, and 0% for the short side, with a profit factor of 2.13. So historically speaking, for Bitcoin on the daily time frame, only the long signals would have worked out. And of course, this short signal here probably would be working out as well. We're already in profit. But historically speaking, for the trades that have closed, 75% of the long trades were winners, and so far no short winners, but this one is going to be a winner here for this short Bitcoin trade. All right, so let me quickly go back to the slides. And there we go. So what have we seen so far? Well, we've seen our super trend bullseye indicator with the auto optimization technology, its performance statistics, and there's some other features also built into this indicator, such as different reversal modes on close and on touch, and different trading styles. For example, long and short signals, long only signals, or short only signals. Why might this be important? Well, imagine you have a signal like Bitcoin, for example, where the long signals clearly work better than the short signals. And maybe you have a natural upside bias for a particular symbol. Then you could tell the indicator, hey, indicator, optimize only for the long signals and ignore the short signals in your optimization. This can even further increase the parameters, which are deemed optimal. All right, so back to my slides one more time. And now let's talk about a different set of indicators. We're going to talk about trend trading, reversal trading or divergence, and breakout trading. Now, 3 different trading styles, and we believe and I have indicators for all these different trading styles, we cover all the different market cycles. We cover the trending market, a reversing market, and a sideways market where we may look for breakouts. And in fact, we have developed an entire bundle dedicated to these 3 market cycles, which is called the Power Bundle 360. And this indicator, this bundle consists of 3 intelligent indicators where our auto optimization and win rate prediction technology is built in. Now, the first indicator in this bundle is called 1 to 3 strike. It's our trend trading indicator, which gives you an entry signal if 3 things are coming together. We need to have directionality, so price needs to be moving in the entry direction for quite some time. We need to have an increase of volume and then increase of volatility. And if all 3 things come together, an entry signal is generated. Secondly, we also have an indicator for finding reversals, which is called divergence cloud. And you may have heard about the concept of divergence before, which basically is a disagreement of price movement and an underlying indicator. If they show different things, then this could be a sign that hey, something is up, something may be changing, maybe a change of regime. And this is exactly what divergence is all about. Now, there are many different forms of divergence out there, like RSI divergence, stochastics divergence, MACD divergence. We thought, however, let's be creative. Let's create a brand new form of divergence, which we termed the volatility momentum divergence. And we've run back tests in our lab here on this new form of divergence, which oftentimes was the more precise one. And we dedicated an indicator based on this new form of divergence called divergence cloud. And thirdly, in our bundle, we have an indicator for trading breakouts called volatility crusher. Now, this indicator is designed to detect what we call strong breakouts. And in our book, a strong breakout is a breakout where price continues in the direction of the breakout for quite some time afterwards, after the breakout has taken place. And you can imagine as a trader how you can take advantage of this by simply entering in the breakout direction, anticipating, yes, price will continue to move in that direction for quite some time. All right, enough theory. Let's check them out on the chart. So one more time, I'm going to switch back to MetaStock. There we go. And now I'm going to open up Tesla. And the indicator now applied on this chart, once it loads, just give it a second. There we go. is a 1 to 3 strike. You can see it here. This is our trend indicator. This is Tesla here on the 1 hour, on the daily time frame. You can see here that we have these bigger arrows pointing upwards in green, or these bigger arrows pointing downwards in red. These are our long and short entry signals. You can see them here and here. All right, so these are entry signals. But of course, entering into a trade is one thing. Once you're in a trade, what do you need to do? Well, you eventually need to get out of this trade. You need to manage your trade. This is why we have equipped this indicator also with exit suggestions. You can see it here for this long entry signal here for Tesla back in November 2024. We have one exit here, another exit here, one more here, and a final exit here. How many exits you want to have, this is a parameter that you can set in the indicator. Same for the short trades. This short signal here, you stay in the trade, and then the indicator will tell you, okay, this move, this trend move is weakening. Time to potentially book some profits. So we have an exit here, one here, and finally we close the trade here. And sometimes what can happen, you can see it here, we have a short entry signal, and then without having any exits, we will get an entry in the opposite direction. This is an indication to you as a trader to close down your short position and to open up a long position instead. All right. So this is how the indicator works. And of course, we have also equipped this indicator with our auto optimization technology, which will find the best settings automatically for you. You can see here the settings used for Tesla on the daily time frame. And of course, also we have implemented our win rate statistics for long trades and for short trades. Once again, allowing you to make truly informed decisions. All right, so this is Tesla. What about silver? Silver was, in the news quite a bit because, well, we've seen a sizable correction in silver a couple of weeks ago. Let me just make this a little bit more zoomed out. You can see silver was in a strong uptrend for a long time. All these entry signals coming in, and then, we had a short entry signal here in silver. And to me, for all of you out there who potentially are positioned long in silver still, maybe a bit of a warning sign that right now we do have an open sell signal in silver to the downside, potentially indicating, okay, maybe this correction in which we're in right now might continue for a bit longer. And if you look at the statistics down here, we can see, okay, for the long side, we have 66.67%, but only 14% to the short side. Well, maybe I was wrong. Yeah, my assumption, okay, maybe this is going to continue a bit longer. Maybe this was not the best one because we have only 14% win rate to the short side, but 66.67% win rate to the long side. So potentially this short entry signal could not be trusted too much. All right, so this is our trend indicator. The next indicator we're going to look at is our divergence indicator. And for this, I'm going to be opening up IBM on the daily time frame. And here we have our divergence cloud indicator applied. Now, what can we see here? Well, first off, you can see that also this indicator comes with long entry signals, these bigger upwards facing arrows, and short entry signals. And also this indicator has partial exits, this little arrows here pointing in the opposite direction. So one partial exit here, one here, and then the final exit up here. And the same for the short trades. We have the partial exits along the way. All right, so at first glance, this indicator works or looks similarly than our trend indicator. But what is different here is the logic based on which these signals are generated. Because these signals are generated not based on trend continuation, but based on the principle of divergence. So a long entry signal in that sense can only occur, for example, this one here, if we are currently bullish divergent. You can see this little greenish ribbon here, but also the candles are greenish. And a short entry signal can only happen when we are in a period of bearish divergence. That's exactly what this indicator is designed to do, to give you these early indications that currently potentially a long trend is reversing into a short trend or vice versa. You can see how this works. And of course, this indicator is also equipped with auto optimization and our win rate statistics. Another example is USO. the United States Oil Fund. Oil has been in a, or is currently in a long-term sideways channel. We can see it here. I drew these lines onto the chart where you can see that over the course of multiple years, oil has been ranging between 83 up here, this blue line up here, and around 63 down here. Up and down, up and down. We've been in this long-term sideways channel in oil. And as you can see on the chart here, divergence cloud gives you these early indications that, hey, potentially we are now once again bouncing from one extreme of the channel to the other extreme. So here for the long entry signal and a short here, long here again, a short here, this long signal did not work out, and a short signal, and so forth. So this is another use case of this indicator to find a good entries within a sideways channel, given that the channel is broad enough so we can have meaningful. Are the optimal ones and our win rate statistics here as well. All right, and perhaps one more symbol for divergence cloud here. We have Vistra. Once this opens up here, also this indicate. Also here we can see the same thing: our short entry signals, our long entry signals, and the partial exits along the way, along with the optimal parameters, which you as a trader don't really have to know what these are. What's important is that you as a trader, you have the assurance that you will always trade with optimal parameters. And of course, our win rate statistics down here. All right, so back to the slides real quick. What have we seen so far? Well, we have seen how auto optimization and win rate prediction can be used to also enhance trend trading indicators, reversal indicators, and breakout indicators. And our Power Bundle 360 is equipped with these two technologies, and the indicators in that bundle, they give you clear entry and exit signals. They will run on anything, on the daily time frame, on the minute time frame, on tick charts, for example. They run on stocks, on FX, on futures, and so forth. There's no restrictions to it. And of course, as mentioned, we have equipped our indicators with real-time statistics and auto optimization. All right, but there's one more thing. So bear with me one more issue, one more thing to be discussed: confluence. So what is this? You may have heard this term before. Confluence. Well, confluence really is just a fancy word for when the good stars align. When it comes to trading, confluence means that multiple indicators are lining up and are forecasting the same future price move. Here's an example of this. Let's check out this chart. What can we see here? Well, first off, we can see that we have a descending trend line. There's a little black line here, okay, descending trend line. We can also see that price is coming close to this bluish line here, which is the 200 SMA, which oftentimes is acting as dynamic resistance. Okay, we're coming close to resistance. We also can see that after this downwards move here, we retraced roughly towards the 61.8 FIB retracement level. All right, and down here on this oscillator down here, we can see that we are currently overbought. So what do all these four things are telling us? Well, they're telling us that we are likely to move further downwards, because these are all bearish signals. We are descending, we're on a bearish trend to begin with. The trend is your friend. So a bearish continuation of that trend is more likely than a reversal. We are coming up to resistance. We saw a 61.8 FIB retracement within that downwards move, and we're currently overbought. All these things are pointing for a further bearish move. And this is exactly what confluence means. Multiple indicators, they're all different indicators. They are forecasting the same future price move, a bearish move. This is really about stacking the odds in your favor. Now, we have developed our own confluence-based indicator called Super Signals, which is looking for confluence of our three power bundle indicators, the ones that we just discussed. And depending on how much alignment we have, different types of signals are generated. Bronze signals are the most frequent ones, and the most rare ones, which only really happen once in a blue moon, are the platinum signals. And then silver and gold are in between. So let's check it out how this works. So once again, back to the charts. All right, and let's have a look at Google. All right. Oh, sorry. Let's go to Apple. Oh, 1 second. There we go. 1 second. All right, Apple. All right. So what do we see here? Well, let me make this a little bit. Let me zoom out a little bit. Here we can see our super signals applied. And once again, we are using auto optimization and win rate statistics. So what do we see here on Apple? Well, first off, you can see, for example, here back in the day, we had a gold signal, and look at the beautiful follow through of these gold signals. So these signals are very rare. So you had one gold signal here and one more here as a gold signal with a nice follow through to the upside. Along the way, you can see it here. We had multiple bronze signals here and here and here and here. These ones are the most frequent ones, which require the least degree of confluence. And here we have a silver signal with a nice follow through afterwards. These signals are generated by looking for confluence by alignment of multiple of our power bundle indicators. So these are what we call confluence-based signals. All right. So, but there's one more thing I would like to discuss. So back to the slides one more time, because there's one last piece which will bring everything together. And this brings us also to our trade of today or for tomorrow. Because how do we actually know which symbols currently have signals? And perhaps more importantly, if you find out which symbols have signals, which of those signals are the most likely ones to result in a successful trade? These are very good questions. These are hard questions to be answered. We thought about these questions very hard and came up with a new type of scanning. You may have thought, okay, how can we find out which symbols have signals? Well, let's run a scan. That's the obvious answer. But we are trading indicators. We thought, let's try to push the envelope one more time. We developed something called Generation 3 scanning. What is this? Well, let me explain. Generation 1 scanning is what you probably have seen the most. It's basically a scan for plain old signals, basically checking, hey, which symbols right now have signals without any further qualification. All right. Generation 2 pushes the envelope already a bit. Generation 2 scans are scans which, in addition to show you which symbols have signals, they will also show you directly in your scan results what are the associated win rates with each signal, allowing you to rank and sort your signals. Imagine you have hundreds of signals when you run a scan through maybe 1,000 symbols. You perhaps get like, I don't know, 50 or maybe 100 signals. Which of those are the most likely ones to pan out? For this, you need to see what are the associated win rates. So you can rank them and sort them and focus only on the ones which have the best odds. But there's one more thing we can do. Generation 3 scanning. In addition to what Generation 2 does, it will do an auto optimization on a per symbol basis. Meaning, let's say we're scanning through the S&P 500s. The scan will use the optimal parameters for Tesla. Then we go to IBM. The scan will then use the optimal parameters, which might be very different for IBM. Then we go to Apple. Once again, the optimal parameters for Apple are then being used, further increasing the odds of having a successful trade, because now you're always dialed in. No more one size fits all. You will always use the optimal parameters on a per symbol basis. And this is exactly what I have run just before this presentation. I run a scan on 1 to 3 strike, and here are the results. So 1 to 3 strike is our trend trading indicator, and I scanned through the S&P 500s, and we can see that we had 8 symbols of signals. We only scanned through 500 symbols, so 8 of them had signals. There were some long signals. You can see this little one here under long signal. These are the long entry signals, and a couple of short entry signals here. But instead of focusing on these signals, what I did is I sorted my signals by this column here, long performance, because I wanted to trade long. The first one that comes up is this one, 82, at 82%. But this was a short signal, so it's not relevant for us. The next one on our list is this one here, Arch Capital, with 77.27% performance. And this one had a long entry signal. And I opened up this chart, and because this one had a long entry signal and the highest percentages. So let's open the chart and see how this one looks like. So I'm going to go back to MetaStock and open up this chart, ACGL.O, Arch Capital. All right, we can see indeed, if I zoom in a little bit here, indeed we do have an entry signal on the very last bar right here. And if I zoom out a little bit, we can also see, okay, this symbol is in a long-term uptrend. We've been consolidating a little bit as of late, but overall, we are in an uptrend. I always like to trade with the overarching trend instead of against it. So that's also fulfilled. And if we go to our performance statistics down here, we can see that for the long side, we have an overall efficiency of 77%, giving me confidence that this trade potentially will work out, because historically speaking, these long entry signals, at least for the bars which are on the chart right now, have worked out 77% at the time. And this is exactly why I have picked this trade as my trade for tomorrow. A long trade of Arch Capital with an entry around current market levels at 99. Target is 132. Oh, this is wrong. Sorry, let me go back to my chart here. My target will be at 115, and my stop loss will be right below the swing low here, which is a technical level at around 88. So 115 the target, 88 as my stop loss. This was a copy-paste error from a different chart before. And I picked this trade because we have a long entry signal on the last bar, and we have a high long efficiency at 77.27%. Now, you may wonder, should I consider these indicators? Let me help you with this. So, who are these indicators for? Well, first off, it doesn't really matter what kind of trader you are. You could be a day trader, a scalper, a swing trader, or perhaps a long-term investor. No worries. Our indicators could be useful to you because they work on all time frames and all chart types, period. It also doesn't matter what you trade. You could be trading stocks or FX or futures or perhaps crypto, no problem. These indicators will work on all asset classes and symbols. And if you're an engineer like me, and if you believe that good tools can make your life easier and good trading tools could make your trading life easier, then these indicators are definitely for you, because they will do all the heavy lifting for you. They will show you directly on the price chart what are the predicted odds of having a successful trade, allowing you to make truly informed trading decisions. And they will auto-optimize, meaning they will find the best parameters automatically for you, depending on the symbol and time frame you are on. So that you as a trader do not have to waste your energy of trying to understand the chart, or potentially figuring out what the win rate is, or potentially figuring out what the best settings are. This is all done automatically for you, so that you as a trader, you can focus on what really matters, which is to make that final decision of whether you want to take that trade or perhaps stay on the sideline. All right. Now, as a big thank you, and I'm really sorry for the audio problems. I'm not sure what happened. And I hope I'm still coming across fairly clearly. As a big thank you for staying on so long until almost 8 o'clock Eastern right now. We have put together a very special offer for you. Now, normally, we offer all these indicators as a bundle for you, which includes our Power Bundle 360, including of 1 to 3 strike, divergence, cloud, and volatility crusher, super signals, our confluence indicator, and super trend bullseye, all equipped with auto optimization and performance statistics. Typically, we offer this bundle for $1,997. This is for life. And we even threw in a bonus offer, which is our trend radar indicator. I'm going to talk about this in a second. But today, and for the duration of this conference, we decided to slash this price, which is already a good deal, to slash this price by 50%. And we are offering all these 3 packages for only $997. So you will get our 3 power bundle indicators, our super signals indicator, and our super trend bullseye indicator for life for only $997, including the bonus indicator trend radar. So if you want to take advantage of this offer, all you need to do is to go to tradingindicators.com/mega for this mega deal which we're offering right now. And Jeffrey, if you can, please paste this link into the chat box. Now, let me quickly talk about this bonus indicator I just mentioned, Trend Radar. So Trend Radar is one of the most useful utility indicators you can imagine, because it will show you directly underneath your price chart, this little heat map here, allowing you to see at a glance what are the current market conditions all about. Let me give you a little taste of what that indicator does. So one more time, back to MetaStock. And what I'm going to do is I'm going to go to the SPY here. 1 second. Let me just quickly go back to the S&P 500s on the daily time frame. And I'm going to apply Trend Radar to this chart. Just give me 1 second for it to load. There we go. And now I'm going to apply this Trend Radar indicator to it. It's going to apply the template here. And of course, the template will be given to you as well if you come on board. So Trend Radar, I apply it. And let's see what this indicator does. All right. So now we have the S&P 500 here on the daily time frame. And what we can see here is Trend Radar underneath. And what can we see right now about the current market conditions? Well, let's see what we are. So first off, you can see predominantly it's all green here in Trend Radar, meaning we are currently in a very bullish environment. So markets are trending upwards. You may say, of course they're trending upwards. It's obvious. All right, fine. But as a trend trader, and I mentioned this before, there are good times to enter into a trend trade and perhaps not so good times. And one not so good time, for example, would be to enter when things are extended, when prices are expensive and things are all green, for example, here on Trend Radar. This means that we are full bullish. Prices are very expensive right now. We run up a lot. What a trend trader should be considering or could be focusing on is to wait for what we call a pullback. You can see these little red patches here. These are indications of a pullback within a predominantly bullish market. And the beautiful thing is that you can scan for these pullbacks. Imagine you'll be able to scan through the S&P 500s for all the symbols which are currently in such a pullback. This is possible with MetaStock. And right now, if you look at what we are in right now, we can see that we have 1, 2, 3, 4 levels of a pullback right now in the current market conditions. Potentially an interesting or promising moment to enter long into this trend trade, anticipating that the bullish trend is going to continue. And this is exactly what Trend Radar, what this indicator down here brings to the table. And of course, this indicator will be included as the bonus offer for this mega deal at tradingindicators.com/mega. So just to repeat, this deal will include our power bundle indicators, our super sequence indicator, our super trend bullseye indicator, all equipped with auto optimization and performance statistics. And we're even going to throw in Trend Radar as a bonus offer as well. We've never, this is the cheapest that's the best deal we've ever offered for this kind of package for MetaStock. So if you're interested, check it out at tradingindicators.com/mega. Jeffrey, this brings me to the end of my presentation. I hope people could hear me. Oh my goodness, I don't know what happened with the audio.
After that last one, it was fine. So
okay.
Good job.
All right.
Tradingindicators.com/mega. I'd add that this is a limited time offer. It's good for a week. Go up there, get it. They can help you. You can also give us a call if you want. 800-882-3040. And metastock.com/sales chat. And Greg is going to put both of those in the chat for us. Daniel, big thanks for capping us off tonight. I appreciate it.
Yeah, thank you. Thanks, guys. Thank you so much. And once again, I apologize for the audio problems. Next time when I'm back, I promise you these will be fixed. Thanks, Jeffrey. Thanks for having me. Have a great evening, everyone. Bye-bye.
Thank you. All right.
Yeah.
Bye-bye. All right, let me go ahead and share my screen. And we will just wrap up today. I had a great day. I want to say thank you to all of our presenters today, including Daniel, but everybody for being part of the event. Thank you for being here all day long. For all of you that have been here all day, if you're watching the recording or if you're watching us on YouTube, make sure to like and subscribe. We have another exciting day full of presenters tomorrow. So we'll be kicking it off nice and early, 10 a.m. Eastern. Thank you again to Stocks and Commodities Magazine for sponsoring the event. If you haven't yet, join the Traders Forum. It's a great community. It's growing. You can learn about the markets. You can chat with other traders, et cetera, et cetera, et cetera. TheTradersForum.com. All of the offers that we covered today can be found at metastock.com/conf promo. Give us a call if you have any questions, 800-882-3040 or metastock.com/sales chat. Thanks for being here. We'll see you again tomorrow. Go get some rest. I appreciate it.